Good morning, everybody. Today is March 18th, 2026. What we will do on this live stream is best analyze the intraday stock market using cyclical analysis, time confirmation, fundamental analysis, technical analysis, and more to find the real direction, trend directions, and the wind directions. Time is 9:21 on the board, and the market is opening in 9 minutes. And the news we have is today is PPI day, Producer Price Index, as well as FOMC rate cut decision at 2:30 p.m., as well as the President Trump coming live at 10 in the morning for his daily.
I always love hearing your perspective going into or out of the Fed meeting. So consensus view is that we're not going to see a change on rates today. Does that line up with your expectations?
It is very important to mark the top and bottom of the PPI candle.
So they're going to hold the rate where it is, primarily because they were signaling it before the war broke out. And because of the inflation risks that are clearly front and center, it makes sense that they hold. However, the big action is going to be in the summary of economic projections. And then, of course, the
we are opening at Monday's gap
I'm expecting that they're going to lower their growth forecast for 2026 to 2.1%. You'll see a revision up in the unemployment forecast to 4.6%. And then in PCE, you'll see that lifted to 3%, and in core PCE to 2.9%. Now, with respect to the dot
so
plots,
many fucking previous
we had one rate
and CPIs in play.
Priced in,
CPIs.
prior to this meeting. I think that the dot plot will reflect that, although my sense is that if we do get a rate cut this year, it's going to be likely either in September or December, and right now I'm leaning more towards December, given the time lag of some of the shocks that we're seeing impact the economy. They're going to show up much later, and the Fed is going to be very cautious on the other side of the war.
You said if we see one rate cut there,
still
so
a quick
that's
legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor, and I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only, and I am not a financial advisor.
Commentary. You're warning about the impact of $5 diesel. I mean, consumers may need to worry about $5 gas. No one wants to hear that. How quickly do you see that feeding through to the consumer?
Okay, so the consumer is already adjusting to higher gasoline prices. We're up, I think, 82 cents since the outset of the war. From the earliest hours of the war, we attempted to say, look, now the U.S. economy is this $30 trillion dynamic and resilient beast. It can absorb a fairly large shock, and it's going to without throwing the economy into recession. But that doesn't mean you're not going to see slower growth and higher inflation. All right, so here are the numbers that you guys can use to talk to your clients, your family, friends, and at cocktail parties.
Good morning, everybody. Good morning, Zach. Good morning, Roy. Good morning, Glock. Good morning, Trey. Good morning, Scott. Good morning, Jesse. Good morning, Sherman. Good morning, BSD. Good morning, everybody in the WhatsApp group.
Right, that will translate to roughly about $4.25 on average for unleaded gas across the country. Your mileage may vary. It's going to be higher in some regions and lower in others. Okay,
good morning, Chris.
We likely see 4% inflation.
9:25 on the board.
That total cost just via the energy channel is about $425 per household. So that gives you a good sense of where we're at. We're not quite there yet. I don't think we're going to get to $5 per gallon on gasoline unless you see a much steeper climb.
They brought the market down into 9.29 or 8.29. And at
should we continue to see roughly about 12 million barrels a day not be exported out of the Middle East? Should you see the molecules that result in nitrogen fertilizers and other key petrochemical components that feed into healthcare and tech and other areas of the economy? Well, then we're going to have a different discussion. Right now, the market's clearly keyed on the duration of the war and any potential that would restart the export of oil, condensates, natural gas, and other liquids out of the Gulf.
It seems like the view is that this won't be long. It seems like the market's general view is that it's going to be what President Trump originally signaled, that a 4 to 5 week war. We are in day 19 of that. Do you think the market is underappreciating the potential for longer than that timeline?
my sense is that geopolitical risk always has been, is, and always will be the Achilles heel of forward-looking financial markets. So yeah, we're really underestimating just how long this could go. My real concern here.
I love that emoji. Good morning, everybody. Market is opening in 6 minutes. 668, 602. We have a gap from yesterday, and we have a gap from Monday. We are in between Monday and Tuesday's gap right now, right in the middle. Q, Q, Q. See how market opens here in 3 minutes. Good morning, everybody. It's insane overnight, honestly. I don't think anybody in the world expected this shit to go up the way it did, this high, and then came all the way fucking back down with Asia. MU went up crazy overnight too, all the way to the fucking top. I don't think anybody expected this. The bulls are saying, what the fuck? The bears are saying, what now? And they're like, what the fuck too? Like everyone's like, what the fuck? This shit is moving very, very hard overnight. I'm using the gaps. CPI or PPI candle too. 832. Newest CPI candle in play on Nvidia as well. I basically marked the 930 to 932 candle. For me, that's PPI and CPI. Today is a data structured day, as well as a FOMC rate cut decision at 2:30. And the president is coming live in 30 minutes, so there's going to be a lot of news coming out today, and a lot of things happening today. Wow, SOXL pushed up to 57, is at 55 for the day. I have one single put expiring until next Friday on SOXL at 54, and it's just been getting a little bit crushed yesterday, but I think it's just going to open kind of dog shit anyway. Let's see how the market handles here. Market opening in 4 seconds. Here we go. Every time, 30 seconds before market opens, my heart has a little bit of a move. I can feel it. The way it fucking pumps my heart. I could feel it. Market is opening in 10, 5, 4, 3, 2, 1. Ding, 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 ding. Market is open. Ding, 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 ding. Trading session is opened. Rest in peace, my MU put. I have one into the fucking closest fuck expiry this Friday. Down 45% on it from $1,100. That shit was at 1.5K into fucking Monday close. Rest in peace. Nvidia at 181.95 here. Q's opening at the previous CPI. 180.28. Gap. Nvidia trying to gap fill. SPX has opened up below the gap from yesterday, below the gap from Monday. God did. Nvidia 43% up on all my fucking puts now. My big ass fucking contract, 187.5, worth $4,500 now. I'm up $1,500 up on it right now. I'm leaving 30% right now. I left 2 contracts right now. 7.6, $1,520. If this bitch filled. I have 4 contracts left for 1,000. Fuck am I saying? I have 4 contracts left for 187.5 Nvidia, and I have 1 contract for 185 Nvidia. I have 1 SOXL 54 into next Friday, and my MU into tomorrow's cooked. My 1 single MU put. Nvidia is very close to the gap. This shit did not gap fill, but this is as close as it could get to the gap for now. QQQ did not go lower. SPY is not going lower. There is an LOD and a HOD at 9:30, and they're breaking the HOD into 9:30 trying. Time is 9:35 and 15 seconds here. SPY and QQQ not that bearish. Nvidia bearish. Nvidia going lower. Crazy work. God did. I'm gonna slowly leave Nvidia right here, candle by candle. I'm gonna leave 1 contract right now again for $760. I'm scared as fuck. 7.7 Nvidia filled 1 contract. 187.5 expiring next week Wednesday. All my contracts on Nvidia are expiring into next Monday and Wednesday. God did. I got a God entry at 189. God did. God entry. This is fucking great. Wind direction is mixed on SPY and QQQ right now. Nvidia is the only thing south. I'm leaving 185 Nvidia Monday expiry right now for $530. Filled. All I have left on Nvidia is 187.5 worth 2.3K. Crazy work. Should I take a fucking MU put? Fuck. I low-key wanna fucking take a risk. A tiny ass 1.5K MU put maybe? Well, how much is this shit right now? March 20th. It's still fucking $2,000? What the fuck? 455? Mmm. 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 Fuck. Damn. I'm not gonna go in. Fuck. I don't know if I should. Fuck. 0% for the day. I'm mute. MU's kind of scary. I haven't done shit on MU. I'm scared. I'm just gonna watch Nvidia. I'm a little bit scared. Time is 9:35. I'm gonna see how Nvidia does right here. I decreased my size on Nvidia, so Let's see. I've been in for 2 days now. I've literally been in for 2 days. I never left yesterday. I never left yesterday. Oh, I did leave yesterday, but I kind of re-entered and shit. But like, it was like I kind of increased my position low key. It was like a little bit more worth, like maybe a couple $100 more than what it was the day before. All right, 935 bouncing on Nvidia now. All right, this shit can morning cycle too. It was bearish from 930 into 935, 933. 935 is deciding what to do. This is the low from 2 days ago, like Monday or something. This white line is Tuesday and this yellow line is Monday. We'll see how it evaluates yesterday and Monday's floor here on SPY. Or sorry, on Nvidia. There's now an HOD divergence on QQQ. The bulls are in fucking control from the floor. This is sad as shit. 1 minute MACD is going up. The only thing went down in the morning was kind of Nvidia. SPY opened up just way down south, and then now there's so many gaps. There's a fucking gap from Friday. There's a gap from Monday. There's a gap from Tuesday. Low key, this is bullish shrine. They could test the CPI or PPI candle easily in the morning, but they could not as well, and they could fucking test it tomorrow. Or not tomorrow, later in the day, in like an hour. What am I fucking saying? What am I fucking saying? Why is VWAPs right here? So they went pre-market bearish, and then now off the pre-market into morning open, they're trying to show bullish. So I wouldn't say it's completely bullish right now, but I would say bulls are trying off of market open on SPY from 930 into 935, 940, with the MACD and volume, with two gaps above. PPI there too, but there's a but factor. It's the only thing I would say. 930 algo range as well. So let's draw the algo range that is happening on SPY here at 930. Alright, low-key, you know what? You know what's crazy? I'm gonna be real. This is what I thought overnight for myself on Nvidia. I thought they were gonna cook me. I, I, I won't lie. I genuinely thought they were gonna open up here. I genuinely thought Nvidia was gonna do some stupid ass shit at 183 and boop, and then bear trap everything here and do some stupid shit. So I genuinely thought I was gonna get trapped overnight. When I woke up at like 7 and I was watching the market, from 8 to 8:20 and 8:30, and I was like, bro, what the fuck is this? Like, they just lost $4. The entire thing they were holding up overnight into PPI, and then they did that into PPI, so it was completely different. But yeah, yesterday night at like 11:12, MU was in the stars. MU was up there. So I do not doubt how crazy the shit looked overnight, and I do not doubt how crazy today is about to be. With the way PPI came in today, with the way FOMC is set up, with the way the president is coming live at 10, with the way all things are pointed, with the way they did the last 3 days. Because if you really look, there's a lot of bears trapped. There's a lot of fucking bulls trapped. Everybody's technically trapped in the higher time frame, but now there's liquidity built here. There's liquidity built here. There's liquidity built here. And now we have FOMC presidential live stream. Everything coming. We have after 4 MU earnings. So that's that too. And today is literally not a joke. Today, I believe, is my personal opinion, that they're gonna fuck the candle traders somehow to the max. Max. I'm not even fucking talking about the bullshit we saw overnight. I'm not talking about yesterday. I'm not talking about the day before that. I'm talking about today. I feel like, in my personal opinion, because of the way so much shit is set up in time and 10, and then they like 2:30 and blah blah blah, and like between 10 and 2, right? What is there? 12. By 12, people are gonna be speculating fucking crazy up and down. That's my personal belief for the day. That's what I'm gonna say. I don't give a fuck what what really happens short term, but that's just what I'm gonna think. Right? That's just what I'm gonna think. PPI candle is trying to test at morning. MACD is looking so perfect north. That's crazy. Look at this fucking line from free market. Like, oh my god. That's just what I believe. And we'll see today. The last couple of days, though, they've been trapped in very, very not one-sidedly in the morning. So we'll see if today traps very, very one-sided or not off of market open. Meaning they bear trap off the shit and range up higher and somehow play and play and play, or they chop, figure out how to do what to do like they've been doing for the last 2 days. We shall see. I think they're gonna fucking somehow confuse both sides. Even if PPI candle tests like how it is right here. Have my eyes open. During morning. No cycle confirmation rejection at the top of the algo range. Alright. Cycle is happening. The rejection of 942 into 945. There's no cycle confirmation rejection. They're just creating a cycle. Alright. Technically speaking, this is like massive hedge fund seeing if it rejects at the algo range, and if it does for 1 or 2 minutes, they decide what to do after they holy shit. Okay. Alright, this is what I mean by they're trying to. God damn. God damn. Like PPI candle touch on Nvidia, they did not touch it on fucking SPY. I literally said this is the reason why it's a little bit not bullish or bearish, technically speaking, at the top of the 3/3, but are they trying to show bearish off this shit now? I would say there has to be a cycle, but this is what it kind of did. MACD turning bearish, and bulls are being trapped. Bull trap, bull trap, bull trap. They may break the floor and then decide if they want to go back up again. Bull trap, bull trap. Time is 9:45. The candle already coming in thick though, but this thing could be 9:40 into 9:45, and 9:45 bounce somewhere here into 9:50 and decide what to do too. So this shit could be literally 1 or 2 fucking minute candles and then bounce or not, or it could bounce right here. This is bull trap and a bear trap, and it's fucked in the algo range. Morning cycle. Wind direction is not clear off of morning open yet, showing at least. I'm trying to make it hard. QQQ at the 0.5 fib inside the morning algo range. This shit is not full on bearish. I just said it could break the floor because the candle was moving super fast. It could technically be like 55.45 right now. And a candle not showing bearish on Nvidia. I don't know. I want to say bearish, but it's not up to me. This is morning cycles moving super fucking fast. 9:45 bouncing into 9:50, and we'll find out in 50 seconds here. Algo range touch top 9:45 and 9:45 now, and there's triple algo range here. It looks like if they reject, if they go higher into 9:50, not really. Time is 9:50 and 21 seconds. Algo range is up here now, not that little one. Wow. Algo range is getting higher and higher and higher. And 9:50 is here in 1 second. Alright, they're trapping the bears now. That's fucked. Oh my god. I can't even follow these fucking candles. This is literally one single cycle, no single confirmation cycle, big red candle, and 1, 2 red candle. They leave and fucking trap everything anyway. And it just looks bullish because of candle. It's fucked. That is fucked. Look at how they did 940 into 945, and there's no cycle confirmation except algo range, and they bounce it at the algo range into 950 anyway, or 945, and 945 is higher than 950 for now. Let's see if there's a HOD and a LOD divergence. HOD divergence cleared into 9:45 a.m. LOD divergence doesn't exist. There is no LOD or HOD divergence. Just market is wild. Just the market is wild. Zero DT is expiring on Nvidia today. The zero DTs. This is the market that I know. Extension 3/3. This is literally the market that I know. Pure evil. I would not be surprised if they bull trap after they bear trapped 5 fucking minutes before. Or they're showing bearish right now to go touch that PPI candle. That's a huge possibility, to be honest, too. But it could not happen right now. That's the thing. It's truly 50-50 still. I really want to reload into Nvidia. Fuck. I don't even know what fucking expiration though. Fuck me. Ay, ay, ay. God damn. I'm going into Nvidia right now. So much FOMO. I'm in Nvidia 182.5 for 1.9k right now again. And I have the other contracts still. So much FOMO. I'm leaving this shit today. So much FOMO, I can't. Fuck. I'm in the video for $4,000 again after I left fucking $4,000. Holy shit. That's fucked. What am I doing? Fuck. FOMC isn't even here. Fucking President Trump's coming live in 10 minutes. Oh my god, what am I doing? I'm actually candle FOMOing right now so fucking hard. This is actually fucking so scary. Can I get a fucking godly exit though? Fuck, please. I just FOMOed into that fucking candle. This is not good. I should have entered a minute before if I was truly bearish, but I just FOMOed into that candle, I'm not gonna lie. Market order too, as they were going down. Fuck. Oh, hell nah. Hell nah. I'm up nice today, but I mean still, I don't wanna fucking get a shit entry, fuck. Hell nah.
Time now for Options Corner. Joining us to take a deeper look at the chart is Rick Ducat, lead market technician. All right, Rick, we just talked about year to date, but year over year is another skyrocket there. Talk us through the trends you noticed in this chart.
Yes, extremely strong performance in this kind of storage subsector of the semiconductor space. You can see Micron in red, almost 354%.
Oh, hell no.
Year
The
versus
PPI
the
candle
SMH
Nvidia.
ETF here, up about 76% in purple. So vast outperformance once again. And you can see that the gains are all across the storage sector. This is Micron, Seagate, Western Digital, SanDisk here, far outpacing everything else in this sector here, which is already quite strong, relatively speaking. So an interesting setup here for Micron as we approach this earnings event here. They already had some kind of positive news this week about expanding their production capacity at their facility in Taiwan. So that news gave us a bump the other day. This small gap formed here. Then yesterday, we took out our previous intraday highs that came in near 455.50. So we hit 462.73 yesterday. So now this kind of area here,
178 Nvidia today.
becomes a supportive area potentially to watch out for. Earnings could be a big major catalyst for change here, but oftentimes you find that old support becomes new resistance, vice versa. In this case, old resistance becoming
179
new support for an
Nvidia
area
today.
to watch
Let's get
out
it
for.
done.
Our recent activity bouncing back and forth in a range between about 364 to the lower end, 438 to the upper end. So we can see that our downward sloping trend line has also been broken as well. So now when we look at our moving averages, our 5-day weekly EMA in dark blue has started to outpace its slower moving counterparts once again. They're starting to diverge farther apart from each other. That comes in near 434,
bullshit,
435 at this point could be a short-term boundary to watch out for.
Yo.
RSI broke above the 50 midline, broke above its own trend line here. So what the bulls would really want to see would be for the RSI to push into that overbought area. At the same time, price is having another breakout here. So when we look at our volume profile study, the heavy trading concentration area nearest to current prices, 375 to about 425 roughly. That's the area that really stands out here. That's the area the bulls would be looking for a foothold if things do start to dissipate after earnings.
It's not even bear trapping.
All right, so let's get into it. How would you approach an example, especially with earnings in front of us?
Right, so when we look at this one, we were thinking about the April 17th expiration, our yellow box here, plus or minus 17.4%.
President Trump is coming live. Let's get it done. The Bears have the advantage right now, but They could be doing some bullshit to fucking nuke it up the PPI somehow. Candle coming in bearish on. SPY. It says the president was gonna go live at 10, but I don't see any news lives. Do you guys see anything? It says President Trump 10 a.m. live. For intelligence briefing. Three-third cycle. Time is 10 a.m. And the bulls are trying so hard on the video right now. What the fuck? It's insane. Spike candle of the morning testing. This shit is so sad to see Nvidia at 182 fucking again. Like, mentally it's making me think 183, 184 fucking again this week. Oh god, it's so fucking close. Jesus Christ. Damn. Bear trap at 10 on SPY. Nvidia really doing it. One single fucking candle on SPY. Back to the 0.5 fib of this entire downward move cycle. Insane chop at morning open. Insane chop at morning open. Da 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 da. Life's a movie, cannot essay. Life's a movie, cannot. Goddamn. Let's see if there is a divergence at the roof. No. PPI candle touched on QQQ. That's important to see. But we are on the CPI candle from the previous. SPY never reached. SPY never reached the PPI candle bottom. It's so crazy. Maybe I might be counting the wrong candle right now, to be honest. You know, that's maybe a possibility as well. You know, it might be this or it might be this, 932. I don't even know. It might be this or it might be this. I don't even know. I'm not sure. I could not say. This is a weird fucking. It's not clear. This is 935. 932. So I'm gonna leave it like this. I would like to think that the thing touched. Why? Because Nvidia touched. QQQ touched. SPY. I would like to think it touched. So I'm gonna count 930 to 932. I think I counted 930 to 931, but most of the days it would be 930 to 932. It's just today the 935 candle a little bit looking different. A little bit looking different today. 3 gaps. 1, 2, 3. Chris said PPI dropped an hour earlier than usual today. I don't know what you mean by that. PPI only comes out at 8:30 in the morning, so I'm not sure what you mean by that. Bears are here. I think the bears are wanting this shit to flush. And just fucking fuck the 2 gaps up top and just go flush and go fucking fill the gap, but I don't know what you mean by that, Chris. PPI dropped an hour earlier than usual. This was not a PPI drop. This is into PPI. But yeah. Just because the candles went down does not mean PPI happened a little bit before. It just means they went down there before PPI happened from being up top. Chris said 6:30 it came out. I doubt that. Why would you say that? Bears are here. They're testing the floor. Yeah, PPI is released every single day at 8:30 in the morning. Just because you want it to be a little bit earlier doesn't mean it changes for this day. Sorry to say, but it seems like that's the problem. PPI always comes out 8:30 in the morning. CPI always comes out 8:30 in the morning. People are just confused by this pre-market drop. That's all it is. They're just FOMO, scared. They're all just confused. Set up. $10.05. Yeah, I'm not gonna sit here and argue about the same thing over and over and over again, and people are leaving on that, so we're gonna move on. A lot of people talking about fucking Lulu online, bro.
Senior markets correspondent right away to help set up the action today. All right, KG, as we kick off today, I wonder if this is going to be kind of a tug of war between oil and a headline-driven market versus the Fed. Your thoughts?
Yeah, I would agree with that. Obviously, we're going to be focusing on the oil markets until we lead up to the Federal Reserve announcement. Obviously, we are not pricing in any type of rate cuts here today, but we will get an updated summary of economic projections. What the market's really going to be looking for is that the economic projections are going to be, for the most part, or hopefully for the most part, similar to what we saw for the last print. If we do see a massive adjustment, especially to the downside when it comes to economic growth, that can create a little bit of volatility within the market. But I think the geopolitical risk is still going to be paramount, at least for today. Now, we also will get some commentary from Jerome Powell. That's going to be a very interesting situation because we know that his chairmanship is going to be coming up here soon, maybe. And
I feel like the president's coming on.
A policy path that's going to be put out there that's going to be very long term or even somewhat normal to what we are used to, a 3 to 6 month policy outlook. And maybe he's going to shorten that up here a tad bit in order for us to, in order for the next chairman to really kind of set the stage here. So it's going to be an interesting event, but I think the oil markets as well as the geopolitical risk is still going to be paramount. I mean, if you look at what's going on this morning, we actually saw oil move to the downside if you're looking at WTI, and that's because Iraq stated that they are actually going to restart and improve production levels here over the next couple of days, up to around 250,000 barrels per day. But over the last 20 minutes or so, we have also seen the South Pars gas field facility in Iraq or in Iran,
he is live right now.
There, getting hit
he
as
is
well.
Live right
and that's also
now.
Over 1,000 missiles shot at it, knocked them almost all down. On the very first day I came down the escalator in 2015, I said, quote, I will stop Iran from getting nuclear weapons, and all I'm doing is keeping my promise. Think of that. That was in 2015. I said it. It was a threat then and a much bigger threat now, but no longer a threat, not for a long time anyway. We want to keep it that way. As we continue Operation Epic Fury, we're also focused on keeping energy and oil flowing to the world, and I will not allow a terrorist regime to hold the world hostage and attempt to stop the globe's oil supply. And if Iran does anything to do that, they'll get hit at a much, much harder level. I will take out those targets that were easy and that I mentioned just before. We'll take them out so quickly.
What's real
they'll
news?
never be able
What's
to recover
fake news
ever.
These days? Like, it's
if
so
they want to play that
hard
game,
to tell.
they better not play that game. In the long run, oil supplies will be dramatically more secure without the threat of Iranian ships, drones, missiles, nuclear menace, or anything. So the Strait of Hormuz is going to remain safe. We have a lot of
fake ass fucking news. This is crazy. It's a counter trend on the video for now. Very decent. Damn, they cooked my MU. That's so sad. Can earnings bring it down to 430? I don't fucking know. That shit is so sad. MU. Fuck you. FUMU. I've never seen something cooked more harder in my life, and I feel like I said this shit on the video and Palantir and Tesla when I was in it in my life, but it's the most disgusting shit I've ever fucking seen in my fucking career. MU. Yo, this candle, I'm gonna say the LOD is gonna break at one point fucking today. That's all I'm gonna say. And then they can come back up to the PPI candle bottom if they want. I've seen this shit happen too many fucking thousands of times for me to fucking say I don't think that's gonna not happen. But Nvidia at the fucking roof too. I'm not gonna lie, dude. You know what's crazy? I'm in for Nvidia right now. My shit expiring March 27th. It's out fucking 11 days. And 182 to 180, 183 did like 15%. So, alright, bears are here. Bears are here. Bearish, bearish, bearish. 2/3 into 3/3. Bearish, bearish, bearish. LOD testing. LOD breaking. Bearish, bearish, bearish. Bears are in control. We have 96 people here. God bless you all. Please smack the like button. I said today. It's gonna come in fucking crazy, right? No direction, very, very confusing direction deciding into some time, right? They did that. They did that. God did. I'm telling you, I said this shit before the goddamn thing happened today. I said this shit before because yesterday, up and down decision, up and down decision. I said this shit before. Bearish. Dump it! Dump in the video! Come on, the video! Fuck! I feel like I'm playing crapsless fucking craps at Atlantic City right now. Fuck! I don't want to roll a 7. All I know is a motherfucking god roll. All I know is a motherfucking god roll. I don't know a 7. I don't know a 7, boy. Bears are strong. LOD broke. And there's a divergence at the floor. Bears are in control. They trapped the shit out of the bulls again. Someone could argue the bears could get trapped right here too, but I mean for now the bulls got trapped at the fucking top. 945 PPI candle bottom. That I'm pretty sure that's the fucking PPI candle. That's not a coincidence. What the fuck candle is that? Candle traders looking at the candle and they're like, what the fuck? I literally said today, candle traders are fucking done probably. And this is what I fucking mean. This is what I fucking mean. They could do fucking art class 4, you know what I'm saying? But I don't give a fuck. I care about the real direction. Real direction is motherfucking bears! Bears are in control. They're breaking the floor. 667. The real direction is the motherfucking bears! Alright, off the PPI candle, rejection. LOD broken, one fucking candle. They're gone. 10-15. 10-15. They're gone. LOD divergence cleared at the floor. Bears are in control. 1/3, 2/3, 3/3 from 945. 1/3, 2/3, 3/3 from 945. Cycle confirmation. Everything. PPI candle. Crazy. 10-15. And this is what I meant by they're gonna fucking candle get him. They're fucking done. Candle. Done. Candle. Fucking traders are done, hypothetically speaking. I say this shit every day. Is this a new thing? Not really. Not really. Happens every fucking day. Gotta get the emotions fucking cooking. All I'm doing is fucking being patient, and when the real direction comes, the momentum there. This shit is still south. I'm still shorted. I joined 1 minute ago. We can bounce this bitch. I'll just hold it. I don't give a fuck. I don't give a fuck. Higher time frame MACD bearish. Damn, these Nvidia moves. They Moving like fucking Robin Hood and Batman. Fast as fuck, boy. One more range down on SPY, I'm leaving. I don't think they're gonna gap fill up top for some reason now, right now. Possibly show lower, then come back up, try later after a cycle or two. Confirmation. They could be building the cycle confirmation right here too, right now, but I don't see one yet. Maybe Nvidia, the one that's most at risk to revert back up, but what if they rip this shit down into FOMC? Possibility. The T1000 is still here. It's looking for John Connor's ass to whack, hypothetically speaking. The Terminator is still here.
Welcome back to Market on Close. I'm Sam Bartis on the floor of the New York Stock Exchange. Let's talk all things Nvidia with our next guest, Shai Balor, who's the Chief Market Strategist over at Future. Shai, always nice to see you. Thanks so much for joining the program today. I want to talk about visibility, because throughout the course of this earnings season, you heard from Broadcom, which was locking in memory to 2027. You heard from Marvell, which managed to show that it's going to
trading
see
at the
revenue
bottom of
growth
the
of
3/3
30% in
LOD
fiscal
testing.
2027. Both of those stocks have been rewarded post-earnings. Yesterday, Nvidia seemingly gave us some visibility into 2027, $1 trillion. Why is there so much hesitation with this name?
Yeah, I mean, I think that it's tricky because Nvidia right now is clearly telling you that they're not selling a chip anymore. They are planning on owning the entire AI factory from training to inference and networking to robotics. And Vera Rubin's the clearest proof of how the new architecture is going to look like, where every dollar and every watt a customer spends produces meaningful intelligence. And that's essentially the new currency of the new AI build-out. But at trading at around 22 times earnings,
right?
And the revelation of what Grok revealed to the audience yesterday,
and they're gone.
I think it was also NVIDIA admitting that being a GPU alone won't be enough, that there kind of has to be a more full answer in the new era of
this is why I didn't want to
inference, and that's
new
essentially
people
market
into
hearing
the
both
WhatsApp
sides
group yesterday and the day
the
before.
pros and cons, because the pro was for NVIDIA's bull case past couple of years, training. If you're the best, we're going to go with you, because essentially everyone else systems aren't even close to amount of ability that we can get through NVIDIA. So it was like kind of a win-all approach, where inference is kind of much more of a leader take most, with the second tier being much grander. So I think this is partly why the stock is stuck around 25 times earnings, because we just don't know what the new AI economy is going to look like in this inference era, with the hyperscalers creating their own custom silicon chips. We got AMD becoming a real second source. And in the inference age, you just have to be good enough, and you just don't know if NVIDIA's dominance will maintain that market share.
Yeah, it's interesting because I kind of made that analogy, which I heard on the floor earlier today when I was speaking to Nicole Petalides at the top of the show. The way that it was framed was like it's your favorite sports star, and you know they're expected to make a number of home runs or kick a number of goals this year, but it's just not the kind of numbers that we're used to from that particular player. It feels like Nvidia is that person. I'm just wondering what they have to do to really like knock it out of the park then.
I actually don't believe it's anything controllable on their end. I think right now we universally agree that enterprises will deploy AI at a rapid pace. The demand is there. I think on the consumer front, there's still a variability. So I do believe that in order for NVIDIA to get that next leg of growth, the consumer products need to start becoming heading to the finish line of mass adoption. I think right now we're all using the AI products as a consumer chatbot, but in order for NVIDIA to really catch that next leg, there needs to be some kind of like innovation front of a ChatGPT moment for this new era. And I don't know if we're there yet. And that's part A. Part B is there is a negative macro feedback loop right now on AI that's really anchoring the stock, because
7 put right here.
AI is clearly super bullish for compute, but it's not automatically bullish for the economy that has to fund that compute. So it's almost, you're getting the bullish AI demand signs, but it feels like there is a balance, yin yang, where the more bullish this is, the more negative this is for society. So if you have all this build out, will we actually have people buying these products? And that's a variable that it's still too early to tell.
I want to pick on part A. And my question to that is, have we, or the market, rewarded these stocks way more than the benefit that we are seeing in our everyday life so far? And then would it be a reset that we're seeing right now?
I think it's less of a reset, but more of a digestion. I think that right now we clearly are building up these data centers at a rapid pace. We want to see that maintaining, as well as what the actual return on the investment will be for those data centers. And we won't know that until time gives us that solution. And I think right now, at the rapid pace of innovation on AI the last 2 years, we're in that awkward middle part of the S curve.
Even if they go to 666.8, that's nice.
And that's why when you have the anchor of the whole AI ecosystem, NVIDIA just not moving for 6 months. People view that as a negative thing, but maybe it's just more of a digestion before the next leg. And the next leg could be, honestly, physical AI. A lot of the commentary of this year has been physical AI. You heard it yesterday. You heard it at CES. So maybe this is just NVIDIA hibernating before that next explosive leg. And I do believe that before the end of this AI cycle, NVIDIA will hit that $10 trillion mark as the first company to ever hit that mark. But it's going to take some periods of digestion, and we're just in that right now.
Okay, and just on that macro feedback loop, I think that's really interesting as to, you know, how maybe AI is extremely bullish, but not so much an economy that wants to fund the computer right now. Just talk us through that. Unpack that thought for us a little bit more, because this is an economy where we are very much seeing a huge amount of opportunity in some of the shovels as well this.
Yeah, it's a tricky paradox that Jensen's maneuvering in right now, because clearly the compute, but the labor cost savings,
$200.
if they don't get reinvested into that growth for that compute and the real economy underneath.
Let's go! Market order!
We are seeing a weakening sign in the labor market this year alone. The willingness to sustain this level of CapEx intensity eventually gets tested. So
one more range lower! Yes, sir, baby!
By the hyperscalers.
Yes, sir,
and
baby!
What happens to
oh my fuck!
These
Look at the pre-market. They're fucking bearish. Pre-market bearish.
Nobody really knows the durability of this AI cycle. We believe it's substantial. It's going to be years and years and years, but it's still too soon to tell. We've never been experiencing this much of a revolution before, like we are revolution. So I think the market is not really fighting the greatness of this company. It's just
two fucking candles. They done did it, folks.
And again, time is a solution for that.
This was my deduction. That's something fucked up going to happen today.
Yeah, the paradox. I love that characterization. It's like the chicken or the egg, because that $700 billion in CapEx is expected to be extremely stimulative. But then, you know, you've obviously sort of given the counter argument for that as well.
That shit popped up so fast. Oh my god.
Shai Balor there from Futurum.
Yo, nah, look at that humongous candle. Look at that fucking humongous candle. Oh my god. I love today. Gotta love today. Gotta love life. Oh my god. GG's. Ay, ay, ay. They thought this shit was a fucking one and done type of day. Fuck out of here every day. Every fucking day. Oh my god. God did. God did. Bears are in control. QQQ broke pre-market low. SPY broke pre-market low. Look at Bears are in fucking control. They did not gap fill. They did not gap fill. Ay, ay, ay. Holy fuck. Holy fuck. $10.30. MACD was a little bit oversold, and that's why I didn't fucking do huge, but 0DT just moved fucking crazy. Oh my god. Oh my god. That is literally almost the second biggest candle. That itself is the biggest candle of the day. 10.10 10.30. Started at 9:45. Cycle confirmation at 10. Let go of the PPI candle. It lost, and now it wants to decide if it wants to come back from the bottom where it lost the PPI candle or not yet. I've seen this shit happen too many fucking times in my life. Oh my god. PPI, CPI days are great. Great.
Rebuilding and recovering from the Hormuz shock will be enormous and underscores the regime change towards physical assets. Jeff joins us now for more. Jeff, welcome to the program. It's always good to catch up with you, sir. Fluid environment, so allow me to go through the headline of the last 5 or 10 minutes or so. One headline, one report coming from Iran that their energy assets have been struck. Now, I have limited information beyond that, but Jeff, from your standpoint, in the week since we last spoke, has this got worse or better?
Great.
Worse. I like to call it molecular contagion. You know, last week we were talking about shortages in Singapore. You know, prices of jet fuel spiked to $230 a barrel. This week, you know, it's in Rotterdam. Rotterdam's $220 a barrel. Thailand, Philippines, New Zealand, Australia. So this thing's going intercontinental. And then, you know, so you look at Singapore, Rotterdam, the spread, there's no more price spread, there's no more spare barrels, there's no policy fix, and it's just physics at this point. And I want to emphasize, these are physical supply chains, and that the idea of around financialization and the ability to print money doesn't apply here. And I think the title of that piece says it all. You can't print molecules.
Jeff, with that in mind, where and how do you think we're underpricing this risk still in financial markets?
That's the peculiar thing about this, is that you look at the paper markets, they've entirely disconnected from the physical markets. Crude oil on an Oman basis, on the other side of the strait, the side that's free, spiked to $173 a barrel yesterday. Crude delivered in Asia is a blend of Dubai and Oman, which is trading somewhere around 130 and 170. And today, this morning, they're call it 120 to 150. So you're delivering crude into Asia at somewhere around $130 a barrel. Product prices are spiraling above $200 a barrel. So the disconnect is between the paper market, which is sitting around 100, and the physical market, which is showing a very different environment.
Jeff, some people have speculated that's because of certain types of manipulation in the futures market, and that's the reason why you have seen this gap blow out. Do you think there's credence to that?
You could argue that Monday last week, there was a mysterious 11 million barrel seller. I don't want to get into that. It's not enough to really change the dynamic. I think that the bigger factor that was likely driving WTI and Brent and staying lower is the price of Urals, Russian crude oil. It's rallied $65, $70 a barrel once they took off the sanctions. So WTI and Brent were the high-cost barrels. The Russian was
People
the cheap.
be married
what
to the
happened?
candles.
You closed that gap.
That's all it is.
And now that you've closed that gap, you don't have any more spare barrels in the system, and this rest of the complex likely to start to rally. I go back to the point that John started with is, we're dealing with an enormous supply shock. By the way, the supply shock is almost equal to the demand shock during COVID.
Crazy
and we know what that did to global supply chains. So I think at $100 a barrel, this thing's mispriced, even against the physical market.
There is a sense, though, that this time is a bit different than, say, the 1970s in terms of the world's reliance on oil, especially China, how much they've diversified to electric vehicles, to nuclear energy, and other places as well. How much do you think that that is going to be the growing trend, to diversify the sources of energy in myriad ways beyond what we were doing, even during the so-called Green Revolution, as people try to avoid these types of shocks?
Well, I absolutely argue that the renewables, nuclear power, are born out of the 1973 energy crisis, and this is going to unleash an enormous amount of investment into renewables, nuclear power, and other localized energy sources. The problem, though, is we call this the new dual order. The problem is that we haven't got to that transition where we have electrified everything, localized it. And the type of oil consumption that's left in the global economy is critical. And so if you pull those barrels out of the system, the rippling effect or the cascading effect through global supply chains is going to be significant. You go from gas to urea, urea to fertilizers, fertilizers to the dinner table. Or you go from LPGs to synthetic fibers to cotton. You switch out of soybeans and corn into cotton. By the way, I think the best sector to try to get value in right now would be agriculture, because it hasn't priced it in.
Jeff, when it comes to barrels coming off the market, this came from an industry consultant in terms of China. They're looking at potentially a drawdown in commercial and operational stockpiles amounting to as much as 1 million barrels a day. That can happen over the next 4 to 6 weeks. What would that mean for the price of crude?
I think the key point is once you exhaust those inventories, there's nothing left. Think about it this way. You have demand up here, supply down here. Once those inventories are exhausted, boom, you have to bring demand down in line with supply. And to do that, you're going to need prices far higher than where we are right now. I like to do the mirror image of COVID. Let's go back to COVID. It was the exact opposite. You had a situation in which you had demand up here, and excuse the other way. You had supply up here and demand down here. And so what happened? The demand collapsed. Eventually, you filled all the inventory capacity in the world, and you had to bring supply down and demand immediately. What did that require? A minus $37 a barrel price to create that rebalancing of supply and demand. Now we have the exact opposite environment. So just imagine what it's going to do to require that reduction in demand to bring it in line with supply if it took a minus $37 price to create that rebalancing back in 2020.
So, Jeff, I'm going to ask you the question. What would it take? What's the opposite?
I'm going to stick to the same answer I gave you last week.
What does it mean
to deduce? Buckle your seatbelt and hang on for the ride.
To arrive at a fact or
we'll know when we start to get to that point where the system starts rebalancing. But I want to emphasize, don't underestimate the type of volatility.
Statistical reasoning.
If you take European gas in 2022.
Set up cycle reasoning,
we saw
time confirmation reasoning, not
by the way, the market
bullshitting.
ignored it in June of 2022. By August and September, you were at $300-400 a barrel. Do you know where prices were in December of that year after you destroyed so much demand? They went negative. So I'm not going to say oil's going negative, but what I'm trying to tell you is it's going to be a really bumpy ride. You've seen no evidence of demand destruction that rebalance this market yet. So we haven't even really started the rebalancing process
That's what I believed in my life.
So the upside here, I would argue, is substantial. Again, we want to be long. And
this is why I genuinely do what I do. This is why I genuinely believe in what I do. This is why I do okay.
I think you're picking up pennies in front of the steamroller right now.
Jeff, we buckled up. That's why we have you on again this week. Can you give us a range of how high the prices could go? I know you don't want to give us an exact definition of where you think Brent oil is going to hit, but give us a range of when you say get long. I mean, how long are we talking?
But look at Oman's already traded at $173 a barrel. Jet fuel in Rotterdam is $220 a barrel. In Singapore, it was $230 a barrel. And we haven't started the rebalancing process. All we have seen is what happened places like Thailand and China hit export bans that then creates ripple-on effects and shortages. Then you have the hoarding that begins to take place. You're $8 a gallon gasoline in Los Angeles right now. So, you know, the upside here, again, I don't want to speculate on how high, but you've already witnessed something like 173 in the physical market. So that's my point here. There's a massive disconnect between the physical world and the paper world, and the paper world includes the financial world. You know, I like to point out it was in January of 2020 when COVID hit. I remember I was looking at the what was going on in China. It was the second largest economy in the world just shut down.
In the past. It happened
Stock
in the 1930s.
Market rallies, oil is hanging in there, not selling off. And I'm going, guys, we got to get short this thing. You can't hit the global economy with a shock of that magnitude and not expect bad things to happen. And we have the exact mirror image of the same similar size shock hitting the world right now. And the market on the paper and financial side is not keen off the signals that it's providing at this point in time.
So Jeff, at some point it gets real for the market. And with COVID, it was when the northern Italian cities started to shut down. There was a sense that this was getting real. It was spreading beyond China, it was hitting Europe and could hit the US as well. What makes this get real? What closes the gap between physical and paper markets?
It might not.
I think it has to be visual images of real shortages in the United States.
That means I have an advantage.
Now the U.S. will be hard, particularly if they do export controls on that. Europe will likely be the first one to hit. And I think the implication here is the U.S. believes it's safe because of energy dominance. And this is the point I made last week. From an equity market perspective, that equity market in the United States is a global market. All of those Mag 7 companies earn their earnings in Europe and Asia and all over the world. So when this energy crisis begins to hit places like Europe, it's going to impact the earnings of those companies that sit inside the U.S. because the U.S. equity market is not a U.S. domestic market. It's global, so it'll feel the impact. And I think that if the Americans are going to feel it first on the wealth impact before they'll ever feel it in the at the income cash flow level, the Europeans, unfortunately, they're likely to feel it at both sides.
At least I preach about time and cycle and do only time and cycle and preach literally. Instead of saying I care about time, instead of saying I care about cycle and not really caring about cycle and time, like that's, yeah, what? That is not reality, that's delusion. That's illusion. Those are lies. I don't do lies. I live in the real world where truth prevails above all else.
Of Carlyle writing this, the cost of rebuilding and recovering from the Hormuz shock will be enormous and underscores the regime change towards physical assets.
Good wins.
Jeff joins us now for more.
God wins.
Jeff, welcome to the program. It's always good to catch up with you, sir. Fluid environment, so allow me to go through the headline of the last 5 or 10 minutes or so. One headline, one report coming from Iran that their energy assets have been struck. Now, I have limited information beyond that, but Jeff, from your standpoint, in the week since we last spoke, has this got worse or better?
The people that actually watch the videos and the fucking mental shit that I've sent.
Contagion. That's why last week we were talking about shortages in Singapore. Prices of jet fuel spiked to $230 a barrel. This week, it's in Rotterdam. Rotterdam's $220 a barrel. Thailand, Philippines, New Zealand, Australia. So this thing's going intercontinental.
Think about last week. Think about the last week before last week. Think about the week before 2 weeks ago. Think about the week before the third week ago. Think about last month. Think about the week before last month.
These are physical supply chains.
Never
and the idea of around financialization and the ability to print money doesn't apply here. And I think the title of that piece says it all. You can't print molecules.
Jeff, with that in mind, where and how do you think we're underpricing this risk still in financial markets?
Point.
That's the peculiar thing about this is that you look at the paper markets, they've entirely disconnected from the physical markets. Crude oil on an Oman basis, on the other side of the strait, the side that's free, spiked to $173 a barrel yesterday. Crude delivered in Asia is a blend of Dubai and Oman, which is trading somewhere around 130 and 170. Today, this morning, they're call it 120 to 150. So you're delivering crude into Asia at somewhere around $130 a barrel. Product prices are spiraling above $200 a barrel. So
they're like, hey,
the
I've been here for months,
disconnect is
but, like,
between the paper market, which is sitting around 100, and the physical market, which is showing a very different environment.
Jeff, some people have speculated that's because of certain types of regulation in the futures market, and that's the reason why you have seen this gap blow out. Do you think there's credence to that?
You could argue that Monday last week, there was a mysterious 11 million barrel seller. I don't want to get into that. It's not enough to really change the dynamic. I think that the bigger factor that was likely driving WTI and Brent and staying lower is the price of Urals, Russian crude oil. It's rallied $65, $70 a barrel once they took off the sanctions. So WTI and Brent were the high-cost barrels. Russian was the cheap. What happened? You closed that gap. And now that you've closed that gap, you don't have any more spare barrels in the system.
Right, in the beginning, 2023, 2024,
rally.
I believe, and I wanted to do the action, but I just would not be able to somehow build it upon the actions and be like, oh, this is belief, and I'm getting so much fucking stronger, and I'm getting so much better. But like,
we know what that did to global supply chain.
Looking back in time,
it's like, at $100 a barrel, this thing's mispriced.
It's so fucking hard to know until you're out of that fucking cycle in life, and then you're just like looking back in that cycle in life, and you're like, without this cycle in life, this shit would not be happening. And people say that shit as a fucking joke. People say that shit as a fucking little story time bullshit. But like, LOD breaking again. I think they're gonna go test this 595, 597 maybe, or 597 number one, and I think they're gonna go test 690, so we are already at 665. I was going to say that 5 minutes ago because 665 was an important level that we were at a couple of days ago, but I mean, let's see. This is the downward cornucopia cone. Right, so those that watched the market update video, hopefully the market update video kind of made sense. But what did the market update video say? The market update video said we are in a bearish consolidation while we popped into Monday, right? And we're playing in this range. That's what the market update video really said. We're playing in this downward cornucopia cone as well as this downward channel. It seems like the market's gonna either do something like this or something like this, and something I literally said in the market update video. And it looks like it can't be even better than this because, yeah, there are people that look at certain things, and there are people that only look at candles. Imagine sitting here looking at the market only like this. Market is bullish, bearish, bullish, bearish, bearish. Oh fuck. Oh, what the hell? Oh damn. Market is bullish, market is bullish, market is bullish. I refuse to live that life. I refuse. I just refuse. I don't give a shit what happens in my life, no matter what. I just refuse to do that. There's one gap, there's two gaps, and there's a third gap. And we're playing at the cornucopia cone. So maybe they're going to cycle here, they're going to bear trap and go test the PPI candle somehow into tomorrow. And I refuse to fucking live my life like that at the minimum. That's why I sing. People get pissed off when I sing. They're like, oh, this dude just sings, oh, crazy. I'm leaving. But like, yeah, I mean, I'm really fucking singing because the actual shit is going on. And the deductions that I fucking actually wanted to happen 2 hours ago, 40 minutes ago, is actually fucking doing the thing. Not because the candles come in and I'm like, Europhic. Fearful. Like, nah, I'm actually fucking happy as shit for myself because, I'm fucking printing bread in 2/3, 3/3. this shit is so fucking slow on Nvidia. SPY and QQQ is at the floor, and Nvidia is at 180. If this shit is truly bearish, I expect Nvidia to pull down to 180 by market close or some point today. But it's a very, very hard thing to say this shit when Nvidia looking very, very strong.
Look at those
it's still
CPI
technically looking strong on every single down, so I am not lying. This is literally, as it's going down, it's looking strong. As it's going down, it's looking strong. But if this shit chops here or stays here for 2-3 hours, this is going to come down. And then the market can come back to here, but it might not today too. Why? It already played here 4 fucking times today. So I'm not saying it's going to go back to PPI candle. I'm not saying that, but I'm saying I've seen it happen where they don't touch it and go down and then touch it. I've seen it where they touch it, go to the middle, come back down, break the bottom, go all the way down for 3 hours and come back up into a fucking power hour. I've seen it all. So I'm not going to sit here and speculate, but I literally am going to sit here and say, oh, I've seen this happen and this happen, because that is what has happened. And this is literally what has happened in the past.
Well, why not make it a trifecta? I agree with Rick and Steve on this. I think
that's
this
what
is
the
a
higher
hot
time frame
report.
shows. If you look at this on the
It's just
5
one
and 15
report,
minute
but,
smart money analysis, technically
disturbing
it's showing
toward
we went up,
somewhat
touched
higher
the PPI
inflation,
candle,
where the committee has been
and now we're
arguing
deciding what to
that
do.
if
That's
you're
exactly what
patient
it is.
enough
That's all it
and
is.
you look past one-time effects, that you'd
That's all it
eventually
is.
get back to 2% inflation. But now you've got this
I don't
report
think it's
and
going to break
core
lower. I
PCE
don't think
inflation,
it's
which
going to
is the
break higher and
committee's
go PPI. That's
favorite
speculative.
measure
I
on
just
an
know
annual
it did
basis
what it did,
running over
and all I know is
3%.
it's
So I
where it's
think
at, and
it's
all I know is cycle and time
it's a
is
moment
creating
where the
things.
committee has to
And all I know is
reaffirm
there are
that
things happening,
they really
and
do
all I
want to
know is
get
things could
inflation back
happen.
to 2%, and
But
they're
all
going
I
to
know
pursue
is
a
there are other
policy
things
to
than
do
just
that.
candles at all fucking times that I'm looking at. So
the idea that these numbers are
that's the
coming
truth.
before we even really take
Truly,
into effect
this shit is a
the
fucking
impact of higher
disciplined
oil
world.
prices,
Truly,
what we've seen just in the last couple of weeks, 18 days, I guess I should say.
That you see me out here on the public chat sometimes when people are saying something on the chat. Sometimes it's wrong a little bit, and I just say I'm not trying to be like, oh, I know it all, but I'm literally just trying to be like, oh, is that the actual fucking real 100% real fact?
But
because
ultimately,
that's what I
it'll be a
really
wait
care
and
about.
see stance,
That's
because
I guess, you know, some people could take that shit as in like, you know, oh, it's just too much. But, I mean,
making
to
a
me,
move today for
like,
sure, but also
if I don't do
you
that,
can't think about
I don't
future
fucking know
moves
how else I
when
can
you
look
really
at the
don't
market
know the
non-biased,
outcome of this
not
situation.
having
I think
every single
so far
news,
markets
every
have
single
been,
thing
you
I
know,
hear
as you
from
guys have been
any fucking
reporting,
where,
you know,
not
been
even a
pretty
person, not even a
complacent
human
about
being,
this. They
just
think
online, make
that
me biased.
the conflict
I don't
will
want to be
be
biased.
resolved.
I don't want to be a perma bear. I don't
And
want
they
to be a
think
perma
that
bull. That thing sucks.
ultimately
I want to be a
there
perma
won't be too
deducer.
much damage
I
to the
don't care
global
about bulls.
economy.
I don't care about
Do you
bears.
have the
That shit
straight,
is weak to me. I don't
you know,
care. It's
bottled up here,
psychologically weak
and it's
as a
not that
man.
easy
It's
to see
psychologically
how
weak
that's
as a
going
woman.
to resolve.
I think
But
it's actually
for
way
now, I
better,
think they're
way
going to want to wait
stronger,
and
and way
see,
manlier,
not
and
commit
way
to
more
anything
womanlier
going
to just
forward, and then they
be a
can
human.
take the appropriate moves in the
Algo
future.
range, whatever you want to call it, hybrid, whatever human being. That's what I
this
love in
point.
life. I
I'd like
don't
to
just
get
fucking
the
think this shit
view
is just
of a former
green day,
Fed president
bad day. Oh, now I'm
in St.
green, so
Louis,
I'm a
who's pretty
human being
familiar
that's so smart,
with
and I'm
farming,
now I'm
with
godly. Like
commodities
I don't think that
markets.
at all. I
Obviously,
actually
you're
think
still there
that,
in
you
the
know,
middle of it in Indiana
somehow
at
by the
Purdue.
miracle of God,
What is the potential impact?
I'm deducing right, and somehow by the miracle of God, I'm becoming a man and a woman and a human being more and more and more, and the person that I want to be internally as a human being and in my heart and spiritually, emotionally,
You
financially,
know, as
and I'm
far
just
as I
happy
can
about that.
tell, you know, scrambling for alternative
simple.
sources and maybe a few things that can be done. But you do have planting
But there are
season
so many
coming up
things
here,
in
so
this
that's
world, in life, every single day
you know,
that is
certainly a
distracting.
major topic of discussion. It's
But
a
I
big
refuse
industry,
to get distracted,
and
and I
it would,
refuse
you know, could
to.
affect
It was a
farm
choice in my
income
life
this year,
to be what
and
I'm
could be a
doing,
major
the way I'm
factor.
doing.
So
So
that's
it's a choice.
certainly
No matter
something
what
that bears
anyone says,
watching
it's a fucking
going
choice.
forward.
Choice is hard to make. That's
Jim,
the
what do you
hardest
think
fucking point.
about the economy overall? Most
Things
people
are
think
easy
that
in
we were in a
life.
pretty good place, at least at the beginning of this
In
year.
the mental head.
Do you agree with that? And how do you think we are faring
things
right
are
now?
only good for me in life when I make it good in life.
I think the economy's in fairly good condition, and I think we're in good shape for 2026 as a whole. Obviously, this is a big wild card
not seriously, but yeah, I take that
right
as a
now.
serious thing.
But still, I would say based on what we know today, the U.S. is in great shape. On the labor market, the committee has already reacted, I think, preemptively to labor market weakness And I've been interpreting the very low non-farm payrolls run rate as a consequence of the new tougher immigration policy that we have. So I think adjusting for the immigration policy, I actually think the labor market is fine. Initial claims are low.
It's actually better for me like this.
Unemployment rate is near the natural rate. So I think
honestly,
labor market is fine. And they've already...
How else? Literally, how else? Still looks bearish in the video too. Crazy thing is, we're not even oversold anymore. We're just coming back from being oversold because they're chopping out the floor. FOMC rate cut. Let's get her done.
To connect the dots on the current economic environment, as well as some stock picks to consider, we want to welcome in our next guest. That is Aaron Gibbs, Chief Equity Strategist at Slatestone. Aaron, good to see you. Love the green, the glasses, the green outfit as well. Happy St. Patrick's Day to you. Let's start out with, okay, now that we got the fun stuff going, let's get into some of the heavier stuff. You say there are three big market fears right now. One of those, you say recession risk is rising. I've heard some thoughts about stagflation or stagflation light. I haven't heard a lot yet about recession risk. What's your thought on that? Where do you see what the market may be missing or what some in the market are paying attention to? Your thoughts?
So it's still low. We're still talking, 20, 30% chance of a recession, but it's something that you just need to keep on your radar. And I think that whether we're talking about stagflation light or full-on recession, obviously we're talking about a slowing economy. And so that fear is definitely on the horizon. And I think a lot of people have to look at it with an increased risk. And so we're looking at it with the big revisions that we saw come down for fourth quarter. And given where we're heading into with the Middle East and higher energy prices, this is just something that people should be aware of. And it's certainly, there's a lot of extra fear in the market. So we're going to see increased volatility because this is really something that could happen. Recessions are almost always accompanied by high oil prices. And so you obviously want to be aware of that potential risk out there.
Okay, and yeah, great point about, listen, the reading on GDP came down to 0.7%, which was half what was expected, half of the prior estimate, essentially. So that was tough. That was a tough pill to swallow. Let's talk about oil prices. You say they're complicating the Fed's next move. Today. That does make sense, right? We've got oil prices higher once again. We've pulled back from $100 a barrel, but, it's still pretty elevated. What's your thought on where this leaves the Fed?
So, like most people, I don't think that's going to certainly change this meeting or impact this meeting. But even though they say they like to look at core and they exclude energy prices, look, energy prices flow through to everything. It's essentially a tax on consumers. And so that is going to go into the prices. Maybe it might take a quarter or two, but it's certainly going to flow through into consumer prices, of which the items that the Fed does look at. And so that is something that we could see, again, ticking up. And we just know historically, you can't just exclude energy and say it doesn't, it's more volatile, we're going to exclude it. If it's persistently high, and, we're seeing the markets come down a bit, that's something that they're going to have to take a look at. Fortunately, it looks like the markets think that this is going to be short-lived. This is not going to be persistently high oil prices, and this is going to resolve quickly. We all certainly hope for that.
Apparently,
but if that changes, if the markets start acting like this is going to be persistent, it's something that the Fed is going to eventually have to deal with.
And it feels like it's a really tricky balancing act for the Fed between, high oil prices and inflation risk, and at the same time, the job market. I know you say the job market is holding up, but the last jobs report wasn't great. Your thoughts on, just that balancing act?
PPI candle, we are range bound on Nvidia.
If we see, obviously weaker jobs, maybe we could finally see those cuts. obviously the markets are still expecting two cuts, and that just seems very difficult given the environment we are in right now with higher oil prices and potentially higher inflation. So yeah, it's that tight wire that we've been talking about, and so ultimately the easiest way to handle a tight wire is to do nothing rather than to overreact. So I think we're not going to see any reactions for a couple quarters from the Fed until we see some clear directions either on the job market or from inflation side.
Rockefeller.
And Aaron, let's talk about your third fear factor, private credit stress, right?
Grandsons.
It feels like that's something that's a little bit on the back burner. You know, when you're cooking, you put a pot on the back burner. You still have to kind of keep an eye on it because it could spill over, and it spills over and it creates a mess if you step away just for 1 second. What are you paying attention to here with regard to private credit stress, or what should investors be paying attention to here?
So one of it is just to understand that if it comes back into the headlines, if it starts making headlines again, one of the things that investors have to do if they do have these lockouts, if they're unable to get liquidity through their private credit options,
anybody remember
the thing you
Hurricane
end up
Katrina?
doing is selling your liquid assets, right? You're going to go sell your high quality large cap names, and so we're going to see more volatility just within the equity market simply because people need cash and they need that liquidity. And so if we see big down days, which is really triggered by just liquidity settling rather than a real fear about the high quality names,
1050
it's
into
just
11
something to
bullish,
be aware of,
1050
and
into
just
11, Nvidia going way fucking before
potentially it presents some opportunity if people have to sell some high quality names, particularly liquid names. It's an opportunity to buy on those days rather than just jump in with the panic.
Okay, all right. Let's talk about some individual opportunities.
Gonna go grab a Coke, and I'm gonna run to the bathroom.
Qorvo is one of those. It's been under some pressure this year, but you see the potential for an entry point. Tell us about your thesis here.
Sure. So Qorvo, they're really known for doing chips for smartphones. That's where a lot of their business has been in the past. But they're ramping off. They're moving away from the smartphone chips, and that's one of the reasons they've gotten hit so hard. And they have been moving into aerospace, defense, and AI chips for quite some time, and we've seen that revenue shift. So I don't think that's fully reflected in the price. I think they've just been sort of beaten up because they're like, oh, they're a smartphone chip maker. They're not on the AI or aerospace defense, but that's actually not true when we look at their revenue mix, where they've been for the past quarter or so and where they're heading towards their guidance. So I think this is one stock that really has been beaten up and is definitely a buying opportunity at this point.
Okay, and then Talon Energy, I want to get into that one. TLN is the ticker here. All about AI power demand. It has been under some pressure so far this year, but you see opportunity here. Tell us about that.
Sure. Another one that's really taken a beating over the past few weeks. We've like many stocks, but this one another one that's been hit hard. But they they sell directly to wholesale buyers for energy. So they're not a utility company. They're selling directly to Amazon. They're building their own energy centers for these data centers. And so really very good. They're dispersed between, they have natural gas, nuclear, and so they are able to deliver those energies exactly at the rates that they want and just are expanding exponentially. So just a great AI story, not necessarily a utility story.
And the last one on your list, really quickly, Carpenter Technology. It's outperformed the S&P 500 year to date, though recently little challenging. Tell us really quickly about that one.
Sure. They're very high-end materials. They're sort of the picks and the shovels of the aerospace area. So they really build those basic components. And another area that's really been growing, certainly we're going to see some increased spending, perhaps on defense. And these are the guys that are going to make a profit from that.
All right, Aaron, good stuff as per usual. That's Aaron Gibbs, Chief Equity Strategist at Sladestone Wealth. We always appreciate your time.
back. What the f is this Elon rocket?
Joining us right now is Roger Altman. He is the founder and senior chairman of Evercore. And Roger, let's talk this through. You've been watching the markets for a long time. You've had clients you've been advising for a long time. Where does this rank in terms of what you tell people? Because the market's reaction, frankly, has been one to brush off much of the concerns and maybe see through what's happening right now with the situation in the Middle East.
Let's do a poll.
Well, thanks for having me, Becky.
Who thinks this shit's a bull trap? Who thinks this shit's a bear trap?
Cross currents flowing through financial markets right now.
In the overall picture, I think it's
one
a bull
is
trap.
that before this conflict began, the U.S. economy was really quite solid. Consumer spending was strong, maybe K-shaped, but strong. Fixed investment was strong, driven by AI-related spending. Access to financing was good. Corporate profits were strong. Inflation and interest rates were ticking down, and equity markets were strong, and so were fixed income markets.
Bull trap
So starting from a strong
I thought they were going to hover here for at least a little bit.
On the other side, the Iran war is an unpredictable wild card. Most macro forecasters have built in about a 30-day conflict in terms of their...
Oh my God, someone just said I got cooked at the bottom. And then I got cooked at the top. Oh my God, that's so fucked up. Oh my God, that's fucked up. Fuck. Cycle be like that though. It's the exact fucking opposite of this small cycle. I mean, they could just come back to 665 and not go anywhere, but yeah, this is really out there. The poll says 8 people said bull trap. I voted first, so I probably shouldn't be. I shouldn't have voted first, but one person voted bear trap. Roy Rogers. He said, "I'll be the Chicken Little." All right. Everybody sent Chicken Little emojis in chat. Thank you. Thank you. He said, "I'll be the Chick-fil-A nugget." Roy Rogers, the Chicken Little of the day. The entire hen, the entire farm animals are saying, "The sky is falling." And Roy Rogers said, "Caw-caw! The sky is rising." This shit is not fully bullish or bearish. This is almost 50-50. MACD is in bullish territory here. Yeah, that's what I wanted to see. The little chicks from Chick-fil-A. Thank you, Alfonso. I mean, they did really just cook the 2/3, 3/3 bears off that move alone. How fucking crazy did they fucking dip below PPI? About $4. It's looking bear trappy on the video all of a sudden. Oh, nah. They're pre-cooking meat on Nvidia. They're marinara orange chickening meat. Marinated orange chicken or marinated halal chicken right now on the video. That's meat. They are cooking. They said this is halal certified, boy. Damn. Someone said no fucking trade for me today. I should have done that today. The fuck is wrong with me? I'm actually trading every day. It's actually bad. There's gotta be a day where I take a break too, for real. Man.
Duration
bad.
assumption. And therefore I haven't
There is not a single fucking day where I did not trade, if I really think about it. It's actually fucking bad. Oh my. I should probably take a break or two. A day or two. It's never bad. It's always good.
Adjusted their forecast much, which is one of the reasons why equities, as you just said, aren't all that weak. But here we are with the Strait of Hormuz closed. Yes, one or two random vessels have passed through it, but it's essentially closed. 20% of the world's oil exports pass through it. And it seems to me that it's going to be hard to reopen it. My understanding is that from a military point of view, it would be hard for the U.S. to unilaterally do that.
Look at the way they're doing this shit right now. That is so fucked up.
The Iranians have a lot of small mobile
1 minute
weaponry,
gap up until
shoulder-fired missiles, small boats with machine guns and so forth.
That's crazy.
That can be
easily
shook it
off
hidden.
with one fucking big ass rejection. No cycle confirmation just on the algo range made it look crazy bullish and crazy bearish, and they broke out into
just march in and open it. And alternatively, if President Trump just declares victory
with the way they're doing
and pulls out,
right now,
what incentive does Iran have to reward us by reopening it? That's not clear to me. So I think we're going to need a ceasefire agreement. And the question is, what could we offer Iran which could achieve that? Because at the moment,
PPI days are given days, though.
We can sustain
the way
pain,
they went down PPI like this after they tested and coming back, this shit is almost seen
longer than America can.
I'm not saying it's going to go back, but I'm just saying, like,
they've regionalized the conflict by attacking the UAE and Kuwait and Dubai. I'm sorry, the UAE, Kuwait, Bahrain, and so forth.
1/3, 2/3, 3/3.
It's hard to see how this
seen
ends.
a lot on PPI. CPI days breaking higher or lower.
The U.S. economy is a huge
just this test right here
and
the
very
minority
resilient
sees.
thing. It's not particularly import sensitive, which is why
Minority sees
tariffs
this algo
haven't had
range
much
too.
effect, and it's not particularly oil sensitive. We're a net exporter, as everybody knows, and the data I've seen shows that U.S. consumers spend a relatively small amount.
I'm not saying it's going to go all the way back up, but I'm saying I've seen it where they go retest.
It's going to be hard for this
at some point
by itself to really damage the U.S.
I don't
economy.
know if that some point is going to be when Powell
right
talks,
now,
to be honest. It really could be. Like, imagine when Powell talks and there's one big, massive fucking candle, 669.32,
and oil supplies return to their pre-war levels soon.
That's a possibility. That's a very low possibility, but I
the U.S.
mean,
economy will end the year in good shape. Oil will
they
be
use the
70 or
CPI,
below.
PPI candle.
The average
nuts.
gasoline price
All
that
I'm saying
Americans
is
will
the
have paid will
PPI
maybe
candle
25
happened
cents
today
higher,
at 8:30.
25 cents higher than it otherwise would have been.
FOMC at
and we'll
2:30,
be
and there's MU earnings. Like, there's just
So, Roger, you would not advise clients to do anything differently at
a
this
lot
point
of fucking
because
things
this
happening
is just
today.
uncertainty, and if it ends soon, things will be okay.
Yeah, they cooked my
What's
fucking
the point
MU put.
in
I
terms
fucking
of a time
hate them.
frame where if things aren't resolved,
I went in
if
for
the Strait isn't
1.1K
open,
at
if
March
oil prices
16th.
don't come
At
back
4
down,
p.m.
you
it
would
was
say, okay,
16.
I need to reassess this. and
Now
look
it's
at
at
this a little
$400.
differently. Is it 2 months from now? 3 months
I
from now?
actually hate them on MU.
It's only
though.
at the point where I thought myself that it was going to
that one
truly
fucking goddamn
impact
pullback candle.
business and economic conditions.
That one single fucking thing I
we're
didn't
not
need.
at that point.
And it's getting cooked like fucking nuts
it
right
may
now. This
take
shit is
us,
stupid as fuck on MU.
2 months, 3 months before.
This shit is actually stupid as
really
shit on MU. What
become
we're seeing
evident,
right now
and
is
it's
this is
unlikely
literally
the
some
conflict will extend that
1929
long, but at the
railroad
moment,
squeeze, some
we just don't know.
motherfucking South Sea China company squeeze,
So
some
what things are you
motherfucking.
watching? Because we were talking earlier
This is
today
what we're seeing
that,
right now.
that really you have to be watching not only what's happening with the Middle East, what's happening with oil prices, what's happening with the economy, but also
8
the
days.
continued push
so
for
fucking
AI.
bullshit.
We've had Nvidia and Jensen Huang.
I'm not
at their
gonna lie,
big
this is some
conference, and
historical
they've been
shit
talking
too.
about
Like,
some pretty big ideas over the last couple of days. How
South Korea
do you
went up
kind of
4%
keep all
overnight.
of that in
Fuck, we
check?
talking
Where
about 4%.
are you feeling about the technology
thing is
grade
a
at this
fucking
point?
ETF.
Well,
that fucking jumps up and down crazy because of Samsung and SK Hynix, and the thing moves crazy with fucking MU, and they are the triple fucking. It's just so fucking bullshit.
Know a lot more about it than I do.
Man, I saw
My
it said South
impression
Korea went up
that it's
4%
just
yesterday,
too
and there was a
early
5-minute fucking
to
circuit
judge,
breaker for the upside.
For example, what the impact of
There's a
AI
fucking
will
circuit
be
breaker on that
the
thing every
demand for
fucking
labor.
day.
There are a lot of
There's
apocalyptic.
been 4 the last 2 weeks or
There's
1 week,
a lot of
week and a
apocalyptic
half.
talk about how much labor it's going to eliminate and
2
so on
going
and so
downside,
forth.
2 going upside, and 1
that's
I don't even
possible.
know. It's some.
But at the moment,
there's
not evidence.
I don't even know how people in Korea doing
Do
this
I think
shit.
AI is going to be transformative?
honest
Yes,
with you,
very
probably in Korea
transformative.
getting it the worst.
But
Probably.
in terms of the recent focus of the market on
Yeah, that's what happened in
what
2007.
AI will destroy,
Aisha
I
got
think
hit.
it's gone a little bit too far. I mean, for example,
hard as shit
software.
over there.
There have been like 5 sharp corrections in software stocks over the past 20 years. And every time they've bounced back. And I think not every single one of them, but most of them are going to see that experience again. So at the moment, I don't see AI as a force
that's very speculative,
that should undermine markets.
They really went down lower today and went higher. So what that really means is they're using the PPI to go lower and came back up. So they already did the move and they reset the move.
Okay, so no
FOMC's coming in like 3 hours.
That's your prediction at this point.
We have 12, 1, 2.
Let's talk about the SaaS apocalypse, software as a service apocalypse, mash them together.
I don't see that.
Where's the below finale you're talking about?
Who know a lot about it.
It said reset everything to Monday open.
I don't see that either.
Well, let's talk about your business.
So maybe blow up finale before reset everything to Monday open,
getting out there
then
and
move
hearing
on
what
speech.
corporate leaders are willing to do. You point out that what's happening in the Middle East definitely causes some momentary uncertainty.
PPI
this
candle
fog
touch.
of war mentality.
Because the thing is, if they recover here and go touch the PPI candle, then they have to go gap fill.
On the business activity.
The thing would have been reverted crazy. There would be no stopping the momentum.
It's still too new to slow anything down.
But this is what the
answer is not yet.
Really showing here.
There's this widespread expectation that the conflict is going to be short.
On a higher time frame instead of
I mentioned that most forecasts,
right? So
this includes our own macro forecast at Evercore, have built in a 30-day duration.
Monday
and I think
Tuesday.
That's still the mentality
1/3, 2/3, 3/3 off of 9:45.
Decision makers, as it would relate, for example, to transactions. We haven't seen any diminution in activity
the thing looks like it's already recycling right now, not really
6
just
months
going
from
up
now,
all the way.
Depends on how this conflict goes and other factors.
It did the move, 1/3, 2/3, 3/3, and
not
it's
yet
resetting the move, 1/3, 2/3, 3/3 upwards, trapping the 3/3 bears too, inside today. This is the higher time frame. You put this analysis along with this, and along with this.
Let's start maybe with you, Jose, for kind of the setup as things are going for today. Big rate decision or indecision, I guess, whatever you want to call it. But there are a lot of moving parts that the Fed and every central bank around the world has to. But the Fed's probably the most important at this point. What exactly are they ruminating about?
David
and
said,
how exactly will they treat that Fed rate decision in the coming months, knowing what they know with the war in Iran?
Great to see you, Dom. Well, first, we're looking to see if this oil thing is going to be a one-time shock or if it's going to have a lasting effect. We're hearing from the Trump administration officials. Saying weeks, not months. Things are going to be over soon. That's what we need for inflation to come back into the twos. Right now, we're running at around 3%, Dom. Crude oil prices are up 42% year over year, and that's starting to work its way into the services and to some of the core PCE categories like airline fares. So we really need the Middle East conflict to subside for the Fed to be able to cut in the second half of this year. As far as other global central banks, Dom, they're starting to hike. We saw Australia, ECB, UK talking about going the other way as well.
All right, so if I could just follow up on that. Food and energy prices are volatile, which is why they are stripped away from core inflation figures. If those oil prices are going higher,
look at how they do this shit. They shake out, go to the 3/3, make bears think, oh, they fucked up, make bulls think they fucked up, and then they fucking reject
because they're spending more on fuel. So is there a weird effect right now where because oil prices are surging, we may actually see inflation easing in certain parts of the market because they can't spend on as much there as they are because of fuel prices?
There is a sense that there's less capacity, particularly when you have a K-shaped consumer. The lower end is going to have more difficulty maintaining their expenses.
So fucking crazy,
but I think
bro.
Overall, if crude oil prices stay high, I do think that inflation, it doesn't really solve the inflation problem. It does bump it up.
All right, Nimrod, with all of that in mind, it's also very curious to think about how markets have been very orderly with regard to how they treated what's going on, not just on the macroeconomic side with the Fed and inflation, but a full-blown war.
I don't even know what you were saying, to be honest.
How exactly do you read that? And has the market reacted
appropriately?
Time frame,
like 2 hours,
or is there possibly way more downside than we're pricing in right now?
But still, someone could argue the MACD RSI.
The markets are so conditioned now for the
all I was
taco
saying
trade.
was where we were.
You
I
know,
wasn't
just think
saying
about
things was
last
gonna go
year.
up
We
or
were
down,
living through
or that
Liberation
I was
Day
gonna
and what
fucking
happened
hesitate or
in the
something. I was just
aftermath.
saying, like, this is
So
just
yes, it
resetting.
feels like we should
2 hour, I
react
guess,
to
can do
the
whatever the hell it
higher
wants. True.
oil prices,
But
to
this
what's going
also,
on in the Middle
I
East.
feel like
with
this
the
has a
conflict.
higher
I
importance
think
than
if you start
2
reacting,
hours.
just look at what was
15-minute,
happening
30-minute.
coming into this year. Huge rotation
1
into
hour. How's
defensive,
1
huge
hour?
rotation
1 hour
into
looking crazy.
broad-based sectors outside of technology.
Thing
And
playing into
then
3/3, so it's
what we've
dangerous
seen
as
since
shit.
March, the beginning of the war, is the
Bears
reversal
have
of
the
all of
advantage,
that. So
technically
if you
speaking.
start
But it's
responding to
scary
this
as shit.
back and
Even
forth,
with the
what's
PPI
happening in
candle
the
up top,
political
they've been using
environment and
HLD divergences
geopolitical
for the last couple
environment,
of days
you're
to
going to
fucking
get
just burn it.
whiplash. So what the
QQQ and
market,
SPY,
I think
so
investors
use
are
anything to
doing
just
is
fucking
really
use as a
taking a
hook to
bit
burn.
longer term view and saying, you know, yes, there's this tug of war
They don't even need to
constantly
break
between an
LOD.
oil
All they need
shock,
to do is
maybe a
literally come back to
stagflationary
LOD,
environment,
and then they
but we
fucking
have to
just burn
balance
everything
that
anyway.
versus a AI-driven productivity boom. And, you know, based
665
on
has
that
already
tug of
reached my
war, you kind of
sense.
see that playing out on the market on a day-to-day basis, but that's what we're really seeing. And, you know, all of this is yet to play out how it's going to impact corporate earnings, but early indications indicate that corporates find a way to be resilient and pass through these shocks, inflationary shocks. So the corporate earnings are expected to be generally fine, and with that, the markets are holding in.
So
but it's
Lee,
okay.
I saw you
Those that
nodding
are here
in agreement on some of those things. I saw you listening intently to what Nimrod was saying. From a financial advisor standpoint, given everything that we've seen, especially over the last few weeks, have you made any decisions about reallocation, rebalancing, I mean, just the idea that you would change a client portfolio given what's going on right now? Or to Nimrod's point, are we just looking more long-term and maybe smoothing some of these market moves over?
So I'm going to say a little bit of both. So we are making some tweaks to client portfolios. For more than about 18 months now, we've been shifting the allocation away from U.S. stocks and more into international. For any number of reasons, we're going to continue to do that, not making any huge wholesale change, and not specifically because of the war in Iran, but we're going to continue to make some of those shifts.
If they break 11,
one of the things that I am a little concerned about, as Nimrod said, corporates, a lot more resilience. I'm beginning to worry about the resilience of the U.S.
11 breaks is 330.
There are a lot of things that I'm hearing and seeing that give me pause in that area. My concern would be at some point here in the not too distant future, if things do not subside, that the American consumer says, I'm tired.
If it breaks this
now,
level,
Jose,
it's 330.
Nimrod brought up the AI aspect of this whole thing. There will be an economic impact. We're already hearing lots of commentary about the workforce possibly being disrupted. We've already seen firsthand job cuts directly attributable to artificial intelligence. From an economist standpoint, how exactly does that play out in not just the economy, but by extension what the market's going to read into it?
Well, I think that overall the productivity has helped to offset the weaker hiring that we've seen in the last 2 years.
NVIDIA
and that's
being
been
used today.
Terrific, and it also helps to keep earnings quite buoyant as well. But to talk about what Lee was saying earlier, you know, earlier
this isn't
this
even
year,
that
we were
crazy on the video, but I mean, there's a wedge.
The Dow Jones and the Russell really lead the gains of the year when the NASDAQ and the S&P were kind of flat. Now
see this purple line, right? This BPI candle being used on NVIDIA right now.
Rally in oil prices. So
it's creating
the economic reacceleration that we're expecting in 2026, based on the legislation, Big Beautiful Bill passed in 2025, is really at risk here in 2026. However, yesterday we did hear those AI commentary from Nvidia CEO Jensen Huang, and that looks like, at least this morning, that's bolstering the AI trade. We're on track for a third consecutive day of equity gains.
Nimrod, is this AI trade going to outweigh what's happening in the Middle East?
You know, it depends on a day-to-day basis, right? So what the price of oil does, what's the latest news? We've seen that the oil price is down, the AI trade is back up. You know, it could reverse. It could easily
go
reverse
right here and burn everything
tomorrow.
off anyway. Reset
the
everything
one thing
already.
I would say again, you know, back to Lee's point, right? It's the corporates versus the consumers. Consumers have been weak. You know, we just heard that Vanguard published a study where last year was record withdrawals from their 401ks. So consumer has been struggling. But what's been keeping this whole market afloat is the corporate spending, the AI spending. And we don't really see that changing in a much meaningful way going for the next 12 months.
All right, and really quickly, Lee, how exactly are you going to play this energy shock?
Well, quite frankly, what we've been doing in some client portfolios, because going all the way back to COVID, virtually every client we have has a position in Exxon. And so with what's happened this year, the last few weeks, we've been trimming our position in Nvidia.
The R side, neutral territory. God did 3/3, 11:21. Look at how they fucking trap out and confuse and scare out on candles right here. Right, making them think, and then 3/3, and then wild. 2/3, 3/3 bulls getting burnt off of 11 into 11:10. Bulls getting burnt right now. Off this bounce. Shit was a bull trap at the top. It's faked out. What a pull. Fuck.
I think that the market has been a little bit complacent about the impact of the war. And when they see the headlines today about Israel and the US hitting this gas field, now this gas field will not have a huge impact on international markets. It's gas that is used at home in Iran. But what it does mean is I think Iran will take it as a signal that the energy system, the global energy system, is fair game. So there's a lot of worry now that means that they will intensify attacks against oil refineries, against oil fields, against export terminals, and indeed concentrate on the Strait of Hormuz. And it will just mean that the pain that's going through the energy system will increase.
I mean, as news director for all of this arc, and, you know, whether it's Jumana Bersetji in Dubai with some real risk there in all, what's the Will Kennedy axis where this war becomes critical for our microeconomics? Is it days, Will Kennedy, weeks? Can we get out to May 1st?
It's happening now. It's just not evenly distributed. We've been reporting all week, and you've seen it and talked about it, Tom. That, you know, if we look away from the flat price of crude oil into how energy markets are playing out in different parts of the world, it is already disruptive. Whether it's $5 diesel in the US, with all that means for America's trucking companies and America's farmers, whether it's the fact they're actually rationing fuel in some parts of Asia, like Vietnam and Thailand, or whether it's the fact that Japanese refineries, one of the world's big refining systems, are looking at cutting runs, that China is having to keep fuel at home. It's happening now, and the fact that those things are happening means that as the days go by, consumers will be feeling the impact, and they'll be feeling the impact, less money in their pocket. They'll be feeling the impact in the fact that people have got to put their prices up to recoup these rising fuel costs. It's starting to happen. There's always a lag. We remember that from the Ukraine war. But don't concentrate just on the flat price of crude. Yes, 108 is a big number, but look at jet fuel markets, fuel oil markets, diesel markets.
The headline comes out off the team that Will Kennedy has. Qatar says Israel striking Iran's gas field irresponsible step. I mean, Paul, this is stronger language. This is how you get out to $108 a barrel.
I think you're right, Tom. I think you're right. So, Will, given that headline here, just in the last couple of days, President Trump has asked some of our erstwhile allies for help in the Strait of Hormuz, mostly been rebuffed by those countries. What's your reporting in London, in Europe, about how our European, I guess, allies are viewing kind of what's happening in Iran these days with the U.S. and Israel?
I think most people in governments in Europe would make the following points. They weren't consulted about this war starting. They're extremely dubious about its strategy and what the end game is. And they're also, and I think this is an important point, extremely dubious about what a military solution to the Strait of Hormuz looks like. Trump says he wants ships to open this, but when you actually talk to people who understand how the naval operation would work. At a time of war, opening in Hormuz to commercial shipping and keeping it open would be an enormous naval task, a task that probably the US Navy, let alone smaller European navies, are not equipped for. This might be part of the solution after the war ends, but I think most governments would say this is not even possible while the conflict is still going on. So you should turn your mind to finding a way to end the conflict. Now, I'm not passing judgment on that view. I'm just trying to reflect what the conversation is like here in London and Paris. But I think that would say, we did not ask to be in this conflict, and the way that you're asking us to be involved is not realistic.
Is there concerted efforts on the part of European governments, UK government, to work with the US to try to push for some diplomatic solution here? Or are the Europeans just kind of saying, hey, you guys broke it, you deal with it?
I think a bit of both, probably. I mean, I think they would explore any diplomatic opportunity to bring something around. Whether that exists, whether the European government's the right people to do that, I'm not sure. We know that President Macron of France has spoken to the Iranian president, so those efforts are in place. Obviously, the Gulf states are close allies of European countries, so those conversations between the likes of the UAE and the UK will be going on at the same time. But there's only
looks like they're on fucking crutches.
The only people who can end this conflict are the antagonists themselves. So that's what we need to happen. But I think Europe would love the shooting to stop.
Well, one final question, and I don't want to be biased right now. Derivatives of
as much
oil.
as I would like to fucking say,
now, folks,
oh, maybe a rejection on Nvidia. I don't want to be fucking
my
biased
eyes are failing
right now.
me this morning. I got to get Will Kennedy glasses. I do better. I look at petrochemicals. I look down the feedstock chain, Will Kennedy, at naphtha, and that what Qatar does. All the petrochemical juggernaut of the Persian, the Arabian Gulf as well.
Like
those prices are moonshining too, right? When does that industry collapse?
It's really fucking, that's biased.
Well, I don't know that, well, two things. Yes, I think there are chemical plants that will run out of some feedstock, and that, you know, if this carries on, naphtha, which is the oil product which you put into chemical plants to make all the plastics and the chemicals that you're talking about, that you rely on, they will slow down. They will, if not close. The other thing I would say was a really interesting story we saw out of Germany today, which is BASF, the great big German chemical giant, operates this enormous plant in Western Germany. It said it's going to have to raise the price of some of its products by 30%. And that goes back to the point I made to you earlier. We are starting to see the impact of this war, of what it's doing to the energy system, ripple through the economy. It's early days, but you can see it starting to happen.
I would like to think that's what it was, but that's speculative as fuck. PPI candle to the bottom. Doesn't really look like it's on any fucking levels here. It looked like we rejected the 0.5 fib at 1120. Eh. 1125 rejection to 1130. Nvidia not moving. Small cycle. They about to fuck over the bulls. Quite possible.
Welcome back. New overnight, Israel hitting targets in Beirut, announcing it has killed Iran's intelligence minister in a precision strike. Fox is being told he was responsible for overseeing Iran's entire global terrorist apparatus, including sleeper cells. The U.S., meanwhile, using 5,000-pound bunker buster bombs overnight to take out Iranian missile sites along the Strait of Hormuz.
I don't fucking think so. I think it was the 180 on FOMC, but fuck, we'll see. We'll fucking see, Nvidia!
And her allies.
Hypothetically speaking.
On Truth Social this morning, I wonder what would happen if we finished off what's left of the Iranian terror state and let the countries that use it, we don't, be responsible for the so-called strait. That would get some of our non-responsive allies in gear and fast. A Department of War official confirming the supplemental defense request will include funding to support multi-year missile production deals. Lawmakers confirming my reporting that the package could be upwards of $50 billion. Joining me now is Louisiana Senator Bill Cassidy. Senator, it's great to have you this morning. Thank you so much for being here. How would you assess the war so far, and what is your reaction to the Defense Department needing to have a supplemental package of $50 billion plus at this point?
The goals were to destroy the Iranian ability to produce a nuclear weapon and their ability to deliver it. Clearly, destroying missile sites is part of that. These missile sites were targeting boats, ships off the Straits of Hormuz, but still destroying missile sites in general is helping to achieve that goal. It appears that we're getting there. The enriched uranium is another issue. The $50 billion that's going to be brought to us, of course, you want to look at it. You always want to make sure there's not something in there that shouldn't be. On the other hand, I think the Senate is going to support the president as he is in the middle of this. We've got to support our troops, and this will be understood as supporting our troops.
In terms of your role on the Senate Committee on Energy and Natural Resources, what do you want to see done in terms of loosening up the Strait of Hormuz to limit the spikes in oil and gas right now?
Clearly. This is more about how do we manage worldwide gasoline prices, oil prices, including in the United States. We can do things to expedite permitting in the United States. We can have a permitting reform bill which allows pipelines to be built more quickly. We should support our allies as they do the same. The oil coming out of Venezuela comes to Louisiana. I'm familiar with how our refineries are built to handle that. Let's get as much of that oil out of Venezuela as we can, but in the meantime, bump up our own production.
Well, it's a great point that you make, given the executive orders that President Trump has come out with in terms of the energy capacity in America. Are you expecting to codify those executive orders with regard to permitting beyond what's in the big, beautiful bill?
Yeah, so permitting is a big issue, and of course we need Democrats to support it. But I think they might, maybe. I mean, if President Trump says turn on the air conditioner on a hot summer day, they're going to say heck no. But maybe on permitting they will, and if we can get that done, then we can begin to unleash America's natural resources. By the way, Maria, that creates jobs, and not only does it put more oil and gas out there, more electrons out there, but it also creates jobs. So I'm hoping Democrats
How Gandalf coming.
Well, Senator, you've got a lot on your plate, including
they said something about the Senate right now. Yep, the Galactic Senate.
Debate on the Save America Act. This is a priority for President Trump, of course, and it's triggered days of a marathon debate showdown. Senate Majority Leader John Thune says he's pessimistic that the Democrats will do anything about it and add to the 60 votes needed to pass the voter legislation. Where do we stand, and do you believe this will
this shit is actually fucking sideways chopping now, zero DT, burning fucking everything.
73% of Democratic voters support it. About 70%, 83% of Americans in general support it. If
Candle
Americans
went green with no
with
volume.
Democratic senators, ask them to vote for the common sense legislation that it just
if Nvidia flew on that, I would probably say bullish. But
I mean, you show an ID when you get on the airplane.
Right.
You show an ID.
Look
when
at the Nvidia MACD too. I'm going to show it right now.
That's a constitutional right. Why shouldn't you just have to show an ID when you vote?
It's so fucking
if they weigh in with those Democratic senators, we'll get them on board.
I'm sorry, pardon me, sir. Are you going to have a talking filibuster to get your colleagues on the record in terms of why they're not supporting
QQ at
this?
600.
I don't know that. I've been for a talking filibuster since I was elected to the Senate,
triangle
so I'm
form.
all for that. So whether or not my colleagues agree, I don't have a whip count. I can't tell you that yet.
Well, look, I don't know how you're going to get the Democrats to agree when they can't even agree to open the Department of Homeland Security, and we are in the middle of a war. The White House sending a letter outlining changes to the Department of Homeland Security to help reach a deal with Democrats and end this 33-day shutdown. It includes expanding ICE body camera use, increasing congressional oversight of DHS detention facilities. We will, of course, hear the Senate hold a confirmation hearing for Oklahoma Senator Markwayne Mullin coming in, President Trump's choice to lead DHS. What are you expecting there? Will he get confirmed?
Yeah, I think Markwayne will get confirmed. Right now, we need leadership. You pointed out the Iranian cyber attackers are already coming at us. And so we need leadership in that department. And so I think Mark Wayne will get through, and Mark Wayne will do a good job.
I'm with Harris Faulkner this morning, and we've been talking about that so far. Harris, jump in here.
Thank you very much. Senator, good to see you this morning. Look, I want to go to something that happened last night. The GOP chairman of the House Foreign Affairs Committee, Mike McCall, said U.S. boots on the ground in Iran would be a game change and would need congressional approval. Democrat Senator Fetterman has said recently U.S. boots on the ground in Iran would be a red line. Where are you on this issue?
Yeah, I think the president has been clear that he does not put it this way. The
NVDA being
president
held at fucking knife point by the robbers that robbed Batman's parents.
Boots on the ground suggests to the American people that it is the beginning of a war like we had in Iraq and Afghanistan. So I think the president has to come to the American people and make a real case if he wants to do something along those lines.
And to get that uranium out, that's why they've said that they would put boots on the ground, because you want to be able to get to that uranium.
Yeah, so getting to that uranium may require like a lot of boots on the ground. And now you're starting to talk about a lot of casualties. I'm not sure the president has made the case convincingly to the American people. He needs to do that.
Senator, it's great to have you this morning. We so appreciate your time.
Thank you.
All right, thank you, Senator Bill Cassidy.
On China, it's a little different story. We're resetting the meeting, and it looks like it'll take place in about 5 weeks. We're working with China. They were fine with it. We're going to say, I look forward to seeing President Xi. He looks forward to seeing me, I think. But I do look forward to seeing him. We have a good relationship with China. China actually has become economically for us very good, as you know. It's much different than it was in the past. And we have a very good working relationship with China. So
Nvidia has no fucking volume right now.
5 or 6 weeks.
That's President Trump pushing his trip to China back by roughly 1 month to focus on the homeland and the conflict in Iran. U.S. Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer meeting with Chinese officials in Paris over the weekend, hammering out ongoing trade disputes and ensuring communication is maintained between the two sides, despite this pushback of the trip. Officials discussed a broad new Board of Trade with China, aimed at more closely managing the economic relationship while focusing on tariffs, investments, and the impact of this Iran conflict. Joining me now is the U.S. Trade Representative, Jamieson Greer. And Jamieson, it's great to have you. Welcome back.
It's good to be here. Good to see you, Maria.
Can you tell us a little about your conversations in Paris and this Board of Trade, what you're looking to achieve?
Happy to do that. Our conversation with the Chinese, they were very constructive, very cordial. Clearly, we have a lot of economic challenges with the Chinese. And part of the reason we're having these conversations at the direction of President Trump is to try to find stability and predictability for the relationship. The Board of Trade that you referred to is one potential mechanism of doing that. All of this will be subject, of course, to the leaders approving and moving forward with it, but it would be very helpful if the two sides could simply get together and talk about what are the types of goods we should be trading with each other, preferably non-sensitive goods, and preferably in a balanced way. We're already moving in that direction with the way our trade deficit with China is trending down significantly, and this is an opportunity to further find balance.
Jameson, let me get your take on where we are on the probes that you have been doing in terms of Section 301 tariff investigations, with 2 Section 301 tariff investigations opened earlier this month. The IEEPA tariff refund situation, people want to know more about. I know that China issued a new warning to the United States with serious concern, they claim, that international trade investigations in manufacturing in foreign countries could, quote, harm the country's economic ties. You recently launched these investigations into the Section 301 of the 1974 Trade Act related to structural excess capacity and production in manufacturing sectors. Give us more of where you are on that, given the statutory expiration of Section 122, that 10% tariff, which will expire in July. What specific countries, trading partners, are you looking at, and where specifically are the probes now?
So right now we have 2 investigations going on that we've initiated, and they're under Section 301, which is a statute that permits my office, the Office of the U.S. Trade Representative, to look at these unfair trading practices, make findings, and take action if necessary.
Shit
one is on structural excess capacity you've talked about, and one is about
my put is
labor,
literally at
sure
182.5
against importing goods made with forced labor. On the forced labor front, this covers 60 countries, 99.5% of our trade.
Honestly, dropped
with
$2
respect to
into
structural
fucking
excess capacity, this covers those countries that use a
Grand
lot of
Wizard
subsidies, produce way more than is required by global demand, and outstrip just economic, what's economically required by the market for goods. And the structural excess capacity really targets East Asia, South Asia, Southeast Asia, even a place like Mexico and the EU, where they have these giant manufacturing surpluses with us, and it's not necessarily for competitive reasons. So we've been talking to these countries already, and we'll get to the bottom of that and hopefully conclude these investigations in the next few months.
And you've got the forced labor 301 public hearing will be April 28th, and the manufacturing 301 on May 5th. Is it fair to expect that this likely could result in tariffs of between 10 and 25%, or is it higher than that?
Weird candle.
I can't prejudge the numbers, right? It's an investigation. It's a legal process. It's quite transparent. The way it will work is we'll have these hearings. People will submit public comments, and we'll be able to study the issue. And then at the end, we can take what's called a responsive action. That's a term of art. And the responsive action can be negotiate with the country, impose a tariff on goods, impose a fee on services, sometimes recommendations for other agencies to take action. So I think given how rampant the issue of structural excess capacity has been and how long it takes to resolve this issue, you will almost certainly see some responsive actions if the investigations discover what we suspect. But again, we'll go through the process, we'll hear from the public, we'll hear from the countries, and then we'll come out with our findings.
Are you expecting to do bilateral talks with countries such as the EU, in the EU, and Malaysia and India as well?
We are. So those countries are all subject to these investigations.
Volume growing,
maybe. Partners. We're so concerned about the United States being essentially the consumer of last resort, and all the goods end up getting dumped here. You have governments in other countries that provide massive subsidies that depress wages for their own workers, and so they end up having just way too much production than is demanded by the economics of the market. And so you get these huge imbalances that have grown over time. We had a $1.2 trillion trade deficit by the end of the Biden administration. Thankfully, it's trending down now thanks to President's trade policies, but that's what we're going to be focused on.
Well, it's interesting because in the middle of all of this, as the IEEPA tariff refund saga moves through the courts, you've got a shutdown of the Department of Homeland Security and Customs and Border Protection personnel working without pay. Has that had an impact on any of this, Jameson?
Well, I think it has an economic fallout, right? You don't always see one major issue, but as time goes on and operations at the border or TSA or travel degrade, that's not good for the economy. So obviously we urge the Democrats to stop doing their shutdown brinksmanship. If you look at our last quarter,
I mean, the candle and the technical analysis is trying to go on Nvidia, but the fucking volume isn't coming.
We would have been at over 3%. So
this is so weird.
The Democrats profess to love government and think that government's the solution to everything, and then they shut down the government. It makes it incoherent, but it can have economic fallout too.
Well, you also have the Democrat attorneys general and governors from 24 states filing their first legal briefs on March 13th.
If it breaks 1120 at some point, it's 3/3, but like the volume would come.
122 tariff. What do you want to say about that?
Well, they want the globalist status quo. They want the status quo ante. It's crazy because I have these situations where I've started these Section 301 investigations on unfair trading practices, and I have the unions like the AFL-CIO and the steelworkers putting out supportive statements. And on the other hand, you have the Democrats saying, no, strike this down and give the money back to all the corporations who are importing foreign goods made by foreign workers in foreign countries.
Oh my God,
it's totally topsy-turvy. I don't know why they want to give money back to all these companies that preference foreign goods above American goods, but that's what they want to do.
Everything dangerous as fuck.
I mean, look, you have other options, right, Jameson? And I'd like to know if you're thinking about those options.
SPX
for example,
is in the wedge,
Section
folks.
338 addresses unfair trade practices. It doesn't have an expiration date like the Section 122 does, and it has a 50% ceiling. Is that on the table?
Well, so any tool we have is on the table, and we're looking at discrete circumstances where each tool might be useful. With Section 338, it does require findings of discrimination towards the U.S. versus a third country. So it's not the panacea that some people might say it is, but there are definitely circumstances where it is appropriate because we know there are specific countries that treat the United States differently than they treat other countries.
Chopping at the algo range,
we talk China all the time. The president, of course, pushing back that trip. For about a month. We're in the middle of a war. No surprise that he is delaying that trip. What can you tell us about that? And I want you to know that our viewers have voiced real concern about China and its role in supporting Iran. So I'm questioning why the president is even talking about economic issues with a nation that has been behaving poorly. Here's Gordon Chang with me this week on this program. Watch this. We have been talking about this, and I raised the question in the last 2 weeks.
Market is fighting for its life.
Will this
what to
Iran
do?
war delay the president's trip to Beijing?
The president of the United States should not go to the Chinese capital during a war where China is helping the other side. Matter of fact, China's helping Iran so much that it really is an enemy combatant.
I was going to say, they're
instance,
fucking waiting.
military
Like, what the fuck are they waiting for?
Weapons, all the rest of it. Everything except for combat troops. So I think that President Trump's message to China is absolutely the right one.
Jameson, did the fact that China has been supporting Iran buying 90% of its oil imports, did that come out in your discussions in Paris?
Well, we can't.
Well, they're going to go lower because 1150
yes.
is lower than 1145 on SPX.
Days without talking about
probably
the war in Iran and all of that.
That's so weird. Why is it showing lower until 1150?
Iran buys a lot of oil and gas. China buys a lot of oil and gas from Iran. Iran depends on China as a consumer, so it's of interest to them.
On SPX and
China has been actually quite cautious vocally.
This is kind of rare too.
About Iran.
There's a mini divergence between SPY and SPX on the 1 minute.
There have been some conversations about the United States moving forward with Iran and making sure that China is not a hindrance to that. The president moving his
I don't know if this passes really or not, but
with
it means they're creating some unusual cycle
it wasn't
higher,
a negative outcome. It was something that we thought might happen because the president needs to focus as the commander-in-chief on matters here. So we flagged this for the Chinese before it went public. There weren't really any surprises there, and that's why we expect the meeting to go forward. And to the extent there are any discussions between China and the United States with respect to the war itself, I'll leave that to Secretary Hegseth and Secretary Rubio and others who are on that portfolio.
Well, we certainly do not want the commander-in-chief in Beijing while we are in the middle of a war
unusual
with
cycles.
Iran. But I'm going to take a break and get your take on what you said recently about the money going to companies
algo range at 1145 and then went higher until 1150, and 1150 is back into the algo range. There's something weird going on here. Not normal.
Welcome back.
Not normal. On SPY and SPX. They're about to go lower. I think this is going to break the 3/3. If this breaks the 3/3 and they break 1145, they're going lower for a minute or two because of the divergence in SPY and SPX here. Or they trap this shit into FOMC and I don't know, they figure it out at FOMC, but this is not normal. That's all I'm going to say. I don't know what the fuck that means, to be honest, that this shit is not normal, but all I know is this is not normal. So 1150 created an algo range on SPX. Yeah. I think it's more bear leaning than not. Bearish control by like maybe 20%, 70-30 bearish. There's so many bears here too. So if they trap this shit, they can literally go down for one candle, break this low, never break this, or some shit and come bounce too. Trapping everything in here. Be like, oh, we're still 1/3, 2/3, 3/3 bullish. Or they trap everyone up here. Nuts. Nuts. No MACD on Nvidia. There's literally no cycle happening here. Some insane cycle is building. Oh, excuse me. Volume trying to grow bearish. MACD RSI in bear territory. Nvidia is in bear territory, but trying to chop up, but not. Weird as fuck. Something humongous is cooking. It's already cooked. I need my phone charger. Where's my phone charger, bro? Well, my phone charger is gone. That's a problem. That's a problem. Where art thou? Dang. I gotta think. I'm gonna mute up for a second.
Back, and I am back with U.S. Trade Representative Jameson Greer from the White House. And Jameson, we've been going sort of in the weeds in terms of your policies, the president's trade policy, and I thank you for going in the weeds and talking us about these specifics. Let's go 30,000 feet up right now and talk a little about your goals and what has been achieved so far in terms of the president's trade policy. What do you believe has been the most successful outcome?
I think when we look at the trade policy, what we've done is we have flipped the direction and the trend in the trade deficit. Our trade deficit with China, I mentioned earlier, has gone down by 30% over the past year. And some people will note that Chinese goods can sometimes come in through third countries, and while that's true and we're focused on that issue, our trade deficit with the rest of the world since last April has gone down by 17%. So overall, it's going down. And when that happens, it means that we're making more here. Over the last quarter, we had huge imports of capital goods. So even to the extent we are importing, that profile is changing. It means we're bringing in capital goods, factory equipment, machinery, data center stuff, things that lead to production in the United States. Our manufacturing productivity went up by the most it has in years, and wages for manufacturing workers on the factory floor have gone up by 5% year over year. So all of this shows that the president's trade policy is accomplishing exactly what it wants to do. We're exporting more, we're making more, Americans are producing more things, and they're getting paid more to do it.
And the president has also made this such a priority and has used tariffs as a way to get corporate America to understand these are national security issues. I certainly appreciate what the president has been doing with regard to defense technology. He talked a lot about drones yesterday.
So that cycle, that little weird cycle diverge is cleared.
Getting defense contractors to pick up the pace
very
in terms of production here in America. What can you do to actually get that moving even at a higher pace?
Well, we're opening up a pathway for all these companies to make more in America. We're giving them protection in the form of tariffs on their goods. And the president is also making sure that these companies understand that to the extent government's going to procure goods, we want to buy more, we want to sell more overseas to our allies. So our defense, there's no shortage of customers for our defense industry. As I go around the world and do these negotiations, many of these countries, they want to get the trade deficit down. They say, well, we want to buy helicopters, we want to buy missiles, we want to buy aircraft, we want to buy satellites and all these things. And so we're out there selling for the U.S. We're doing things that will get the defense industrial base a lot of demand so they can scale up, which is really important in a time of pretty fraught geopolitics.
Yes, absolutely. Meanwhile, in terms of the questions around tariff refunds, you've said that the president's tariff refunds should go to the workers of companies requesting them and dole them out as bonuses or raises. The administration released a 4-step plan for companies to file for refunds, which they said will be sent electronically to the designated bank account submitted on the government-run portal. Jameson, what else can you tell us about those refunds and where you are on that?
Well, what I would say is we're just going to do what the court says. As I mentioned earlier, the Democrat attorneys general, they were really focused on winning this case and getting the money back to all these importers who are bringing in foreign goods made by foreign workers. These are companies, often U.S. subsidiaries.
I don't know what Nvidia is doing.
That get this
volume
money by
actually
law.
coming in bullish on
Democrat
Nvidia here a little bit.
For this, they knew this, they asked for it, and now they're the dog that caught the call because they're getting exactly what they want, is giving money back to multinational corporations, and now you have Democrats saying, well, I know what the law says, but they should somehow go to workers. I mean, listen, this is what they want, it's what they got.
This thing is such a hit or miss.
Is that if you're getting money back, you should be giving this straight to your workers in the form of a bonus or a raise. The tariffs were imposed to help U.S. workers and protect them. You know, you have the Democrat attorneys general who didn't want to protect the workers. They wanted the old status quo. But we believe that companies
who thinks they're going to fucking rise the VIX like crazy
should give those refunds if they get them to their workers.
Who thinks they're going to crush the VIX?
That's very good. Meanwhile, the IEEPA decision has no impact on Section 232 tariffs, right? That would be 50% steel, copper, 25% auto parts, trucks, 25%, 10% lumber, furniture. What can you tell us about these 6 open investigations?
Your personal opinion
with
to
regard to
FOMC,
commercial aircraft, jet
during
engines,
FOMC,
and
what's going to
drones,
happen?
wind turbines, and robotics?
Well, the Commerce Department continues to conduct these investigations. Our tariff program is really split into 2. One, we have specific, we had country-specific tariffs to help get the deficit under control and serve as negotiation in some of these deals we've gotten. And then we have the Section 232 investigations, which focus narrowly on the critical supply chains for metals, downstream technology, et cetera. So those are still open. At some point, the Commerce Department will close those, and they'll make recommendations to the president whether there need to be some kind of tariff to protect domestic production or whether something else is appropriate for that. The goal is to get those supply chains back here.
I'll tell you, you are doing such important work on all of this, Jameson, because I recognize these are all national security issues. You're also beginning reviews of the USMCA agreement this week. When I spoke with you a couple of months ago, you told me that it was likely going to be bilateral deals, U.S.-Mexico and U.S.-Canada. Of course, the president talked about this throughout his second term, but he did this deal in his first term. Discussions surrounding the security of North American supply chains there as well. What can you tell us about those negotiations?
Well, right after this TV spot, I'm going back to my office.
This thing is right at the middle.
Minister of Economy and his team. This week we are having our first formal negotiations with Mexico on the USMCA.
We have 8 people that voted rise.
We're having talks separately with Canada, but we've moved along with Mexico. Canada is behind on this. With Mexico, we're already at the stage of some formal talks. We're going to be talking about rules of origin,
said the VIX is going to rise,
which is
really
a term of art that talks about how much content in the goods that are being traded between the United States and Mexico are from United States and Mexico. We just don't want Mexico to become a hub for goods imported from
if this breaks this
Vietnam
level,
or China or somewhere else. If we're going to have some kind of a deal, it has to be a deal for Mexico and the United States, and the goods should be made up of content from Mexico and the United States.
Now, given the move in oil prices and some commodities like, aluminum or fertilizer, is this weighing into your decision-making right now, Jameson, in terms of where tariff hikes may land?
11.55, 12.
So less so on the trade front. The reality is the United States, it makes a lot of its own energy, it makes a lot of its own fertilizer, so there's less of a supply issue right now. Obviously, you have things like nitrogen fertilizer, where the price does depend on the feedstocks coming out of the Gulf. So that's something that I know Kevin Hassett and others are quite focused on. There are a variety of tools you can deploy to try to maximize production here and find additional sources and that kind of thing. You know, when it comes to a tariff or trade,
9 people said VIX is going to rise into FOMC is going to the VIX in their opinion.
And
9
frankly,
people
with
said
fertilizers,
rise.
we don't have,
One person said
we
fall.
haven't had tariffs on fertilizers for quite a while. But we're watching that very closely as a broader economic team to make sure that the farmers can get what they need in time for their various plantings.
Yeah, I know that Secretary Bessent
if you're talking about the top of the PPI candle right now, it might be a
increase imports of fertilizer and oil production via Venezuela, which certainly has had an impact. I want to switch gears and ask you your take on where we are with the Federal Reserve. I mean, we've got the Fed's decision, obviously, at 2 p.m. Eastern, and the president has said, look, the Fed should be cutting rates now and not waiting for this meeting. We're expecting the Fed to hold rates steady, with Jay Powell speaking at 2:30 this afternoon. And this is his first speech since the president nominated Kevin Warsh as his successor. Warsh's Fed confirmation hearing, however, appears to be on pause for the moment until this probe into Jay Powell is closed. I spoke with North Dakota Senator Kevin Cramer yesterday about it. And here's what he said when I asked the question. Watch. Is Kevin Warsh's confirmation hearing on pause right now until this investigation into Powell goes away?
Unless Tom Tillis has changed his mind or something has happened that would cause that to happen, it is. But unless we can get a Democrat to support, to support in committee, but I just think as long as we're at a deadlock, Democrats don't have any incentive to help. And I understand that. If I was in their position, I might do the same thing. But we do need Kevin Warsh as Fed chairman soon. So I'm urging Tom Tillis. I'm urging Judge Janine. I'm urging the president, anybody, to break the law.
I mean, the winter cycle on this shit is fucking deadly.
And have a markup and get him on.
Look at how the 3/3 coming in right now.
Jameson, what do you think? When do you think we're going to see a confirmation hearing for Kevin Warsh?
Well, I hope we see it really soon. I mean, this idea that Washington keeps getting in the way of prosperity is incredibly frustrating. This is not what the American people want. We need to have a Fed that's functioning. We need to have a Fed that's responding to actual economic data and developments, not a Fed that has an axe to grind against the president.
Time is 12:05.
We're in the middle of huge economic and geopolitical changes. We're changing the trading system. President Trump is going around cleaning up all these hot spots of conflict. He's clearing out authoritarians who are not acting in the favor of the United States. We're trying to fix all these things. And you have all this, frankly, petty decision-making going on in Washington. And it's not what the people voted for. It's not what the people want. And they need to move it along.
Jameson, it's great to have you this morning. We so appreciate your leadership. Thank you, sir.
Thank you. Have a good one.
And to you. Jameson Greer at the White House. We'll be right back.
Lucas, thank you very much. Lucas talking about the bunker buster. He mentioned it's fairly new. It's been around
Core
for about 2
line,
years.
baby.
Again, first, we'll see whether or not he was responsible for assassination attempts on President Trump.
Well, I won't comment on that intelligence, Bill, but certainly this was a known terrorist. And U.S. intelligence, combined with Israeli intelligence, our great partners in this effort, is the best in the world. And of course, this man is no longer with us here on Earth, and that's a good thing for the United States, and it's a good thing for the American people who have long been threatened by this rogue terrorist regime. We're now on day 18 of this operation, and some updated numbers for you from CENTCOM this morning. We've now actually struck more than 7,800 targets. More than 120 Iranian naval ships are at the bottom of the ocean, have been sunk by our great military. So the objectives of Operation Epic Fury have been clear from day one, and the sheer lethality and power of the U.S. Armed Forces is on display every single day as they continue to meet these objectives and obliterate the rogue Iranian regime and their ability to threaten the United States of America, our allies, and the Middle East.
Caroline, there was news yesterday when
core line,
but the news core line over at the DNI, a political appointee, said he could no longer stay in his job. He was resigning over the Iran war.
What the hell is this on the video?
So he had objections. When is the last time he saw President Trump?
Do something.
It's been a while. It's been a while since the president has seen him here at the White House. It's been a while since he's been involved in the process of the presidential daily briefs, and he's been actually present for the president's intelligence briefings.
Do your magic,
an
Coraline.
individual who was not involved in any of the discussions pre-operation and throughout this operation. I think the president views it as deeply unfortunate that this individual, who the president gave the privilege of working for the administration, put out this resignation on government letterhead with many falsehoods throughout, essentially accusing the president of being manipulated by foreign governments. That's laughable and it's insulting. President Trump has been remarkably consistent on this issue of Iran for many, many years. Long before he ever entered politics, he has always said Iran can never possess a nuclear weapon. So anyone who works here should be well aware of the president's intentions and his peace through strength agenda and his willingness to use the United States military to achieve peace if necessary, as we have seen throughout Operation Everfury.
There are some reports that the White House considered him to be someone who was leaking. And of course, that's obviously no good when you are at the White House. You don't want somebody like that in the administration.
I gotta run to the bathroom.
He was never fired over that. His boss, Tulsi Gabbard, the Director of National Intelligence, will be testifying this morning. Does the president still have full confidence in her?
He does, yes, and we look forward to watching the director's hearings today. And I think that anyone who has been suspected of leaking or is proven to be a leaker will not be welcome in this administration. I know that for a fact because I've heard the president say it myself. There are investigations underway into leakers in this administration, and people will be held accountable for that. It's unacceptable and it cannot be tolerated.
As you just heard, we told our viewers we're watching both of those hearings and they may make news, and we'll bring them headlines when they happen. On a truth that was sent out earlier today, 7:22 a.m. Eastern Time. I wonder what would happen if we, quote, finished off what's left of the Iranian terror state and let the countries that use it, we don't, be responsible for the so-called strait. That would get some of our non-responsive allies in gear and fast. President BJ2. Has there been any movement overnight on behalf of our allies that has softened their position about going through the Strait of Hormuz?
Not overnight, but the president and his team, especially Secretary Hegseth and Secretary Rubio, continue to be in touch with their counterparts in Europe and, of course, our allies in the Arab and Gulf region to step up and do more to help the United States in securing the Strait of Hormuz. This is to their benefit, more so than it is to the benefit of the United States.
Will the Powell make the market bullish or bearish?
We don't need the Strait of Hormuz for our energy here at home. For the American people, of course, we want the strait to be open for the global oil market and to stabilize prices and bring them down again.
Rich said only 47 likes. Hit that like button, folks. Thank you so much, Rich. Everybody hit the like button if you have not already. Thank you so much for hitting the like button. We are at 50 likes.
One of President Trump's guiding principles is fairness, and he has long called out NATO for being what he believes an unfair alliance for the American people, the American taxpayer, and our U.S. Armed Forces. You look at some of the trade deals with our NATO allies. The president has worked to renegotiate and reset those to make them more fair for the American people and American workers. You look at the fact that the United States has thousands of troops on our allies in NATO's soil. We're paying these countries billions of dollars, and our troops on their soil serves as a deterrent for them. And the president wants the American taxpayer and our American military to be treated fairly. He feels sometimes with NATO they are not, and he's right to call that out, and he's right to call on them to step up and do more, especially when reopening the strait benefits them even more than it does the United States of America.
Slightly lower than where we were.
The Department of Homeland Security remains shut down, and Mark Ray Mullen has his hearing. We're going to hear from him in a moment.
$1
there were reports that the Democrats have come forward with some sort of an idea or a deal to move forward. We're going to talk to a woman who works at the TSA in the next block, and I'm curious, what would the president want her to know about his attempts to try to get a deal done? And will we see some movement on that today if the Democrats put something that is reasonable?
Decision.
Well, unfortunately, we're on day 33 of this Democrat-led shutdown of the Department of Homeland Security, and they have been anything but reasonable. The White House has worked in good faith with Democrats and Republicans on Capitol Hill to reopen the department. We've offered them multiple binding and substantive offers to reopen DHS, including some changes to the way immigration enforcement in this country takes place. And they have rejected every single one of those offers. They've asked for concessions Republicans will give them a concession, and then they say,
you're
oh,
about
wait,
to see
that's actually
Dumbledore
not a real
versus
concession.
Lord
So,
Voldemort.
unfortunately, these are
You're about to
people
see
who
Harry
are not
Potter
negotiating in good
Dumbledore.
faith. You actually had a
You're about to see
Democrat
Harry Potter
lawmaker from
versus
Virginia
everybody. You're about to
yesterday
see
say
Goku versus
that this
Gary.
Democrat-led
You're
shutdown
about to
is,
see
quote,
Vegeta versus the
hurting the
world.
wrong people.
You're about to see
It's hurting the
genjutsus,
American
ninjutsus,
people.
and
More
all
than
the
100,000
above
workers
combined.
going without pay.
With
This is the
planetary
third time
destructions here and
TSA
there.
agents have been
So,
impacted
best believe
by a shutdown
this
over the
FOMC
last
about to
6
be
months
crazy.
because of Democrats
the
on
second
Capitol Hill. It's just
to last
despicable.
FOMC
President
of
Trump has been
Mr.
clear since
Powell
day one. Fund the Department of
in our
Homeland
history.
Security. Stop playing partisan politics
Forever.
with the American people's paychecks.
Okay, last topic here. The SAVE Act.
Best
It appears
believe today
inevitable
about to
that
be
it does not
crazy.
have the
If
60
it wasn't
votes in the
crazy
Senate.
already.
On that note, back to Truth Social, the president said this just yesterday.
And on that
he said
note,
the Save America Act is one of the most
I can't
important and
wait till he
consequential
comes
pieces of legislation in the history of Congress
On that note,
and America itself.
I
I will never,
celebratory,
ever endorse anyone who
excited
votes
outlook
against
on this
Save
shit.
America. Thank you
Wow.
for your attention to this matter. How big of a defeat would this be for the Trump agenda if it does go down the way we expect?
Well, Bill, I do think President Trump would reject the premise of your question that this bill is doomed to fail. He's fighting every day to get the votes needed to pass this country-saving legislation, the Save America Act, which has some of the most common sense proposals ever proposed by either party on Capitol Hill.
I already
Voter
said
ID,
what I
who could be
thought,
against it?
what I was
90% of
thinking
Americans
of
support
earlier.
it. No
If you weren't
mail-in
here
ballots,
for
which
it,
we know create
then
a
that's
tremendous
not
amount
on
of
me, I'm
fraud
sorry.
in our electoral system, with common sense exceptions,
But
of course,
I'm
for
not
those
here
in our
to-
military and others. No more
I said this 40
transgender
minutes
mutilation
ago.
surgeries for
No.
young minor children. Again, a 90% issue supported by the American people.
got on, you
No
got on.
men
If you
in
didn't,
women's
you didn't.
sports. And proof of citizenship to
My
vote.
mind hasn't
These are
changed
common
at
sense
all.
proposals that the President of the United States supports because he knows the vast majority of the people in this country support. And every senator on Capitol Hill, both Republican and Democrat, frankly, would be wise to vote for this legislation because it's in the best interest of their constituents and our country to do so. We're working with the Senate on this daily, and the President is a fighter. As you know, he's not going to give up the fight on this one.
Just going back to the start of the first part of that answer, are you predicting victory then?
I'm not predicting victory, but I'm not predicting defeat either. I trust in President Trump and his ability to wheel and deal with senators on Capitol Hill, and he's not given up on this piece of legislation, let me tell you.
Well, I admire the craft, Caroline. Very good at what you do. Thank you for being
Thanks for
here.
coming
I know
on.
you have a sober occasion this afternoon,
Caroline.
as you head to Dover. So our thoughts and prayers with you and all the family members that are hurting today. Thank you.
Ours too. Thanks, Dana.
Thank you. Be sure to like and subscribe for all the Fox News latest on YouTube and catch full shows streaming now on Fox One.
Oh, Coraline.
Not doing anything, because what we've learned over history, and we've talked about this unfortunately way too many times in the last 5 to 6 years, is that oil spikes and geopolitical events have very short-lived effects on asset pricing, both in the bond market and the equity market, and that if this goes on for not much longer, that ultimately the oil spike will get priced out of the energy markets, priced out of the equity market, and they've learned we can hedge around it. We can hedge short-term volatility, but we're not making fundamental moves.
I got 8 ways to go here. Folks, Alicia Levine is the queen of mathematics in the racket. I mean, there's no other way to put it. You and I are saying this is stochastic, and hedges are in place, but you have to re-hedge. What's your x-axis to where the re-hedge becomes problematic?
Look, you can't time this thing. We came into the world, right, sort of end of December, early January, saying it's going to be a raucous market out there. And in fact, it was. You know, the headline, let's just take the S&P for a second, was violently flat for the first 2 months of the year. But you had a 70% dispersion between the winning sectors and the losing sectors. And we haven't seen anything like that. Not pricing in a recession, but pricing in maybe a recession in some areas of the economy. And so the top line was flat. And if you hedged it, or if you took risk in different areas, you probably had a very interesting first part of the year. We had international vastly outperforming the U.S., and we had down caps, small and mid, vastly outperforming top line. So you come into this with a mix of vol. What did we find out?
51 likes, folks.
Starting March 1st. Well, actually, tech was up coming into today since March 1st. The S&P was barely down 2.5% coming in today. Gold was down 7% since the Iran strikes. That's weird. Okay, yields are up. It's a flattening of the yield curve. Not great for the financial sector, but global yields are up much more since March 1st. And then what that means is the rest of the world is much more exposed to the oil risk. And here in the U.S., it's about duration. We think you probably have underpriced all asset classes for the risk, but we also went to a place where saying, you know, at the beginning of this, okay, if this goes on for 2 weeks, the markets are okay.
But for the YouTube algorithm,
then we were like, okay, if it goes on for 4 weeks, the market. Now we're up to like 6 weeks, it's probably okay. And so the duration issue may not even be real.
Paul, moments ago, a 108.82. We're going to hit a 109 here in seconds.
Are you surprised that maybe, let's just take the U.S. equity markets, that they haven't sold off more?
Someone's about to get fucking hurt one side.
Impact from inflation on growth if this thing drags out a little bit more?
I'm shocked. I'm shocked, but I think the lessons from history, again, you know, we had Ukraine just 4 short years ago. We had COVID, not geopolitical, but quite a shock to the markets. You know, the lesson is, you know, these things get priced out. But I am shocked that we're not down at least 10%. And I think coming into the year, we thought we could have a year like that anyway, much more volatility. We were telling clients much more volatile year. You come in with a 22 times forward earnings, even if you have earnings up at 15%.
Even if something goes up or higher or
you
lower,
still have some vol built in.
But you don't appear Nassim Taleb. You're one of the few people I can ask this question to. Are we too sophisticated and oh so sure in our derivatives and hedging? I sound like Alan Greenspan. In our hedging and derivative apparatus, we've got this whole hierarchy now that leads to assured stochastic
Someone take a screenshot where we are right now before this shit happens.
Until
182.
Think of Liberation Day, and then 4 trading days later.
Somebody take a screenshot of all this shit before we head into FOMC.
Everything, the shorts that were put in place,
30 minutes after FOMC, while Paul's talking, someone just send that screenshot in the WhatsApp group.
The negativity.
Right. Someone please take a screenshot of this shit right now.
Crisis. Unless you have a credit crunch and a financial crisis, it doesn't work, and you have to be so acute.
Do you guys think there's going to be a huge fucking change?
It's rare to get that right. Some people do.
Do you remember
FOMC?
Like portfolio insurance?
We're not doing the poll yet. In like an hour, we're going to do it. But...
What is that? And now it's the Alicia Levine world.
I know. So.
I guess it's every FOMC though. There's so many fucking cycles and so
what
many
is your message then to your clients as you go out? I know there's a lot of demands on your time to talk to your clients about what's going on.
Look, we give it straight. I was
hypothetically
talking
speaking,
on
everybody
to your anchors on Bloomberg TV just now, saying like, I think that the reporting on the war is not fully giving us the accurate picture. I think it's interesting. I think for probably intelligence reasons, we don't really know what
only the minority are out there fucking just waiting and waiting and waiting and waiting. Hypothetically speaking, right now, I have no idea. I'm just saying, like,
I think that the panicins and the doom and gloom may not actually be how this ends. It's very attractive to be negative, and it's very attractive.
And went up and down, up and down, up and down, up and down for the last 1 hour.
Negative. I know I have to make money for my clients. Like, that's my job, right? And I don't get to just talk about it without being actionable. So clients do not seem this nervous. They were more nervous last year with tariffs, much more nervous. And we had much more, I'd say, more difficult conversations. This is not affecting people. The U.S. is energy independent.
This shit is unbelievable.
I just did a study yesterday, bring WTI to $85 a barrel for 2 months and tell me the effect on inflation and growth for 1 year after that. And the effect on inflation is 0.1 to 0.2%. And the effect on growth is 0.01.
Do you know that 82.6% of our audience totally disagrees with what you just said?
I know.
I mean, societal. I'm in this. I'm
nothing in the market. Everything in the fucking market literally is saying, it's so
crazy. We go to John Tucker now, surveillance, Hummer, hydrocarbon analyst right now. What are we paying per gallon?
Well, that digital light is like an ad all over the highways, you know, and it's close to $4 now. It's
Will your life change at $5 a gallon?
Well, I didn't buy the extra large Wawa coffee.
Gap up on SPY.
John Tucker there on the income and substitution effect. He is our surveillance Hummer. 32 gallons. You do the math at $5 a barrel. Moments ago, Paul Sweeney $109 on Brent crude. Alicia Levine, BNY, with our pulse.
Alicia, prior to Iran, I guess the trade, if you will, out there was kind of a rotation. We saw that starting in late in 2025, a rotation out of some of the growthier names or techier names into some other maybe cyclical areas, small and mid caps. Is that still a thing?
So I'm so glad you asked that, because we just did our monthly spotlight and we called it rotating rotation.
Okay.
I think tech leads from here. Okay. And I think it's very analogous to what happened going into Liberation Day last year, where the U.S. got smoked compared to the rest of the world. And actually, after April 9th, the U.S. outperformed for the rest of the year, but still woefully underperformed the entire year because you had so much in the first quarter. I think the dollar stays structurally stronger. Okay. That will help tech. And look what's happened to global yields. They've shot up. Mm-hmm. So for the rest of the world, this really does have to be over sooner rather than later. Yep. For the U.S., it's just relatively more insulated. Software's down 30%. Financials have been weak. There are places to shop now. There are places
but what does
to
it do to the fixed income space? I mean, I get it that we're protected, we're energy independent, but on fixed income, I mean, it's got to, at some point, Paul, I got to be looking. I got a 30-year up 2 beeps, 4.86%. Are we going to enjoy a 5% yield? And what does it mean for the Alicia Levine space?
Look. We've been focused our clients in the belly of the curve really for the last few years. We felt like that's a place where you could take advantage of Fed cutting, more disinflation, more or less, and you don't get really hurt further out. Some people think that we really have disinflation on the other side of this because you're going to lap it all. It's all going to be lapped. You're going to get year over year. It's going to look like a decrease in inflation, and you really have the deflationary effects of what's happening in the labor market and what's happening with AI. There is a proper debate about whether we have an inflationary world or a deflationary world. And I think that is a really interesting debate. So for fixed income, we'd still be in the belly here because I think just the supply issue on the long end is a complicated world for fixed income investors.
What do you think we're going to hear from our Federal Reserve here today? There are already a lot of folks saying between a rock and a hard place from the data perspective. Now they have to deal with Iran like the rest of us.
Right. So those statements are written 2 weeks ago.
Oh, okay.
And so the data from this morning, PPI from this morning, is not going to be factored in. It will be part of the Q&A, obviously, in the presser. Look, I think Powell's going to reiterate there's inflation in the system. There was inflation in the system before the Iran strikes.
He's come on and say good afternoon.
To be on hold here. And the question is, the data by definition is backward looking. And I think
he's going to say good afternoon or good evening.
Most people would think we
Everybody make sure you say good afternoon or good evening, whatever he says.
Probably no disagreement. And there'll be pressure on Kevin
Walsh. While you're at it. He's going to come on and say fucking Avada Kedavra.
Let's get to Kevin Green, who joins me now to get us across some of the data first and foremost before we dig into some of these headlines and these catalysts for this price action today. Factory orders data, KG. What are you seeing on that front?
So factory orders, we saw that coming in at 0.1% on a month-over-month basis. This is going to be for the month of January. That came in line with the street's expectations, and we did see actually a revision higher for the last print, which was previously 0.7%.
We'll do the poll very soon.
That got revised higher to
negative
0.7%. That got revised higher to negative 0.4%. So a slight improvement there.
Wherever you are.
If you're looking at factory orders excluding transportation, that increased by 0.4% on a month-over-month basis. We also saw that improved for last month as well. So durable good, excluding defense, coming in at 0.5%, pretty much matching what we saw for last month. So no deterioration. Seems like the market actually had it priced in. This is not going to be a headline mover, just given the fact that we do have a lot of other items that are kind of hitting the tape. A lot of data hitting the tape earlier this morning. But seems like we're holding up when it comes to the factory side or the industrial base here in the United States.
Yeah, something to keep an eye on. Obviously, I was speaking to a guest yesterday who seemed to think that U.S. manufacturing was one of the tailwinds, obviously, for the economy this year. So it's an important piece of the puzzle. But as you say, much more pressing things
stop
to
copying
look at
what I
today.
said.
First and foremost, that hot print on
metaphorically
PPI. I mean, more than doubling what the expectations were here. Just walk us through that. I mean, can we take any comfort in any part of that print when you look under the hood as to, when you break it down? Or, I mean, is this going to be really a headache moving forward?
Okay, so now I know who Hidden Hash is.
Yeah, this could be a headache moving forward. Actually, if you look at the last couple of prints for PPI, they did come in a little bit hot, but it was due to actually trade margins improving, and we actually saw a decline of trade margins, or just margins in general, declining over the last 2 years. So we saw a rebound last month.
I love
this
how you changed your name to the YouTube, and I love how
we're seeing headline PPI increasing by 0.7%
on
a month-over-month basis. Street was looking for 0.3%. Now, this is also a very difficult economic data point in order to estimate, but you did see also core PPI increasing by 0.5% month-over-month. Street was looking for 0.3% month-over-month. Now, there's a couple of components here. Services is continuing to move higher. We actually saw services
market really coming in with some
increasing by 0.5% on a month-over-month basis. Portfolio management fees increased by 1%. Brokerage and investment services increased by 4.2%.
Mortal Kombat action right now. We were here.
That kind of goes with the market that's very volatile. But even if you look at the good side of the equation, we saw an increase of 1.1%
imagine the
on a
amount of
month-over-month basis. Food actually increased by 2.4%, and this is going to be the big problem. The food component, especially if you're looking at PPI or even CPI, and just looking across the food basket,
I'm short-sighted on Nvidia. I did not leave in the morning, and I was done with
about a year or so. You're now starting to see those products actually catching a little bit of a bid. Fresh and dry vegetables on a year-over-year increase of 48.9%. That is going to be a problem. And if we continue to have higher prices because of inflation due to oil and energy, that will also translate into a lot of the other good components. And if it's remains sticky, that can also translate into the services component. So this is not a good print, especially for a day where the Fed's going to talk about the overall macroeconomic factors for the U.S. and the trajectory moving forward.
That's exactly right, and it's just about how people feel, KG, isn't it? I mean, obviously with those gas prices, the price at the pump, you know, obviously everyone's looking to see if we see any degree of demand destruction here, and then obviously if people go to the grocery store and prices are higher as well, I mean, that's really a double whammy here. So something to keep an eye on as far as some of that pass-through feed through to obviously what we see as far as sticker shock is concerned. Let's switch gears to the big story, which is driving a lot of this energy shock, and obviously the headlines out of the Middle East this morning with Iranian state TV or media saying that there's been an attack on an offshore nat gas field. That, as I mentioned, seemed to be the catalyst for what took us off the highs with the futures this morning. Just talk us through the details of that, how significant it is.
Yeah, so this is the South Pars natural gas facility. It's not only an extraction facility, but also a petrochemical and manufacturing site as well. Now, this field actually is being shared with Qatar, so that also provides a little bit of a different element within this space. And you did see gas prices as well as crude oil prices moving to the upside here. Now, at the end of the day, we did see Iran actually publish some potential sites that could be hit. We also have Saudi Aramco evacuating one of their facilities here, Samref refinery, due to the potential risk. Now, if Saudi Aramco does get hit, that would actually create a pretty decent problem, or a pretty major problem for the oil markets. We are still seeing a disconnect between the physical markets, which are trading around $135 to $150 per barrel overseas, and what we are seeing for Brent crude as well as crude oil. I'm not sure how much that disconnect is going to be able to last here, given the events that we have. So a lot of volatility. This will drive the equity markets as well.
Yeah, and it's obviously going to drive the policy update, no doubt, from what we hear from the FOMC meeting this afternoon. I think, you know, the markets are going to be hanging on to every word that Powell has to say, and I've been hearing a lot of commentary that he's probably expected to try to keep it as boring as possible, to try to reserve maximum optionality here as they really wait and see. But I think the markets are going to be just dissecting all that language to see where the emphasis lies here, given a lot of it has been on the jobs, but now you've got these inflationary pressures and the headwinds blowing very hard from the Middle East. Just talk us through the expectations for volatility this afternoon.
Fire!
Well, we're not expecting any type of rate cut, and I think the bigger volatility measure that you're going to see, or the item, is going to be the summary of economic projections. Are we going to see Fed members massively adjust their projections moving forward, especially when it comes to economic growth as well as inflation? Now, if we do not see a pretty decent adjustment and it kind of comes in line with the street's expectations, that could actually be bullish for the equity markets. But if you do see a major re-rating to the downside when it comes to economic growth, or a major re-rating up to the upside when it comes to inflation, that will probably provide us a little bit more volatility in this market. For Jerome Powell, I would be very shocked if he really tries to outline the policy path moving forward, given the fact that he may be ending his term as a chairman here over the next couple of months. And so that actually may be a little bit more bullish than bearish. I think it's the FOMC, folks. That's going to be the big headwind for this market. I just want to highlight last but not least, volatility is crushing here. We actually did break a pretty decent trend line to the upside that's been intact for a fairly long time. And so you could actually see volatility crush to around that 18 level before we start seeing that pick up here again as well. So I think there's a lot more tailwinds, especially post-Friday options expiration, than headwinds in this market if we're able to kind of hold in this news flow that we've seen on a minute-by-minute basis.
Fuck, we talking about
what? Good at being measured. I mean, last time there was a lot of no comment, but as you say, no doubt looking for questions about expiry on the video. I don't give a fuck. I have a good entry from yesterday too. Well. KG, really appreciate it. Thanks so much for joining us today and getting us across some of the price action.
My legs. They can eat my legs. Not my 2 legs. That fucking energy going, boy. I need that FOMC energy in my life. I need that Powell energy in my life. I don't know what I'm going to do without Powell. Man, the prediction market's probably wilding out on Powell too. What am I going to do without Powell, boy? What am I going to do without Powell? Or do I need Powell out? Because it's some fucking bullshit. Do I need Powell out for something more than this? Because this is sad. Did we do this last FOMC? I'm pretty sure we didn't. The thing was just up and down, up and down, up until FOMC. And then they popped it, or they crushed it, or something. They popped it. I don't remember. Oh. Noise. Bears are in control. Noise. But I would love Nvidia to actually show a red candle and stick it. Should I jinx it? Like, I would like a Nvidia to show a green candle here. Jinx. Why does the jinx always work against me? Never for me. Huh? I'm kidding.
Fuck, that's loud. Now on Micron ahead of earnings this afternoon. Joining us now around the desk is James Demmett, who's the founder and CIO at Mainstream Research. So James, what can we expect to hear from Micron? I mean, pretty high bar. A lot of analysts turning very bullish on this name.
Yeah, it's a high bar, and I think they're going to just jump right over it.
Yeah.
I mean, they've got, you look at their customer base and also where they source
Someone
their
said this is going to be hawkish, bro.
I mean, like,
bro, this is motherfucking American Eagle right now.
There's a 12-to-1 demand.
Right.
I think with
American
Micron,
Vulture,
it might even be more.
So
our expectation is they beat on the revenue, they beat on the earnings. And I think they're going to guide.
Oh, matter of fact, I have 2 ribs.
Than people expect.
Go get that. So I'm going to go get that before FOMC starts.
Holy!
What the hell? Lord Voldemort. Abracadabra.
I think if they came in and they
met
met expectations, that's probably not going to move the stock. But I have a feeling they're going to beat pretty significantly. And absolutely, the dialogue of the call.
Abracadabra. Lord Voldemort and his fucking homies. Lord Voldemort and his homies, the Death Hollowers, are coming in. They said, zoom, zoom, get that boy, get Harry Potter, boy, expel realmish, Avada Kedavra. They said, boy, boy. Clapped everything. Lord Voldemort. Lord Voldemort. Dr. Burt, no, fucking Darth Vader. The video, let's see it. Come on, Jetson. Come out with some stupid ass news, Jetson, in the video. They said zap avacadabra. Lord Voldemort 1, Harry Potter 0. Looks like, folks, Lord Voldemort 1, Harry Potter 0. Somebody unliked on me doing that. I'm sorry, but it is what it is. Please hit the like if you have not already, folks. Please smack the like button if you have not already. Alright, I am a Harry Potter lover. I'm a nerd. Alright, I love everything. I love life. I love boo-boo market. I love life. What can I say? Bearish control. 1/3, 2/3, 3/3. They're going. Oh my god. Look. Crazy cycle cooking on the crazy cycle. Nvidia bearish. Dr. Barry crazy. Nvidia just broke 1120. This cycle confirmed. They're gone. Nvidia crazy. Oh my god. LOD testing on SPY. Wow. LOD busting. Bust down Tatiana. Oh my fuck. I knew. Oh my god, I knew. But like, when was the question? But into FOMC, it looks like they're going down. Holy sh! Holy sh! Market came in with the Labubu. Let's see what happens off this. Market came in with the Labubu. LOD testing, LOD hoping, pivot point cycling at the floor. SPY, QQQ, probably IWM too. 6,700 calls fucking destroyed, looks like. The gap hope for now. That's why I wanted to sing. Like, I love singing. Alright, 3/3 cycle on. SPY. Alright, sorry, Nvidia. 3/3 trapping on. Fuck. Yeah. J. Powell. America #1 always. God bless America. Here we go. LOD cycling on SPY. Nvidia hasn't that way that much lower in the 3/3 cycle. Oh my, what the fuck? Oh my god is going on? They got so many bears and so many bulls on Nvidia. They truly cooking. Let's see, J. Powell. The finale, J. Powell is here. Today is March 18th, the second to last FOMC meeting we will get from this man. God bless America. Let's see what happens here. We just tested 665 again. I'm so good at singing. People hate me. But it be like that. It's all right. It's all right. It's all right. Hasn't even went up that much. The VIX.
Do channel checks with where they sell the product. Nvidia, a good example, or Apple or Microsoft, and nobody can get enough of it. And that's the kind of business you want to be in.
Yeah, I mean, it's sucking the oxygen out of the room, isn't it? I mean, just the demand, we're seeing insatiable demand coming from AI, and we've heard it from some of the South Koreans as well. But I mean, if you look across the memory space for some clues, Everyone's had a pretty good quarter, and they're looking at, a visibility sort of runway now of 2026, 2027, really locking in those long-term contracts. I think it's Western Dig that said, we've got hyperscalers locked in for years to come. How much visibility do they need to give into the future, do you think?
I think they're going to borrow from their customer base and just say, hey, look, the hyperscalers see no end in sight past 27. Nvidia sees no end in sight, which is
got the bull strap
comments from Nvidia. I think they're just going to rely on that, and I think that's enough. And I think investors here, our message to investors is, there's a little impatience with the AI trade. Some of these stocks haven't done anything.
This is the wrong cycle.
Just be patient here. These are value plays. Again, Micron trading at 13 times earnings.
Well, that's right. And, obviously a value trade, very cyclical in nature, this sector as well, even though they have got this sort of visibility for years to come now. But I'm just wondering if you're looking at this name and seen how much it's run up over the last year. I mean, all these ones on the screen here, you're looking at triple-digit percentage gains. Do you get into a name like this now?
That's a great question because people look at that, they get a fear of heights.
Yes,
it's just gone too far. And I think that, reflecting on history, looking at how super
they done got the candle traders today yet again.
There's precedent for this.
Oh my fuck.
Triple and then triple again. And we saw that in the last big super cycle technology wave of the 90s, where Cisco tripled a number of times. And investors were better off, even buying it on a pause. And I think that's really the question here. A lot of these stocks have paused. Micron's trading range for 6
both ways till then, though.
You take that pause and you add to the position, and maybe leave some powder left over to buy it some more.
Yeah, and obviously just to leave with Nvidia, obviously we've seen this sort of range-bound trading action for most of the year. Just wondering, in light of everything we're getting from GTC, I mean, up in what is otherwise a pretty much down market today, how you're thinking about this name, because they've given that visibility into 2027 now, but the markets still seem to be a bit hesitant, maybe because it's not just a chip company anymore.
It went down so little.
I mean, what is that? Why is the stock traded sideways for 4 months, and and the CEO tells us, wow, things can't get better, and they're sold out for the next year and a half.
Right.
And there's a bit of concern around potentially is there competition, and we would say
these
the
fucking
whole
rocket
AI
cycles though in Nvidia.
Rocket is a value play.
Rocket.
Trading at 21 times growing at in excess of 50% a year. I think investors need to do one thing they're terrible at, which is just be patient and own the stock. I think it's going to do great by the end of the year.
Always appreciate it, James. We have to wrap it up there. Thank you so much for joining us. We'll be watching Micron reporting earnings this afternoon, and a great preview. Thank you very, very much. All right, James Demmett there, founder and CEO of
2 minutes,
Main Street
2 minutes,
Let's
the fuck,
Micron
2 hours
with
until
Tom
power
White,
comes
host of
on,
Fast
folks.
Market. Very
At
good morning
about
to you, Tom. All right, walk us through the approach
we will
here
do
for Micron ahead of these earnings.
in your personal opinion,
James said they're probably likely to clear
actually, shit, we'll do it right now. We're near the LOD. Right. In your personal opinion, when Powell comes on, the market will, based on Powell, go bullish or bearish. It's a simple question. Personal opinion, nothing really
portion of the PE continues to explode to the upside here. The option market pricing in about a plus or minus 7% move in the stock post earnings. That's plus or minus $32 or so. So I look at this, maybe a little bit more conservative, not aggressively bullish. If you think the stock's going to go higher or at least consolidate. I looked in the March 20th monthly options that expire in just 2 days, and I'm going to sell an out-of-the-money neutral to bullish put vertical. I'm going to sell the 435 strike put, and then against that buy the 425 strike put. So a short $10 wide, neutral to bullish put vertical. You're going to collect roughly about $230 credit on this one. That's what you can make on it, $230 per spread, with about $770 in risk. Why do you have more
I think he's going to be
risk
dovish as fuck.
Potential reward
So
on this?
dovish
Well, you've got
bullish,
a probability that that
hawkish.
short 435 strike will be out of the money at expiration of about 72% at this point. So you've got that higher probability of success. If you collect that 230 credit, takes your break even down to 432.70 over the next 2 days. That's about 7% below the current share price and about that 1 standard deviation move that the option market's pricing in at this point. So while it might be passive, it's still directionally bullish. You profit if the stock goes higher post earnings,
They keep saying that word. We're at the top.
Where it is, or even goes lower, but remains above that break-even point. So maybe a higher probability of success, because anything can happen in earnings, even if it's a good report, good guidance. We could see a pullback on some profit taking. You never know on a name like this one.
Had such a big run up to this point, hasn't it, Tom? Sitting up 1%, so looking good. A nice setup ahead of this earnings report. Thank you so much for walking us through an example.
2 people voted bullish. We have 8 people that voted bearish into Powell. When he comes out, he will come on in 2 hours. It's not even close by. It's not even close by. 1 hour and 45 minutes he'll come out. This is still bearish. The RSI didn't reload that much, but 1245 rejecting. Sorry, 1240 rejecting into 1245. Went up into 1242, 1240. 1240 rejection to 1245 trying.
Insights on the overall market and more, and we got the perfect guy for that as we welcome in our first outside guest here, Chris Vermeulen, founder and chief investment officer at The Technical Traders. Chris, happy Wednesday. Good morning to you. Right on the screen here today, but trying to fight back just a bit. Talk to us about your overall market, thesis and what you see right now.
Sure. Yeah. Morning, Alex. Yeah, there's a lot going on in the markets. I mean, we have been seeing really the S&P 500 and the NASDAQ, they have been trading sideways really since the October highs. It's been 6 months of a pretty stagnant U.S. market. Money's been flowing kind of internationally. We've seen the Canadian Stock Exchange, emerging market equities. We've seen Korean stock market moving higher, but the U.S. equities are just struggling to get some traction.
And they're showing like a fucking 5% that they're going to run into 669, but what if they do? They tried everything down here. Oh my God.
Precious metals in February. We've got now spiking oil and energy stocks at all-time highs. These things generally are a sign that there's chaos, there's uncertainty, there's risk. And I think the market is trending it off fairly well at this point, but I do think the market is running out of steam from a technical standpoint. When you look at the price on the charts, prices has more or less stopped going up when it comes to U.S. equities. It's actually trading sideways or actually starting to downtrend. So
V down.
We need to be aware of that. And money, which is kind of stuck in the markets, is looking for safety. And precious metals, as you mentioned, gold is down, silver's down today, the dollar's up. We are seeing broad market selling across the board, and that brings even safe havens down like precious metals. But utilities have been holding up fairly well over the past month. And when utilities outperform dramatically compared to the S&P 500, like we're seeing right now, is what we saw just before COVID crash. We saw just before the 2022 bear market, the little bear market we had there, the February tariff sell-off last year. So there's a bunch of short-term signals here telling us I think the market is about to take a little bit of a correction, which is not a bad thing. The market needs to breathe, right? It needs to correct, get rid of, put a little fear in investors, cleanse itself before it might want to find some new traction. So the markets are struggling, and we've been out of the equities for a few weeks here, waiting to see which way they want to go because we don't want to hold an asset that's going down in value at the moment.
Chris, I love the call out on utilities outperforming, particularly when you compare it to things like the IT sector, for example. It can be indication. There's so many, as you know, money managers out there that have mandates that require investment at all times. They can't go to cash, as you're mentioning, or get out of equities altogether. And reducing beta is technically their way of becoming more risk off, of which utilities largely fit that bill. Now, my question, though, and this is always the dangerous question, is this time different? The reason I ask that is we have all these stories and
people voted bullish
and thoughts and things going on around this need for power and these huge build-outs in the utility space. Is that clouding that messaging just a little bit?
It could be. I mean, we never fully know what causes the markets to move, right? It's usually hindsight 2020. I follow the money flows. I see what's going on, but there's definitely going to be obviously some infrastructure. We're going to see probably power systems probably helping boost that. But in general, we are seeing it's not just utility. There's a lot of different things moving around that is kind of warning us that I think there's some risk getting priced into this market, and money's looking for safety, as you said. But there's no doubt the infrastructure for electricity is I think maybe helping juice up the utility space a little bit, but I don't think it's a main driver of it. I still think we're seeing mass money flowing out of speculative pockets and sectors, and we are seeing it go into dividend stocks. So we're seeing it go into utilities. So it's not just the utility space. We are seeing safety into more generic, safer investments from that angle.
Chris, I know you co-authored a book by the title of Asset Revesting, and it's also a strategy you like to implement, tying in your general market assessment with some sort of go anywhere, active, kind of trade strategy insights. How are you approaching this ever-changing dynamic marketplace we find ourselves in?
Yeah, well, I mean, the whole strategy around asset revesting is adaptive capital allocation. So it's all about, I don't believe in holding an asset class that's going down in value. I'd much rather just step aside and look for something else, right? So we never know when there's going to be a big correction that could last a year or longer, or some severe correction. So we step aside, which is why we're on the sidelines for
like button,
equities.
Folks.
We got out of precious metals and silver hit about $113. And so we're looking for where the next low risk, high opportunity play is. And believe it or not, there's not always a great play right now based on all the chaos in the Middle East, headline driven swings in the markets. We see cash as a position right now. We've sidestepped everything. We're just waiting for a new setup. We might get long equities.
Today's a very important
we could get long
day
precious
FOMC.
metals again.
It's very
but
not
right now we're
serious to
sitting
be so
in a
biased
cash
on
position,
something
which a lot of people
with no
don't see
fucking
as a
facts
position. But believe it or
Just
not,
like every
it can
day.
be one of the most
Today's even
powerful
worse
positions
FOMC,
if the markets go into a
clearly
bigger
market
correction,
chop
right?
for
And
1
then you got
hour
all
on
this dry
that.
gunpowder
Clearly
to
alone.
move into whichever asset builds us a new chart pattern that shows us that it's trending higher. And the U.S. dollar, I think, is one of the plays to be. I'm based in Canada, but overall, I want to hold U.S. dollars because, as you mentioned earlier, we're testing that $100 mark for the U.S. dollar.
It's like very fucking easy to say, oh, look at that. Now the candle's fucking bullish or bearish. Oh, now look, ha ha. Now the bulls won. Oh, the bears won, ha. But like while it's happening, it's actually mad fucking hard. So easy to say once it happens, but
there is like a 10 to 20% upside
once it's
move
going
in the
on.
dollar index. And so, obviously, I would like to be long and benefit from that as an international trader. I don't want to hold the Canadian dollar. I want to hold the dollar because it's going to go up a lot higher and be able to take advantage of a cash position that actually can benefit with some pretty big gains that a lot of people don't, realize sometimes.
Chris, really good stuff. I appreciate the insight. As always, you have a great rest of your day.
Get this damn fucking live stream started. Crazy. Why is there no video saying there's nothing expected?
Welcome back to Morning Trade Live. It's time now for the big picture, so let's welcome in Joe Zola, head trading derivatives strategist over at Charles Schwab. Joe, good morning to you. I suppose higher oil, hotter than expected PPI will do it for you today, seeing a pullback in stocks. Just walk us through your thoughts.
Yeah, stocks got hit with a couple of whammies this morning, didn't they?
Whammies.
So, you saw Brent oil push above 108 off the news that Iran says, hey, the rest of the energy fields out there, they're fair game now because of, kind of the bombing that we in Israel have done within Iran. So, you saw crude oil push up, like I said, 108, and then WTI, I believe, is what, 98 and change now. So we're very similar, or we're back to similar levels that we saw just a week ago before the bit of a pullback. You add to that inflation risk now on the rise, and remember, Sam, that PPI not only did it
the letter gets released that too, but nobody really cares.
The month's oil spike. So you
everybody waiting for that 230. Everybody waiting for that Jerome Powell. Good afternoon.
Higher, and like I said, none of those data included energy prices, and What I think is the most important thing, what probably markets keyed on, is the fact that the components that pushed it higher, those are the ones that feed into the PCE. And remember, it's the PCE that's the indicator that the Fed has chosen to key in on. And with the Fed meeting today, nobody's expecting any moves, but we are expecting maybe some follow through in terms of the communication around what the Fed's looking at short term, long term. What that means for inflation break-evens and how they're judging this. Is this transitory? Is this something that we need to keep an eye on further?
Transitory.
I think that messaging is going to be key, and no doubt we're all going to be sitting here, picking apart every word that comes out of Powell's mouth this afternoon. No doubt there's been a lot of conversations around the fact that he's expected to basically send this message, keep calm and carry
transitory.
On. Really try to reserve optionality here. I know that is the view, but what are you watching out for specifically in that messaging?
Well, we'll get the dot plots too, right? So that'll give us an indication of where the rest of the Fed governors see inflation, GDP, through the end of the year and then through next year. So I think that's the key component. Remember last week we saw GDP basically halved in terms of Q4. So it's going to be a bit of a dicey time for them as they're kind of trying to digest all these different variables that are coming at them in multiple directions. And remember, we still have the tariffs to kind of feed through the system, and now you get this big jump of 50-60% in energy prices, and it's not just crude, Sam. It's going to make its way into chemicals. It's going to make its way into fertilizer. All of this stuff it will have an effect on the economy. It's just a matter of how fast and how long. And I think that's what the Fed's going to try to determine, and that's what I'll be listening to specifically as they kind of parse through that and provide their projections on whether or not this is a 3 to 6 month thing or whether or not this is something that is pushing forward through the end of the year. And if you look at betting markets, or at least in terms of kind of how markets are pricing in rate cuts, they're maybe one at this point. It was only a month ago we were 1 to 2, and now we're maybe 50-50 on one total.
Yeah, we've certainly seen the markets backing out their rate cutting expectations throughout the year. So lots of questions, no doubt, that will be thrown at Powell this afternoon. We'll be watching. But as far as these markets and where we stand, you can credit them for being really resilient. In the face of a lot of this uncertainty. And, as I was speaking to John Kosar about with his Asprey 6, energy still seems to be the key hedge here. And I know you've highlighted that in your notes as well. Just walk us through that.
Yeah, I really thought your last segment was great in terms of his data and what they're looking at it in terms of the sector analysis. I think energy is a hedge, and I think it should be something that investors look at in their portfolio as something to continue to add to, because you're not going to see sector strength all the way through.
It's transitory, bro.
Utilities that have driven it. Yes, we've had a nice little rebound in tech the last
it's
last
transitory,
few days or so,
bro.
Overall, if you look at sector strength, one of the things that I tend to look at is percentages of stocks above their moving averages. There's only two sectors
this shit is purgatory.
with 50% or more above their 200-day moving averages, and that is utilities and energy at this point, just because of the drawdown that we've seen in the S&P. Now, what's really interesting,
That's
Sam,
what people
is
are saying online on Reddit.
Level,
this shit is
right,
purgatory.
At the index level, it doesn't
up
seem
or
like
down.
it's been that bad. 3 or 4, maybe 5% by the time we're done with today. But underneath the surface,
Lord.
and this is something that I know we continue to point out, Ed, whether as my colleague Liz Ann and myself, we look at that churn that's below the surface, and that's where you've seen some pretty decent drawdowns, 25-30% with some of the stocks within the S&P, and then even more so in the NASDAQ. So, equity leadership remains narrow. I think you want to have maybe a little bit overexposure to energy. I do understand that there's a lot of volatility attached to that, right? Because those prices could snap back very quickly if there's any type of a truce. But just kind of given what we're seeing right now, maybe adding a little bit more exposure to that, maybe pulling back a little bit on some of the higher beta names. That's what the market's doing. And I think that's probably prudent for investor portfolios.
Any thoughts on what we're seeing as far as technology is concerned? Because as Liz Ann also points out very frequently on this show, you cannot be monolithic about this sector. I mean, on a day like this where you've got Nvidia up and everything else is basically down, all but the Chinese ADRs, no doubt benefiting from some of those stories. I mean, Jensen Huang coming out talking about H200 orders, also talking about OpenClaw being the next ChatGPT. I mean, that's been certainly interesting as far as some of those Chinese companies capitalizing on that. Just walk us through how
That's
you're
what they're
thinking
saying
about
online, bro, not
that
me. I'm
story.
just saying.
I mean, line of GTC and anything else that really stands out to you in this market right now.
Yeah, I mean, where you are seeing strength and continued strength, at least the last couple of weeks, you've seen in the software industries and sectors, you started to see it. Well, it continues in memory, right? I mean, that's true with Micron up over 50% year to date.
Today.
We're going to get some important numbers after the close with Micron earnings, and just, you know, their expectations. I mean, look, they're expecting record revenue of $19.77 billion. That's up 146% from the $8 billion that they printed last year at this time. So, you know, markets will be keying in on that, and I think, you know, kind of heading into that, Micron probably is pricing in somewhere around a 9 or 10% move. I mean, this is on a stock that's trading north of $450, so big moves priced into that. I think you need to be selective within the technology sector. As you mentioned, I don't think you can just look at the Mag 7 anymore. I think you need to find other winners. And here's the good news, right? If you are a stock picker,
because you're scaring people away, bro, and you know what you're doing, and you're being
somebody that's looking maybe outside of the indexes for those certain pockets of strength.
I don't want to argue with you in a public chat, man.
And you know,
either like it or you don't, but I'm not going to sit here and
go
over it every single day with you.
Yeah, the next catalyst obviously being Micron, as you mentioned, sitting up just fractionally in trade today, but a lot of focus, a lot of analysts turning more bullish on the memory space as well. Joe, really appreciate your thoughts this morning. Thanks for breaking that all down for us.
Like, I have no fucking time to fuck around on FOMC. I don't really care. Today's FOMC. That's what I care about. I don't know. People are so distracted on price level and this and that and bias, this and that. I really care about reality. Reality says FOMC is happening in front of my fucking eyes today. I don't give a fuck about nothing else except reality. Reality says FOMC is fucking today and not about another day or tomorrow or the day after that or the future or what hasn't happened or what might happen. I only care about what has happened, what is happening, and what is the fucking real direction. Oh my god, the Bears are in control, folks. Bears are in control. And I have a fucking dog shit fucking put into FOMC on SPY. I've been in for a long time, like literally $300 max, but I'm still in. They won't hold this shit into FOMC, one tiny ass fucking put. I used to do big on FOMC. Like, I used to do like 3, 4, 6K on FOMC while it's live, but like, I'm not doing that shit at all. I am comfortably where I'm positioned, where I'm at with Nvidia. Things are A-OK. A-OK. 1/3, 2/3, 3/3. Time is 1:05 and 10 seconds. Damn. Surely LOD breaks now. I mean, they ranged the crap out of the thing here. They can break it later. That's wild. $1 p.m. rejection coming in. Fucking crazy. Don said red Kamehameha. Is it? Or is it just 1 p.m. doing what it's doing after all the fucking things is built? I said 40 minutes ago, one side about to get fucking hurt crazy, and like, I didn't expect this shit, but like, it looks like they're burning the fucking bulls right now with a double rejection from where they were. So they don't even need to bounce, they don't even need to go lower. If they just chop here or stay here, that would just burn every fucking thing off right here. That would literally burn every fucking thing off right here. Anything above 182 fucking cooked on Nvidia. Bears are in control. Big cycle. If they break 1052, I mean, this shit is fucked up here, but FOMC maybe. Rate cut decision. Here we go. It's crazy how fucking crazy they're showing bearish. I'm not gonna lie. I've been in a moment where they show crazy bearish on PPI, and then something happens, and then they go back up. I'm not saying it's gonna. It doesn't look like it's gonna fucking do it today, but I'm just saying, like, I don't think it's gonna do it today because of FOMC. But like, I mean, fuck, it's so fucking nuts. I still think it's LOD's gonna break, to be honest. But yeah, that is crazy how. You gotta imagine everything burnt on this shit, and now there's like a 10-15% possibility, 5% chance maybe. There's no cycle confirmation here, just bounce off of one. I don't think it's gonna go back up. I think it's gonna stay down here. I think it's gonna chop here at the minimum, but like, yeah, I don't know. Maybe when power comes on, something will change. Bears are still here on Nvidia.
Welcome back. Apple's head of home hardware, the latest high-profile executive to leave the company for a rival. Our Mackenzie Sagalos has more on the growing concerns about a talent exodus in today's Tech Check. Hey, Mackenzie.
Hey, Carl. So Brian Lynch had been leading hardware for Apple's smart home display, which has been delayed multiple times because the Siri redesign still isn't ready. Now, before that, he ran engineering for Apple's self-driving car project, which the company scrapped in 2024. So this is deep institutional knowledge tied to two high-profile efforts that never shipped. Now walking out the door to Aura, the smart ring company that competes pretty directly in health wearables and has been systematically picking off Apple's talent. The chief medical officer, a key designer, now is top home hardware executive.
That would be good.
It's also the latest in a run of high-level departures. Over the past several months, Apple's lost AI chief John Giandrea, a key design executive, Alan Dye, its top lawyer, and in December, nearly lost its chip chief before a retention deal reportedly kept him in place. And this all comes as Apple turns 50 on April 1st. This
Emperor
is a
Powell
company
Palpatine, you heard it here
that
first,
spent
folks.
billions of dollars on a car that never shipped, launched
Lord
a Vision
Sidious
Pro that's largely
Palpatine
struggled to
Powell.
find a market, and is now reportedly betting big on a new generation of AI hardware that mirrors the family of devices that Johnny Ive, who was integral to the DNA of Apple's success, is now working on over at OpenAI. And perhaps the biggest overhang here is the fact that Apple still has to deliver the Siri and AI overhaul it promised and has already delayed for over a year, the same overhaul that's held up the smart home display that this departing executive was supposed to be building.
Fascinating just to see this leadership reshuffle not just play out at Apple, but across software as well, much of it being due to what we're seeing from OpenAI and Anthropic. Mackenzie, thank you for bringing us that story. It's Mackenzie Sagalos.
Give me a triple down Nutella dip on SPY, man. Come on.
Now take a look at
Too late, pal. Will it be too late, pal?
in Iran and bring in House Foreign Affairs Committee member Congressman Darrell Issa. The Israelis have killed Iran's intelligence. Let's get back to the operation in Iran and bring in House Foreign Affairs Committee member Congressman Darrell Issa.
Save America.
The Israelis have killed Iran's intelligence minister. They killed him in a precision strike. To me, this seems like good
Emperor
policy.
Decapitate
your enemy. What say you?
Well, it is. Since World War II, we've clearly understood
Emperor
that if you eliminate the leaders, you create
Palpatine.
the opportunity for negotiations that don't exist. For 47 years,
Dark force is too strong in you.
Leadership and realized that it didn't work. So President Trump and our allies clearly understand that we have to change the top of the regime if we're going to change the direction of this regime.
Emperor Palpatine, I believe.
There's an article in the Wall Street Journal today which goes really in depth about what the Israelis are doing. They're literally
Emperor Palpatine, I believe in you. Just fucking do it. 180 me out, please. One time, Zap Zap.
That opens up the door to a local revolt, which President Trump is trying to encourage.
664 Lord Sidious, one time.
Stuart, I think it does. And look, the Iranian people, both the ones I work with,
there's a divergence at the floor, divergence at the floor, divergence at the floor, LOD divergence.
Have wanted a change. They've wanted the freedom. They've wanted what their neighbors, the Gulf neighbors are getting from their oil wealth and opportunities. So, yes, give them a chance and they will revolt. They've tried before and they've been killed on the streets. This may give an opportunity for them to succeed.
Bears are strong.
Listen to what President Trump said about NATO refusing
Darth Vader is strong on the Qs right now. QQQ technology, Barish.
NATO's making a very foolish mistake.
More than SPY.
I've long said that I wonder whether or not NATO would ever be there for us. So this was a great test because we don't need them, but they should have been there. So everyone agrees with us, but they don't want to help. And we as the United States have to remember that because we think it's pretty shocking.
LOD divergence.
Do you think it's too late for the Europeans to turn around and realize that they're wrong, offer some help?
It's not too late. The fact is, any country that has the ability to demine or help from a defensive standpoint is free to do so right now. The fact is, we need the help in the Straits. They've got to be willing to take the risk that ships have in there. But we're there to protect them. We're not asking for them to come in and fight the war for us, but to join in support for their own best interest, particularly with their need for oil and natural gas. They should be doing it.
They didn't even have to break LOD. They just chop in here and they destroy everything up
France
here.
And Germany. They have large Muslim minorities which object to taking any action against any Muslim state anywhere in the world. So they've got to look to domestic politics before they can help us. That's a consideration of theirs.
Alfonso said doubt it. Are you doubting Emperor Palpatine or are you doubting what he said?
They're looking at a subset of that Muslim population. They're not looking at the Arab states that are being attacked by Iran and being terrorized by them.
Emperor Palpatine said
effect on Muslim
the motherfucking LOD divergence cleared. He said galactic power. He said galactic consolidation. He said galactic electric lightning. He said galactic Yoda.
In Britain, in France, and others, they'd be seeing it that way rather than looking at a minority of the minority.
Congressman Darrell Issa, thanks very much for being with us today. Always appreciate it. Thank you.
Thank you,
Off the consolidation range. That's what I'm talking about. This is Darth fucking side of the Force. This is that Lord Vader power. Force choke. Hypothetically speaking. Star Wars references. 665, here we are. Market squeeze lower. Burn every fucking 0 DTE fucking bounce up here. Into Powell. Emperor Palpatine. Damn. Someone said execute order 66. That's crazy. I would not go that far. Our Jedi masters got our respect. That's crazy. I really want to play that music, but I know people are going to get pissed off and leave, so I'll play it mentally. Down now, down now, now, down now, now, down now, now, down now, down now, down now, down now. I'm leaving one more candle here on SPY. Yeah, but this is crazy. cycle they did today. I'm watching this shit on the 2-minute right now in the video right here. Down now, down now, now, down now, now, down now, now.
And we're starting with this, the latest on Operation Epic Fury.
Damn!
This is what happens when you don't want to negotiate. Israel unleashing fresh strikes.
America, boy!
Terror proxies in Lebanon. As
Israel, boy!
Retaliates targeting with dangerous cluster missiles.
Yep, let's go to Chief Foreign
Building
Correspondent.
gone! What building?
As Israel reveals it has taken an Iranian official. Trey.
Yeah, hey guys, good morning. A senior Israeli official telling Fox News that Ismail Khatib, Iran's intelligence minister, was killed in a precision strike overnight. Khatib was responsible for managing Iran's global cells, these sleeper cells in countries around the world that even threatened U.S. politicians and President Trump. This official says this man had blood on his hands, American blood. They go on to say that Khatib was actually the only person to survive the opening round of strikes in Operation Epic Fury that killed Iran's supreme leader. Those 40 officials killed in around 40 seconds.
Supreme
All
Taco
of this taking
Bell
place as we're tracking new incoming fire from Iran. Overnight, missiles soared through the skies of central Israel. Some of them intercepted. Others had cluster munitions on
Iranian
top. And you can see in this aftermath
Taco
video here,
Supreme.
just outside of Tel Aviv, flames
Deleted.
spewing from a parking area
What
beneath
Taco
a building
Supreme?
around the central part of the country. 2 people were killed in the area of Ramat Gan. We just returned from that site where we were interviewing a
Man, we are
military
in the
spokesperson.
3/3 cycle
A
here.
significant amount of damage to apartments there. All of this was taking
Does this
place
thing
as the
fucking bounce
Israelis
here or
launched
what?
a fresh round of strikes
LOD
against
with
the
no
Lebanese
cycle
capital of
confirmation
Beirut,
bounce
going
in the
after
video
Iran's
rolls.
largest proxy there in the
Oh
Dakhla
my,
neighborhood.
it's looking
These
like
strikes
Nvidia
took
trying
place
to roll.
following
I'm not
new
gonna
Hezbollah
lie. I
rocket
can't
fire
believe it's doing this for the fucking third day in a row,
central and southern Israel.
actually, this is like
You can see here the strikes in Lebanon that took place overnight, and the aftermath video there in Beirut. An entire apartment building was taken out in one of those strikes. Now the Israelis are not just striking Lebanon; they are also striking Iran with a new wave of strikes today. And we know that yesterday the besieged forces, this wing of the IRGC, were targeted there at their checkpoints around the Iranian capital of Tehran.
It's so nuts.
President Trump was asked
Never
yesterday
have I
about the threat
ever
from
in my
Iran.
life
Here's
have
what
I
he had to
seen
say.
Nvidia do this shit 7 days in a row.
They've been a threat for a long time, but they've really been a
with no
threat.
fucking break
If
whatsoever.
I didn't terminate Obama's
No break
horrible
whatsoever.
deal that he made, the
That's
Iran nuclear
crazy.
deal, you would have had a nuclear war 4 years ago. You would have had nuclear holocaust. And you would have had it again.
Weird spike
if we
candle
didn't
coming. If
bomb
they
the
go
site.
lower here, they could trap at the 3/3, but Nvidia could roll.
The most important thing to look at here
Weird
is
candle,
Iran's
I think.
ability to deliver missiles to
It's
Israel
possible,
and
but
regional
it's
countries.
scary
And that was the concern
shit
that
right
President
now.
Trump was talking about there. Iran was pursuing a nuclear weapon, and if they could attach that weapon to the top of a ballistic missile,
Doji
it
candle.
would be landing in regional countries or allies like Israel. And that was what the president has described as an imminent threat
115
against
bounce
the
into
United
120.
States, its forces in the region, and of course allies like Israel. Guys?
So Trey, the Wall Street Journal goes into detail about what the Israelis and our intelligence officers are doing to help get the I guess country ready for a takeover. And what they do is they try to bomb the headquarters. They bomb the headquarters, flushing out these leaders who've set up shop either in underpasses or in tents. And if they get blown out of those tents and underpasses, they were told to go to sports complexes. And when they gather, so it's a systematic way to
I don't think Highway to Serfdom likes Nvidia. Every single chat of his on my channel has been leather jacket liar. Jensen full of S word. Beep. And you said NVDA dog. I thought you were calling me Nvidia dog. I was gonna start barking. I was like, ruff, ruff. But he was literally just talking about Nvidia. It seems like this guy really, really hates Nvidia. Every single comment. It seems like the last time I was streaming Nvidia, he must have had a fight with Nvidia, Jensen Huang or something. He said leather. He said leather something. That's funny. Leather jacket liar. Come on now, bro. He's like the Terminator. Beep, beep, eat, eat. You gotta respect that. That's funny as hell. I thought people loved Nvidia. Or I thought people loved Jetson. I don't know if I like I don't know if I like or hate Jetson. Actually, I don't know. I wouldn't put myself in the same boat, but like I have fun with Jetson, I'm not gonna lie. He's a leathery Terminator. So never trust a billionaire in a leather jacket. I think I've seen you say that before too. Yo. Dang.
Let's go to Chief Foreign Correspondent Trey Ying's live
Going
in Tel
to
Aviv
Israel.
after visiting the site of where one of those missiles landed. Trey?
Yeah, hey guys.
Yeah, Trey, stop lying. You love Boo Boo
Breaking
Jetson.
news we brought you last hour. Ismail Khatib, the intelligence minister of Iran, was taken out in a strike overnight. We are told this was a joint Israeli and American intelligence effort. Khatib was one of the individuals responsible for taking down the internet in Iran, and also someone who was tracking Iran's terror cells around the world, sleeper cells in countries that officials here tell us were threatening U.S. politicians and even President Trump. You mentioned off the top overnight, Israel came under new Iranian fire with cluster munitions raining down on the population below. Today, we visited one of those sites just outside of Tel Aviv where 2 people were killed. One neighbor describes what he saw and heard.
And I hear one boom, very strong, and the light, it's up and down.
I don't know, it feels 50-50. They could bear trap here, or they do like one more crazy candle down maybe.
He tell me,
I don't know
don't open the door. After 2-3 minutes I open, I see all the smoke.
You can see here the aftermath of an Iranian cluster
kind of looking like a knife down too,
just outside of Tel Aviv. 2 people were killed at this location. These small bomblets exploding in different areas of Tel Aviv.
Man, didn't they really knife down some today? While looking bullish as hell in the middle of it.
Nadav Shoshani, the
Nvidia looking bullish
for
all
the
day
international
long.
press of the IDF.
5 minute, not really.
What happened here?
Well, the Iranian regime has been firing. They've been doing this since day 1 of the war. They've been firing cluster bombs.
No volume on Nvidia midday too.
They break off to dozens of smaller bombs the size of rockets, and then the sites of impact can be deadly, like in this place where they killed 2 70-year-old people.
And there's no precision in this. These are
if Nvidia goes to 180, I'm full blasting music.
We know
so
this
just
also
prepare.
from intelligence, but also from the type of munitions. Then the Iranians
I'm gonna go down now,
cluster bombs towards center of mass populations. These cluster bombs break into dozens of rockets who disperse over miles.
This 7 days in a row
in
the
center
video,
of a
so
large
please
city
don't hate me, but like,
causing
just
damage to
realize
civilian houses.
it's a rarity, all right? It's not just because the candle's fucking
The
actually doing
Israelis are striking back. There are reports this hour of a new wave of strikes against the Iranian regime going after gas infrastructure there. Guys?
All right, Trey, real quick. On Hezbollah, is it true that their actions have so angered the Lebanese that they're starting to lose political standing within that country, that even Hamas has questioned the reasoning?
The Lebanese are mad.
Rocketing Israel at this point?
Yeah, absolutely. We've seen a shift in tone from the Lebanese prime minister, who last week was calling on Hezbollah to stand down and not get directly involved in this war. But overnight, Hezbollah launched dozens of rockets over the border, sending people in northern Israel back into bomb shelters. A significant amount of damage in a number of different locations. The ground forces, though, will be an interesting dynamic in all of this. I spoke.
America taking problem taken care of.
I think NATO's making a very foolish mistake, and I've long said that, you know, I wonder whether or not NATO would ever be there for us. So this is
we have 105 people here. Thank you so much for being here. We have 67 likes for today. If you could smack the like button, I would very much appreciate it. Thank you.
This despite our allies relying more
30 more
on the
people.
key energy
Let's get to
corridor,
100.
where about 20% of the world's oil traffic flows. Here to discuss, Fox News political analyst Guy Benson. You know, this is interesting, Guy. Good morning to you. The president went over to Europe. He's talked about rebuilding NATO, getting people to the right percentage. And it looks like, you know, with all the talk about Greenland, they have proven the president right, that they're not going to stand with us in these moments.
Yeah, I think he's frustrated for a number of reasons. And I think what you'd hear from some of the Europeans is, look, this was a decision that was made by the president. It's his policy. And because of this choice, it should happen on our dime, and they're not prepared to help. That'd be what they would say, at least publicly. I think you can't escape the reality as well, though, Lawrence. If you think about their internal politics in a lot of these countries, especially left-leaning or left-wing governments, they don't want to be seen by their base as helping Donald Trump on almost anything, let alone something like this. And in a lot of these countries, there is a growing Muslim population where there are sectarian politics that are increasingly driving decisions that are being made about not offending that group of people on a whole host of fronts. I think that is inescapably part of the calculus here, which is not necessarily a great sign moving forward, but I think it is explanatory in this case.
But, you know, Guy, that's also part of the larger point as well. We talk about the radicalization that's happening in a lot of these countries, and they're inspired, a lot of the propaganda, a lot of the resources, by Iran.
Welcome to the channel, Dicey. Sometimes I say what I'm in.
And the question is, do you want to appease a portion
for a little bit
of that population by making it seem like, oh, well, we had nothing to do with it?
You may hear them when I say.
Is that going to actually satisfy
Thank you for hitting the like button, too.
Violent radicals who attack those societies anyway?
Mohammed Khan.
That is an interesting
I think I've seen you in the WhatsApp group, actually. Good to see you, brother.
Leaders to have made.
Good to see you, sir.
And to your point leading into this, Lawrence, the Strait is actually vital when it comes to the energy.
We're all human beings, folks. We're all brothers, we're all sisters, we're all human beings.
It is for us. So I think a lot of the heavy lifting has been done by the United States and, of course, by the Israelis, the Arab partners and neighbors. They're very much on board with this effort. You get some rhetorical support from some of the European countries, but when push comes to shove, if we need certain support and help, having done a lot of the tough work already, I think that's the point that President Trump is making, and therefore sort of questioning the alliance overall, saying, okay,
such a tiny ass spy put
here. You got nothing for us?
So
okay,
little.
Duly
I think
noted.
I'm gonna just keep this shit.
I think that is pressure that he's building on some of our allies, and I don't think that he has an unfair point.
So, Guy, with the last 30 seconds I have,
one more range
this
down.
Is a live look at the map right here of all the defense spending when it comes to NATO, how many of these, what these countries are giving to NATO. When you look at the map here in the chart, we can afford for them not to show up for us, but it doesn't look like they can afford for us not to show up for them, right?
Yeah, and that's part of the really tough message that President Trump has sent them now, last term and again currently in this term. And a lot of them
Poland's
have taken...
trying to get their own nuclear weapons. They're I didn't know they were the top spender of NATO, but I guess
to heart. You've seen that number increase across a lot of Europe, and of course they've got their issue with Russia's war against Ukraine.
Poland's
That's fair. It's good that there's been some improvement there, but I think Trump's looking for more of a commitment, not a full, like, you're all in with us on this, just a little bit of help. And it's been like extracting teeth in some cases, which I know has been a source, has been irksome to the president, to put it mildly.
To President Zelensky's credit, though, they have been helping us with the drone technology, which was smart on his part. We greatly appreciate that. Thanks, Guy.
You bet.
I'm Steve Doocy.
I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.
I just texted somebody back, my bad. Guys, we still have 2 spots left in our alert room. If somebody wants to join, it is $270 for 1 month. Still 2 spots left. If you would like to join, just send me a private message on the WhatsApp.
Over to Chief Foreign Correspondent Trey Ying's live on the ground in Tel Aviv at the site of an Iranian missile strike. Trey.
687,000 views, crazy.
Yeah, guys, I do want to start with some breaking news here. A senior Israeli official telling Fox News that Ismail Khatib, the intelligence minister of Iran, was targeted in a precision strike overnight. Khatib was responsible for supporting Iran's global network of infiltrators, of sleeper cells, to threaten countries like the United States and others around the world. This comes as we are tracking developments out of Israel, where overnight the Iranians launched more cluster munitions at the civilian population here. At least 2 people were killed in Ramat Gan, just on the outskirts of Tel Aviv. And another military official telling Fox News overnight it will take a few more weeks for the ballistic missile threat to be neutralized. You can see in some of the video here the aftermath of those cluster munition impacts overnight. These bomblets, dozens of them raining down on the population below. The Israelis not just looking to the incoming fire from the east, but also looking north to the Lebanese capital of Beirut in the southern Dakhan neighborhood, a Hezbollah stronghold, where the Israelis launched a new series of airstrikes overnight and into this morning, taking down at least one high-rise building. The strikes that are continuing in Lebanon are also continuing in Iran, where yesterday the besieged forces came under attack by the Israeli Air Force. They are systematically going after this wing of the IRGC to ensure that they are not able to crack down at the level that they did previously on protesters. And as all of this is
anybody doing MU?
Just right now, as we're speaking, there are some alerts
on
coming
the
in.
YouTube chat.
This means that in about, you can hear the buzzing noise here from the phones. This means in about 10 minutes, there will be new incoming Iranian ballistic missile fire against Israel. The population here likely heading into shelters at this moment. Todd, Carly?
Despite those signals that we're just hearing and the fact that you're probably going to have to go to a bomb shelter once again, how would you describe the pace with which these cluster munitions are coming into Israel? The launchers, of course, have been a major target for Israel in the United States.
Yeah, there are certainly fewer missiles, but when they have these cluster munitions on top, they are not precise, and so they rain these bomblets and small munitions down on the population below. And we just saw a location where 2 people were killed, just on the outskirts of Tel Aviv. I'm going to toss it back to you. We need to go take some cover amid this incoming missile fire, but we will keep you posted throughout the morning on Fox.
Understood.
Bears are here. My Nvidia puts are going back up to morning profit level. Bears are here. Even Nvidia going into end of the day pushing lower on the 5-minute. $665.35. $665 is really testing now. An important level for the market. 130. Are you fucking serious? It's gonna bounce right here. That didn't leave this one tiny ass contract on spot. If this shit bounces right here, I'm gonna be fucking pissed off. Let's see. That's crazy. Super fast. Wow. It's annoying. Super fast and right back to where it is. Bro. Such a fast God cycle. In the 3/3. $6,666.66. Okay. That's fucking crazy. $665. It's like these pops and spike downs are not real in Nvidia. Just keep range. Pop, drop, pop, drop, pop, drop, pop, drop, pop, drop, pop, drop, pop. Wild. The God cycle. Still 1 hour left until Powell comes on. Spike up in a downward trend. Counter trend, push, spike. Let's see what happens with the spike candle cycle.
Diplomacy that he used in his first term, NATO would be totally irrelevant today. He got them to finally spend something approaching a decent amount on their own defense. But the reality is, if NATO's not going to be there for us when we need them, if the most powerful military that keeps NATO relevant at all can't count on the alliance members to be there for us when we're doing an operation that actually serves their interests as much or more as it serves ours, when you think about it strategically, the alliance has no future. And I never thought I would say that. I've always been a strong supporter of the alliance, but I think the president is absolutely right to be infuriated by the lack of support we're getting from our allies.
And according to the Institute for the Study of War, Alex, Iran recognizes that they can't beat the United States and Israel militarily, so their strategy is to outlast. And one of the ways that they plan on doing that is making the economic pain threshold so high, which is why we're all focusing on the Strait of Hormuz. And there is reporting that overnight those bunker buster bombs were used again in the region of the Strait of Hormuz. So assess for us militarily if we're gaining control of the region or where you think things stand right now.
Well, I think militarily, operationally, there is no question that this has been one of the most successful operations in the history of the United States military. I mean, there is no question that we are achieving objective after objective. You just look at the metrics the president set from day one, and you cross-reference that with what's actually happened on the ground. The proxies, the missiles, the Iranian Navy, the drone program, leadership targets, every single metric of operational success has not just been hit, I would argue it's been exceeded. And so to hear the debate in the American media and among some corners of my friends, fellow members of the MAGA movement, it just shocks me that you see people saying that this operation has not been a success, when the facts just totally belie that, Carly.
Well, Alex, I'm glad that you said that, because I was reading this morning this Washington Post report, and it says that despite 2 weeks of relentless airstrikes, U.S. intelligence assessments say that the Iranian regime will likely remain in place for now. It goes on to say that the regime is weakened but arguably more hardline with the IRGC in full control. Can you weigh in on that? Because the concern that this reporting raises is that if this regime remains intact, it could be emboldened.
Well, look, I think it's one piece of information, and it's also a snapshot in time. Even if we accept that that's accurate, this operation, as I said, it's achieving these extraordinary tactical and operational successes. And I think the president's going to have significant opportunity over the coming days and if necessary, weeks to change that trajectory. And again, this is not static. This is moving constantly. And the Iranians are adapting to the facts on the ground. Your reporter just noted another Israeli and American success over the last couple of hours in going after regime targets. I think that may be a moment in time, but the trajectory we're on, I would still stipulate, is an Iran that is a much less significant threat to the United States in the region than the one that we had 16 days ago.
Yeah, and finally, bringing this back here at home, national security officials are set to testify before the Senate Intel Committee today on the global threats to the United States that we are facing right now. Of course, we're talking about sleeper cells, lone wolf targets. You're concerned when it comes to that?
I think it's a real threat. And these hearings always highlight the challenges, as they should. I still think that we're dealing with some of the consequences of Joe Biden's open border and some of the things that we're still dealing with in terms of sleeper cells and infiltration. These are all very real threats, but we also have to realize that we have more geostrategic opportunity than we have had in decades. If you look at what has happened in Iran, in Venezuela, potentially in Cuba, I wouldn't just focus on the things that are potential challenges. I would also focus, and I hope they do in these hearings, the fact that Donald Trump has reset the global chessboard in a way that presidents going back to Eisenhower would be shocked by.
Yeah, from Venezuela to Iran to potentially Cuba up next. It is certainly a time in American history, and we will certainly be watching as it all unfolds. Alex, thank you so much for joining us.
Be sure to like and subscribe for all the Fox News latest on YouTube and catch full shows streaming now on Fox One.
It's already a fucking shit show. Not a lot of things aligning. But it's just rejection on spot. Not a lot of things aligning.
Clarifying its position on crypto assets, interpreting digital commodities, digital collectibles, digital tools, and stablecoins not to be securities. SEC Chairman Paul Atkins joins us live from Washington this morning. This is a pivot of sorts. Help us understand, and we'll probably get into the weeds of it all in terms of just the mechanism for all of this, but how you landed on this decision and what it means.
Oh, well, thank you, Andrew. It's great to see you again, and this follows up on some of our prior conversations about this and other topics when you've been gracious enough to have me on your show. So thank you very much. But first of all, yes, yesterday was a real break with the past, a formal break. The Commission came out for the first time with an interpretative release that really sets a line between what are commodities in the digital asset space and what are securities. And the significance also about this particular release that we did is that the CFTC participated with us in it. And so they had some guidance that's included in that release along with our interpretation. So basically, as you said, and that tripped off your tongue very well, so it's very good, we are outlining 4 types of assets that are not securities, and those are digital commodities, digital tools, digital collectibles, and stable coins. And stable coins per the Genius Act that was enacted last year. So we're breaking with the past. We are now giving clarity from the SEC's perspective as to what are and are not securities.
Okay, so it's funny. As I was looking through the list, the one I wanted to actually focus on, oddly enough, was digital collectibles, because I could see how a digital collectible, perhaps more than the other three, could be considered a security depending on how it's structured.
Well, that's true with anything. And so this is also what this interpretation lays out, is we're looking at, there's an old case from 1946 before the Supreme Court. It was called SEC versus Howey, and it had to do about orange groves and that sort of thing. But today, obviously, with digital assets, those principles apply. But what we are focusing on is what makes an investment contract, which means what makes a security. And we're focusing on the promises and the representations that the people who are constructing it make to their purchasers, their investors. And so so some of these collectibles, like a baseball card, an equivalent, a meme, one of these meme coins or things like that, NFTs, non-fungible tokens, those are something that somebody buys. It's an immutable purchase that someone has given, and the token is what's set aside and collected, and it's not something like another asset where people are trading it, and there's an ecosystem around that.
So what, just to define it for the audience, what is a digital security then in your mind, which you would regulate?
Well, a digital security goes back to what is an investment contract, and that is a set of promises that the developer of that particular instrument has made to investors as to how it will be managed and what their
Satoshi
what
Nakamoto
rights they have to that particular in that particular investment contract, and how they expect to make money off of it. So it's more than just something that is sold as a thing to hold or collect. It's more than a tool, like a ticket or something like that, a secondary ticket for a box office or whatever.
And what happens if
Satoshi Nakamoto?
Let me ask you this, just because this may be the future, or people talk about it being the future. You buy a digital ticket or a digital card that is a collectible, but also 10% of it gives you some kind of stake in the future of the business as well. Is now that a security all of a sudden?
Well, so you're talking about there are things that are somebody's putting money into an investment that is an ongoing enterprise where people are supporting that and managing it. So it's a facts and circumstances case. What we have done is set out all sorts of examples in this particular interpretative release, and setting up a process and a framework by which people can have certainty. Their lawyers can give them an opinion. They can come in and talk to us about things if they are unclear. And unlike in the past, they won't then go home after they've talked to the SEC and find a subpoena on their doorstep or something like that. Right. So we're setting up a framework. This is just an interpretation, and so courts can deviate from that, of course, if they don't like our rationale.
Go home, baby, go
but
home.
What we're also going to follow up with here shortly is
go home.
a proposed rule that will put a lot of this into effect and be much more specific, construct a series of exemptions and equivalent of a sandbox for people to do experimentation to see if they can develop a proof of concept and then go forward with what their product might be.
Let's get ready for the J-Powy FOMC. FOMC. $1.6K people watching already. Here we go. It's almighty consolidation on Nvidia. Almighty consolidation on Nvidia. Starting to look bearish again. Back the RSI being killed off right now. So that neutral ground's now volume. Candle could fly here. Up or down. This is starting to get a little bit more dicier. This makes sense. Not really. They're walling out. 8 minutes, this thing comes out. I'm gonna run to the bathroom before this shit starts. Alright, I'm back. Man. Is this shit nerve-wracking or what? Is this thing fucking nerve-wracking or what? Fuck. I'm leaving my SPY put right now because I don't think I can manage leaving fucking Nvidia if they spike down later, so I'm leaving my SPY put right here. I don't give a fuck, it's like break even, it's whatever. Got it somewhere up here. I don't even remember, I think it was here. Just want a real spike to 170 fucking 9 180 for fucking 5 fucking seconds. I'll be done for the fucking week. I gotta actually chill out tomorrow. Should just chill the fuck out. Nah, I'm not gonna chill out tomorrow, but fuck. There has to be a day where I do small. This shit is actually dangerous. Every fucking day. There's no way I go up every fucking day. It's terrifying. It's actually scary as shit to be on a win streak too. Damn. SOXL fucking boring piece of crap instrument as well. Until it fucking does the move overnight, but yeah, piece of crap. I just need 53, 52 SOXL one day, I'll be good, but yeah, piece of crap. All it did was go down on me since I entered. I'm down $145 on it. Little crap poo-poo contract I entered, but I don't think I'm gonna join more either. It's just a fucking crap hole. ETFs like that. Crap hole. Unless it's like an anticipation for a move like earnings or something, but yeah. It's most of the nights a crap hole, meaning it does whatever the hell it wants to do. Triple leveraged. Time is 2 in 4 minutes. In 34 minutes, we will have Jerome Powell come live. "24 minutes. That's all I'm gonna say about that. Somewhere here. Stressful. What? Number 1, what the fuck is a cycle? And number 2, crazy. Hot potato, what the fuck? 3 minutes. Time is 2 right now. Here they go. Get your popcorns. Get your Cokes. Get your Ouija boards. Get your mentality strapped in. Get ready. FOMC is here. FOMC is here. Coming in with the insane cycle on Nvidia too. What the fuck is this W? When were we fucking up there? This shit doesn't even align. Okay. I may be bullshitting with this line right now, but that may be something too. What the f is this? Let's see. Nah, this makes sense. What the f? Sorcery. Sorcery. Bullish sorcery. Oh my. Time is 2. Fuck. Just down here. Gotta love me some FOMC Lord Voldemort sorcery, man. Gotta love that Lord Voldemort fucking sorcery. It's too easy burn. Initial bullish reaction. I might be jinxing it. Nope. Nvidia super strong. Oh my. What the fuck? Nvidia, what the fuck? You bear burning Nvidia. This shit is fucked. Calm down! I'm about to start screaming at Nvidia, bro. Fuck is this Elon? Elon Musk. MU. 0.5 fib SPY. QQQ still strong. Nvidia is still strong. Time is 2:05. Wipe that shit. Wipe that shit nasty. Yeah. Wipe that shit nasty. Yeah, wipe it clean. Wipe that shit at the gas stations, bathroom, toilet sink, tissue, wipe. Yup. Yeah, wipe that shit clean. Yup. Now let it really start. Wipe that shit clean. Fuck Nvidia! What you doing, bruh? Nvidia. The only fucking thing I'm in. Motherfucking stupid as hell. Gotta love Halloween on Nvidia right now. It's like a Halloween party. They're like, April Fool's, beep! I highly doubt this shit, but yeah. April Fool's, beep! Five-minute bullish. 5-minute bullish on SPY and QQQ. Nvidia popping with. That's what I see. Fake news on Nvidia. 5-minute. Maybe not into this week, but next week. Fake news. Bruh. Fake news, bro. What the fuck? Oh, hell nah. Hell nah. Hell nah. Nar. N-A-W-R. Nar. I'm getting copyrighted. Nar. Fake news. Yup, come back to the 0.5 fib. I know you want to do it, QQQ. Come on, QQQ! Come on, baby. Mother. Let's find out. If I held my SPY, that thing would have gotten cooked even harder. So fuck it. At least I got to leave Nvidia. Stop with the bullshit right now, Brie. Power coming on in 22 minutes. Actual. What the actual, folks? Fuck is this shit? Making it very hard. Bears are trying. QQQ is pulling back. Time is 2:10. Voila, 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 le ma fa sol lo ri so fa mi sa hi la ma ra ra fo la ba la ra ni mi na ra ho hu. The bearish cycle's trying with the MACD off 2 o'clock. Oh, it is showing as a full pullback on the QQQs. We will see if this becomes a false bullish breakout. The only way is, fuck am I saying? Only way that we know is if we wait. Time is 2:10. Voila, voila, voila. Na, 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 na. What the fuck is this cycle? On Nvidia, they're creating a UFO rocket to Mars, so they wanna go build a space ship GPU data stations. They are crazy with this shit. But I've seen it crazier. You're gonna really have to do harder than that market. In 20 minutes, Jay Powell comes on, and our lives are in the hands of Palpatine. One word, he said, good afternoon, the market may rise. One word, he says, good evening, and the market goes poo-poo. What the fuck are we doing with the market? Nvidia really ranging for a weak piece of crap. We'll fucking see, man. This is some bullshit. Oompa Loompa market cycle creating some bullshit mountain. MACD going crazy. In and out, however, the fuck it wants. Well, we went nowhere. Is that somewhere? 665 again. 666 we're at. Damn. Captain Chaotic said, do you think this is being the M word? No. The fuck? I'm winning. When I lose, I may think that. That's what the meme says on Reddit. Feels fucking very manipulated when losing. Market feels very not manipulated when winning. Amen. Amen. I look at this as a small pullback in time for me. My weekly still green as shit. My monthly still green as shit. So, no. I look at this as I'm basically not trading. Shit not moving at all. I don't really give. Oh shit. Let's see. Time is 2:15. Oh my fuck. Bearish control. Today's bearish. Fuck that. They're burning all bulls today. Fuck that. Fuck that. This shit is not manipulated. Why? Because I'm winning. I love boo boo market. This shit is not manipulated. Why? Because I'm fucking winning. Time is 2:15. They're about to go break the LOD on Nvidia. God did. Let's see it. No, I'm kidding. Fuck. LOD testing one single fucking candle is absolutely nuts. Absolutely nuts. He's not even on. He's not even fucking on right now. Look, this is coming in as a 1/3, 2/3, 3/3 off at 3 p.m. 2 p.m. Sorry. They bopping down every single bounce today, and they bopped this shit to the real fucking floor in one single mega Zeus candle. You call this a motherfucking Zeus candle. Zeus ran down from Mount Olympus himself, handed it down to the peasants. The peasants got zapped, and he ran up the mountain. But I mean, that's a motherfucking god candle, like hypothetically, spiritually speaking, right now. What the fuck is that candle? What the? Hypothetically, metaphorically speaking, they're burning everything up here. Hypothetically, metaphorically, they're burning. QQQ.5 a root. Fake a root. Fake out a root. Garrett said good afternoon or good evening. How the fuck do I know? I'm not J Powell. J Powell is J Powell. We're about to find out what he says in 15 minutes. Good afternoon. Good evening. Make sure you guys all say it back if you guys like J Powell, all right? I'm gonna make sure I say it back. So whatever he says, good afternoon, good evening, and also make sure you put some American flags in chat, and also make sure you hit the like button today, folks. Thank you so much for being here. Market is moving fucking crazy right now. My options are moving fucking crazy right now. Thank you so much for being here. Please hit the like button. Today is crazy. It's crazy. I'm not even in SPY right now. I'm in fucking Nvidia. The thing moving crazy. QQQ bearish, SPY bearish, MACD bearish. Bears are in control. Today's bearish. Bars. I gave you a 5-minute timeout, Alfonso. Please keep chat market related. Thank you. I don't care about no. What's the movie? Aladdin and the cup. I don't care about none of that, man. Market volatility opened. Market volatility turned opened. Or who's praying to that motherfucking furu from Aladdin right now? That little cup from Aladdin. There must be someone out here praying to Aladdin right now. I see some numbers coming out in chat. Somebody sent the fucking Powell Palpatine Demon Sith Lord in the WhatsApp group. What the fuck? Yo. Oh my. Yeah, but it just feels like you're doing it on purpose, Alfonso. When you were saying good morning at 3 p.m. and today too. So let's just keep it market related, please, in the WhatsApp group. That's a funny meme. He sent Lord Vader Sidious and Darth Lord Sidious Palpatine mixed up with with Powell and sent it. That shit is funny as fuck. Nvidia. Get your bugging ass down here at Nvidia. Every single day. Aren't you tired of this mountain, Nvidia? Because I certainly am not. But I mean, you're really making me feel like David Goggins running up and down this mountain. Who's gonna carry the boots and the lugs and the motherfucking... Oh my god, time is 2:20. God did David Goggins, sir. Yes, sir. God bless America, folks. Everybody, American flags in chat. All right, get it prepared. Get it prepared. Yes, sir. Yes, sir. Yes, sir. 07s in chat, folks. All our veterans, all our American patriots, all our fellow Americans. 07070 brother. David Goggins, who's gonna carry the boats and the logs and the motherfucking rubber boats and the rubber ducks. Me. Who's gonna carry the boats and the logs, man? Me! I'll carry the boats and the logs. Damn, it's just some lotto shit. Fuck, 225. I'm scared as fuck right now. I'm excited. What? All right, 5 minutes. Powell coming out in 7 minutes. 7 minutes. Powell coming on, folks. Powell coming on, folks. Zap, zap. Zap, zap. Zappity zap. Emperor Palpatine. It's here. Yeah, the aura of the pic that the Alfonso sent is like a fucking evil ass pic. I said someone's gonna get fucking PTSD off that picture, bruh. That shit is straight up fucking orange eyeballs. Scary as shit looking. Tired of this shit on the video. Get it done. What the fuck? What the helly? What the helly, bro? Get it done. Done. D-U-N-E done. Said I generated it specifically for today. This shit is terrifying. That big bomb bound to give somebody fucking PTSD at night. Go see Jerome Powell at night. Evil orange red-eyed. Emperor Palpatine saying come to the dark side of the force. Yo, anybody have had dreams when they were a kid of like fucking demons like walking up the stairs, like upside down, like fucking terrifying, and like you're like you have your head like notched out off the bed, but like your body's like paralyzed. That shit happened to me once when I was young, bro. I'll never forget it. Like that's kind of terrifying, isn't it? I literally, it felt fucking real. It felt like I was fucking awake, but like I think it was a dream. But like I literally fucking woke up and my head was like fucking notched off the fucking bed, like, you know, tilted fucking backwards. And like I couldn't fucking like get up, but like I saw some shit crawling up the fucking stairs like a fucking, like a monster. And I was like, what the fuck? Like, oh my god, most terrifying fucking shit ever. I'll never forget. This was a long time ago, but still. Oh my god. Oh my god. Oh my god. Alfonso says sleep paralysis. Yes, well, that's sleep paralysis, but like with the fucking goddamn demon or monster with real fucking like real life backgrounds behind it. Like it felt fucking so scary, so real. I was like, oh my god, like ah, and then I woke up. But I'm pretty sure we all have been through that in our lives at one point in our lives, right? Or is that shit fucking like rare as fuck for me? Has that never happened to anybody? My mom was like, you know, when she ever had a terrifying dream, she would just like pray, and like she wouldn't have the bad dream again. I guess I did the same thing too, but you know, I gotta go to bed praying so that doesn't happen. That's so scary. Alright, Powell's coming on. It's okay. Powell will hug me tight. He's gonna bring me to bed. He's gonna sing me a lullaby. He's gonna sing, Jeff, everything will be okay. Jeff, I la boo boo you, Jeff. I am Powell. Be like, okay, sir. I'll calm my ass down. Thank you, sir. Market La Boo Boo's mate. La Boo Boo's Powell. Here we go. This shit is terrifying. I had that dream too when I was a kid. You like travel out of your body and you go like flying. But that was like a long time ago too. And best is when you can like jump and jump on the hill and then you just feel like your body's floating. But like you come back to the ground and then you jump again and you feel like you're floating and you come back to the ground. And then you jump and then you're not flying and then you try to fly and then you jump and then you fly and like yeah, it's cool. Hidden Hash said, take care, guys. Why, are you going somewhere, bro? Hidden Hash saying, as if he's going to a vacation. Where you going, Hidden Hash? He said, take care, guys. ... So mysterious. So mysterious. Men going to Hawaii or Cancun? There it is.
Good afternoon.
Good afternoon.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak.
Bears are trying. Bearish,
in our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low.
Bears are in
control. Part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well.
Bears are in control.
Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%.
I'm leaving 667
These elevated
right now
readings
for $200.
largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal.
Oh, fuck. It's fine. I'm in the video right now.
Projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December.
Come on, the video. Sorry, hypothetically speaking right now.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral.
FOMC.
This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our S&P, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December.
Bears are in control right now.
As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision.
Damn, they're going crazy down today.
Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should contain the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one
Chris,
to
take a 5-minute
approach
break
not
on the
lightly,
IWM
but
shit too, right?
in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? I'm just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19 reasons, 19 individual submissions, and if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially it is that, the forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And, the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Fuck, that's crazy. You literally
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
I didn't get the second part of your question.
That consumers are going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have high if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down, and we don't debate how long. How do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement, and also what you've written down before you'll be reluctant to move too far away from that just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs with little growth in either demand or supply. But the U.S. economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past.
Yeah. So there'll be an offset.
Offsets, yeah.
So that's true. We're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable, and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that having looked through tariff inflation and inflation running above target and looking through the oil price shock will undermine the credibility of the commitment to the 2% target?
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be actually, and it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%. And I think it's important that we do that. Very important.
All right, we have 110 people here, guys. Please smack the like button if you have not already today. Thank you so much for being here, folks.
Nick Timmeros, Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well, as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not.
SPY is down right now by
a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers on a one-time basis, and we're waiting for that process. It takes 8, 9, 10, 11 months a year to go through the system, and we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system, so that goods inflation will return closer to what it's always been. I mean, it used to be for many years it was negative, and then the year before tariffs came in, it was 0, and it's running at like 2% now. So. And so that's kind of goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks, and we feel like where we are now, which is kind of on that borderline, the higher borderline of restrictive versus not restrictive, we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Non-housing services they basically moved sideways for a year. They're at the same level. We do expect that they will come down, but it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services, but we're not seeing progress there. So we do, what we expect for next year is continued, what we want to see for this year, rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January, revised down. February, posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and, in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can. We're at 3.0% core, inflation 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time. And that's a concern. We need to get back down to 2%. And we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard-pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th?
Same day on QQQ.
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed.
Look at this fucking
that is
shit
what the
on
law
QQQ
calls
today.
for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that.
FOMC for Jay Powell.
On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet, and I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
It's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see with due to tariffs, it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
What the fuck?
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed despite the quite negative number in February. Would that be the right take? And was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. In a way, the January report was a positive surprise, and the February report was a negative surprise.
Today at the top. Oh my God.
If you put them together, you get something. I think you have to really. Yeah,
I left 3 contracts in the morning.
There was a strike, and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low non-existent really growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
We did go through a long period where the shocks were all demand shocks, and so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing, and a very much more difficult thing, because it does immediately raise the question of tension between the 2 parts of our mandate. But has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that
this is the
real world has changed in a way that there'll be more supply shocks. But there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay.
This is the FOMC that people remember
of how reviewing its communication strategies, including the SEP, as part of its framework review.
This is the fucking
whatever happened to that?
This is why I said this is the second to last FOMC for Jay Powell.
I have like 5 follow-ups to that, but I guess what would you change about Fed communications if you had the time? Thanks.
What happened about that was
real fucking FOMC. God damn, we're at 663, folks. We were at 670 today.
We looked carefully at many aspects.
Think about where we are right now.
Of our communications.
Think about where we are right now. 597. We were at 607.
Very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Crazy. This is crazy.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
They might
So
go
it
gap
did
fill
come
this
up
bitch
today.
today.
The policy that
They're
our
crazy.
possibility rather than
Oh
our
my
next move might
God.
be an increase did come up at the meeting, as
no
it did
way
at the
you
last
could
meeting.
possibly do shit here.
The vast majority of participants don't see that as their base case,
am on Nvidia,
and of course we don't take things off the table.
I don't want to speculate
But
shit on
you
stock,
correctly
but this is
characterized,
crazy.
what was in the minutes that several participants indicated, and something
there's
very
three
much
gaps.
like that
One,
conversation did happen.
two,
What was your second
three.
question, though?
I was just one
At
question
some
there,
point,
but
this
follow-up would be, there are a lot of
That too.
goods besides oil that are trapped in the strait right now, and a lot of supply chains getting snarled.
Oh my God, they trapped the crap out of
How
the
much
bulls
concern do you have
Oh my
about
God.
whether if this becomes an inflation problem beyond
Nvidia
just
bull
oil,
trap 7
whether
days
there's
in a
anything
row.
you can
I don't
do
think people
about it
fucking
or
realize
would
how
do about
crazy
it,
that is. Like I was
given
looking at that shit yesterday,
the
but like this
efficacies
shit
of
is
monetary
fucking nuts.
policy.
7 days in a row, it trapped on Nvidia. Look at the fucking 1 week on Nvidia. It's down $5, 2.6%. It just looked like it was going up.
Oil
Like, it just
commodities,
fucking, like,
oil-related commodities,
I can't
go
even
into
describe it.
manufacturing, that kind of thing.
This shit is
The truth
so-
it's completely out of our hands.
love it.
Just like everybody else, we have to just
Oh,
wait and see what happens, and it'll come down to how long, the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing.
I
Really,
cook it. I
wouldn't
fucking cook it
speculate
at the
in
top
any
here.
way, and there's really not a lot we can do other than
188.
kind of
188.
and see.
Yar! Yar! We're at 181. Yar!
Afternoon, Chair
That's what's
Powell.
up.
Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal. But there are some colleagues of yours who have pointed to higher dispersion in household service, in business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of
I think they're
inflation
gonna go gap fill
expectations and the risks of from
They
higher
may
oil
cycle
and
here. They may
gas
go
prices.
sub 1.1% again,
At
but I
this
think they're going to
meeting,
gap fill this
I
shit.
mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or
Insane
some
volume.
aspect of one that's troubling, but ultimately, right through
Insane
this whole
volume.
period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see
My back
the
hurts.
effects
Fuck.
of
I gotta
the
stretch.
price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth. But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just.
If there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there's tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. When we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal. And inflation that's 1 percentage point above that. So calling that stagflation, it's not. I would reserve the term stagflation for a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth.
Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting, and we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just, I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
Not real. So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I mean, I think that the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. So I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing is what our staff's been doing. It's very interesting. They started off with just an estimate because there wasn't a real history, and then they've built based on the history that they're seeing of tariffs coming through into prices. They can now have an arc. And for all the tariffs, they can say, well, so we have, I think, slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases. And we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
We'll see if the market recovers or not. At 4:05.
Hi, thank you. Chris Rugaber at Associated Press. You talked about the shortcomings of the SCP in this environment.
Can the market go lower?
I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SCP is never. People are more than happy to change their
trade said, I don't think MU earnings will impact them much. I highly doubt it.
It's your opinion at a moment in time, which can change based on events, sometimes very quickly. So it never locks people in. People are more than happy to be proven wrong.
If we see sub 660
direction,
on MU earnings, I would not be surprised.
I just think we do it. And
what I'm trying to say here, because
I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think. But we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one, though, I think it's even more than usual good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
It doesn't even matter for me. I'm green for the Nvidia.
Hi, Chair Powell. Brian Chung with NBC News.
So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target.
It seems
Reservoir
like that
said
MU
can shock the tech market.
You know
what I'm saying? Like, market is all the way down here.
On Main Street. Are there
MU
any
is all the way up
to
there.
you that's impacting the psychology of the consumer, especially given
at least
that
MU could have
they're a
pulled
big
back
driver
here when the market going down.
activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, there were big price increases all around the world.
I think it's going to.
Everywhere.
That's going to bring the market down crazy.
Countries like the United States had basically the same kind of thing. It was global inflation coming out of the pandemic, and everywhere people are feeling like they. Real wages have been going up in the United States now for 3 years, roughly, but people are not feeling good about it yet, and it will take some years of positive, real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed, and there are areas where
I'm up
prices
crazy
are still
on
going
Nvidia.
up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and what it does for us is, makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs. And, stable prices is half of our mandate. It's one of our two mandates, maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States anywhere in the world in a market economy, in a democracy, and you'll see, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability. And it's an accepted standard practice, and I think has a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Richard.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. Two questions. One, how high would oil prices and broader inflation have to go, and for how long, for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices.
We're going to watch MU
how
earnings
concerned
today.
are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
Yeah, I'm not going to give you an example or specific answer on the first question. We're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. In terms of diesel prices, so your question there is, are we concerned about it? I mean,
how concerned and whether or not it would drive up the cost of food and other goods that really rely on it to
So I think it's a more general concern than that. It's diesel prices because that's transportation of food and things like that. There's just lots of ways that oil and derivatives of oil get into the production and transportation of many things. So, and those
candle was
big effects
all
on
day long.
headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that and we're watching it, but we're right at the beginning of this, and we don't know how big we just don't know how big this will be and how long it lasts. It may or may not be something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see.
Nvidia left the bottom of the box.
Archie, for the last question.
Thanks very much. Just to sort of stare into the future for a little bit, I was looking at the longer run bits of the S&P. I noticed that the growth estimate had been revised up a good chunk from 1.8 to 2, and the kind of long-term Fed funds rate as well. It'd be great to hear, is that AI productivity or what's going on there exactly?
Yeah, I think it's just productivity. We actually started seeing meaningfully higher productivity some years ago, 4 years ago, 5 years ago.
That's why I say,
and that's not because of generative AI. We won't know for years what it's really due to, but it could be due to the kind of things that people did during the pandemic to economize and somehow become more productive because there was an incredible labor shortage. But I think economic forecasters are very skeptical of periods of high productivity because they're so rare and they're often revised away. And for many of us, I never thought I'd see this many years of really high productivity, and by the way, expect it to continue. And we haven't really started to see the effects of generative AI, and that should certainly contribute to that. So it's quite unusual, and it's this is the higher productivity is the thing that allows incomes to rise over time. And so it's a great thing. Was that your question?
Yeah, I was curious what lay behind that. And just briefly on that as well to finish up, you hear the argument a lot, this is a sort of disinflationary story, and if you believe that productivity thing, that should also weigh down inflation over time, maybe then kind of pull down where rates end up. Do you kind of agree with that line of thinking, or do you think that's not how you should think about where the rates?
I think you have to be cautious about that, in particular if you're talking about AI, about generative AI. So remember, in the short term, what's happening is we're building data centers everywhere, and that's actually putting pressure on all kinds of goods and services that go into building these things. So that's actually probably pushing inflation up at the margin. In addition, it probably raises the neutral rate. So in the near term, you're not looking at something that would immediately call for lower rates or that would be lowering inflation. Over time, though, sure, it can be if it's expanding potential output, which is what higher productivity is, then it actually can be. But I think it's an empirical question because it's really is the demand growing faster or slower than the supply side, and I think we just don't know that answer ex ante going in. We'll just have to wait and see. Thank you very much.
All right, let's debrief what the fuck just happened. Number 1, God happened. Number 2, America happened. Number 3, that was the second to last FOMC meeting from Jay Powell. Thank you, Jay Powell. Wow. Wow. Man, I've been saying all day bearish, but this shit is crazy. I've been saying all day bearish, but this shit is absolutely crazy. The entire day of today is 3/3. They down the entire fucking thing. From 9:30 open up here. Yesterday was the top 1/3, 2/3 on QQQ. SPX showing the same thing. 9:45, 9:50, 9:45, same thing. Wow. SPX shows because it doesn't show the overnight. Humongous cycle. God did. Bearish control in the video. My puts are flying right now. Time is 3:50. No, this shit is the true greed. Even SOXO came back fucking green after going red. 54 SOXO into March 27th. 10 days out on SOXO. Fucking crazy. Guess a little money about to go up, but I don't know how much. What a great fucking week. Let's clap it up, folks. What a great fucking week for me. Holy shit. I've been green every fucking day today, or this week. Monday, Tuesday, Wednesday. I've been green every fucking goddamn week and fucking month since, I think, like, somewhere end of January. Like, this is kind of crazy. I'm kind of scared. January 26th, like, literally no pullback. That's been huge. Like, no fucking pullback whatsoever. That's been fucking humongous. Like, literally, like, couple $100 pullback at the fucking max. Maybe 1K, 2K, maybe. That's crazy, though. This shit has to be some God bless shit. Like, literally, this is nuts. Market is closing in 40 minutes. SPY is minus 1.14% and QQQ is minus 1.09%. Powell came on, he fucked that up. Powell came out and he fucked it up. My God. Bearish control. They're about to go gap fill. It's whatever. I missed this shit, but it's whatever. I missed that entire gap fill on SPX. It would have been fucking crazy, but today is Powell day. It's fine. I didn't miss it technically, but like, yeah, it's fucking nuts. Nuts. Look at how much SPY is down now. Minus 1.19%. Oh my God. He came and he fucked it up. Going lower on Nvidia. Alright, I'm filled out on one fucking Nvidia 182.5 March 27th for $485. I have 5 contracts left on that. Fucking euphoria. I have 2.2k in 187.5 March 25th. I don't want to leave this shit. I'm being so greedy. I have 1.9k in March 27th, 182.5 on Nvidia. So still in for 4.3k. Yeah, it's a fucking bloody market. 596. Looks like 595 wants to test intraday. What's the VIX at right now? 24.2, rising. HOD for the day breaking. Nvidia roasted bulls on a fucking roast again. On a skewer stick. Oh, this was 1 hour before FOMC.
CNBC senior economics reporter Steve Leisman knows all about that. Ahead of the Fed, Steve, and of course the Fed is looking at a lot of the same issues and influences that we're trying to hash out and perhaps doesn't have a clear answer of how it might proceed.
Yeah, I'm not sure it has any more insight than anybody around that table there, maybe even less. I think there's three forms of communication that happened today. There's the statement, there's the forecast, and there is the press conference. And I think the surge in the price of oil will have an effect on all three. It's likely that you're going to get some commentary in the statement about geopolitical uncertainty, as well as some change in the forecast. And what we're looking for here, Mike, is the extent to which the dots signal one or possibly no cuts in 2026. You can see what's happened to the probabilities. They cratered this morning, in part after that hotter than expected wholesale price report, in addition to oil ticking up closer to the 99 level than it was this morning, around $94. And Mike, I like your framing of this 4-week window, which we talked yesterday to John Kilduff, and he talked about this idea that if this strait is not open by April 1, there's another level or another leg up that's going to happen to oil prices that will be much more meaningful than it's been so far.
Hey, Steve, it's Joe. Good to see you. So the market has been troubled so far in 2026 by much more than obviously the challenges related to the Mideast conflict. And one of those trouble spots has been software and private credit. Any chance I get some comfort in this press conference where the chairman can convey to us that he is at least communicating with Wall Street lenders and they are on top of gaining an understanding of what the real valuation of these private loans actually might be to the software industry?
Well, I was with you all the way to the end. I don't think the Fed goes quite that far. Joe, I think you have to appreciate that the interests of the Fed and the interests of investors are somewhat different here. The Fed wants to know if what's happening in private credit, and especially with software, is something that's going to infect the money center banks for which they're in charge, and create systemic risk that will prompt them or force them to have some kind of reaction, either in the markets or in policy. And I think what they generally have said about this is investors in private credit are free to lose as much money as they possibly want or make as much money as they possibly want. What they're not going to be free to do is to create some sort of big reaction in the banking system. And what I think he'll say, and what he has said before, is that they're looking at this and looking at the connections to the banking system. But I don't think you're going to get any sense about whether or not what the valuations are, whether or not the marks are right, which is the big question for investors right now.
All right, so I'll correct my statement there, and 100% I agree with how you eloquently explained that. But at least can we get a degree of comfort that the communication channels are open and they understand right now that there are questions surrounding a lot of these Wall Street lenders and maybe a degree of clarity is needed? I think that's something that is definitely something that the Fed chair has said and will say again, that it's something they're looking at. It's on their radar screen. I think there was a lesson they learned from SVB, which is don't let those sort of things go unnoticed and take them very seriously when they happen. And I think also, Joe, coming from the great financial crisis, it's something that they're very aware of, this idea that there can be things that look like they're remote from the banking system, but end up being connected in ways they haven't figured out before. I think one of the questions you have is, well, what are the letters of credit of some of these private credit vehicles to the banks? And if they hit a liquidity crunch, can they draw on those lines of credit? And does that all of a sudden create this kind of danger inside the banking system from private credit? Yeah, one of many topics we're going to have to cycle through in that press conference. Steve, you'll be there. You got to get going. I appreciate it this morning. Jim, you know, everybody can kind of seize on their favorite example from history
of how monetary policy interacts with a high oil price or some kind of an energy shock and the inflationary threat. So the 70s, everyone knows, didn't get control of it. There was easing into this shock. But you go to 1990, I've seen a lot of work there. The Fed was slow to ease, even though jobs were weakening and we got the oil price shock in the first Iraq War, in part because of the inflationary threat. 08, Fed went on hold for 6 months after like Bear Stearns, right? And so 2011, the ECB hikes into it, and that was a mistake. And then, of course, 22, you didn't want to let it go. And the Fed didn't get ahead of it when commodity and other prices started going up. So maybe that's not really a roadmap. So what do we want from the Fed today?
Yeah, well, how about if I answer the corollary of what do we not want?
Yeah, sure.
I don't want to hear any more talk about rate hikes. We had some talk about that at the last meeting.
Agreed.
Now, okay, I know this is a very small probability of rate hikes this year, but the problem for me intellectually is I can't take it off the table, Mike. So when you were setting up that question, I was thinking, man, he's reading my mind. It would be, in my opinion, a policy mistake to raise rates in response to an oil price shock. But the problem is we can't rule it out because we do have some hawks on the committee. And also, you know, look at PPI today and look at other inflation indicators. We don't have inflation under control, and we've kind of got a hot economy. So, I mean, that's what's kind of keeping me up at night. Is there a possibility that we not only back out the rate cuts? Let me just put it to you this way. You know, at the beginning of 2022, late 2021, we were still talking about, we're not thinking about, whatever the expression was, rate hikes. And then we were.
That's true, although, Bryn, we came into this phase, you know, before the Iran situation flared up, with the Fed already kind of on hold. Both the jobs situation as well as inflation were not quite at their target, but they also weren't emergencies to respond to. So I wonder if the market's okay with the idea we're going to be data dependent, we're going to get a new chair, right? There's going to be a different orientation, and so maybe at least we can get some comfort for a few months that, if nothing else, hikes are not in the offing.
Oh, word?
I think having a new chair is a game changer. And so I think that we will get rate cuts. It's not if, it's when.
Oh, word? For real?
If you look at the inflation that we have, the inflation is not demand driven. And so I think when you think, what tools does the Fed have to actually reduce inflation?
Wow.
Does raising rates do anything for housing? Does raising rates do anything for home health care because of lack of immigration? Does raising rates do anything for food? No. And so I think the Fed's toolbox in terms of raising rates would have a counter effect to it. And if anything, I think they're going to focus on jobs, focus on the uncertainty. And that's where I do think later on the year, when Warsh comes in, we will get rate cuts. But I do think it's important to understand this inflation is not demand driven. And so we're not having all these loans being created and the Fed can raise rates and then all of a sudden lower that demand. And so I think they're really hands are tied. And so I agree with Jim. I don't think it makes any sense for them to talk about raising rates in this environment, because I think it would have the negative impact of whoever would vote for that.
I agree with both Bryn and Jim. I'll take it one step further. I actually think they should be cutting rates in this environment. I think sustained oil prices have a deflationary effect. I cited yesterday the period between 11 and 13. If we could show the chart of oil, if we have it, during that period, we had the average price of oil above $90 for that 3-year period. What helped in that environment? You said yesterday valuations were cheap. Sure. Totally correct. But also, we had QE in effect. Well, right. We had a very low and easy interest rate policy, and that acted to offset that effect on consumers from sustained rising oil prices. And I really think sooner rather than later, if you tell me we're going to average $90 a barrel and you're going to go to the gas pump and it's going to be $3.65, you're going to need another rate cut.
Well, I mean, I would argue too, though, you were coming out of the biggest deflationary credit shock in memory at that point, and you had underlying inflation that was way short of the target, not above the target. So, we can say it's analogous on some level. Certainly, that's a nominal price chart right there in terms of WTI crude. In real terms, it's way lower right now, and in theory, should be less of a drag on growth. But I just think it's going to be interesting to see how Powell and the committee frames it, how it all translates into the dot plot. I still think that they're coming from a place of thinking rates are above neutral, Right. And therefore, you're looking for the opportunity to get them down toward neutral. But, we'll see if that thinking has been revised.
SPY is down minus 1.21%. QQQ is down minus 1.16%. Crazy. Filled 182.5, $485, one contract. I have 4 left. Feels good. $20 minutes left. If I want to do anything on the market or MU, no, fuck this shit. SPX gap fill, almost there. Insane. SPX gap. It's about to fill. Fucking nuts. Have you ever seen something like this? Gap fill. SPX gap filled. SPX gap filled. Gap filled. SPX gap filled. SPX gap filled. Down below. Nuts. They fucking gap filled it. Yeah, it's old news, best hurricanes. It's old news, buddy. SPY is down minus 1.3%. It's fucking crazy. QQQ is down minus 1.28%. 1.3% gap. Or fucking 595 reached minus 1.3% now. Insane. SPY and QQQ both down 1.3% for the day. I'm gonna make a phone call. Well, minus 1.35%. I'm just not saying anything because there's no cycle right now. They're just going down and down and down and down and down. And I said they're going to reach 595 at some point, and they did today. Not even after hours, so. God did. Never gap filled on the video here. Market about to close in 15 minutes. Second and low deep for the day. Bearish control close into the video. Market is closing in 15 minutes here. Overall, my entire Nvidia put position is up 23% total return. And I left and rejoined, and I left and rejoined. Power imbalance time is here in 1 minute and 35 seconds, 3:50. MU earnings is here at 4:05 p.m. Fuck, they're making me wussy out on this Nvidia shit. Showing gap into close, gap close into close. Ten minutes left. I'm leaving my 182.5 March 27th. Nvidia. Fuck. Fuck, no I'm not. Damn, I'm going up. I'm scared. I'm actually scared now. What the fuck? I'm scared. Ah! Shit! Oh my god. Oh my god, I'm scared as fuck. Ah! Shit! Fuck, I'm scared. Alright, I'm leaving one right now for $500. Fuck. Greed. Greed. Oh my god. Filled. 182.5, $500 one contract. I still have so much fucking left on Nvidia. That's the crazy part. I still have 3.6K left. I'm fucking scared. Oh my god! I'm up 26% on every single. Oh, fucking green candle. Fuck you, Nvidia. I left one on that green candle. It's fine. Good day, good day, good day. Good day. Oh my god. Man, they're crushing my fucking out of the money MU shit. Let's see what the fuck happens into this shit. Should I just leave? MU earnings today, right? Yeah, no, fuck, I can't leave today. Fuck. I have one dog shit contract. They better drop fucking $20. I'm gonna get fucking mad. They better drop $40 on MU. Oh my god. Nvidia gap never filled. That's the crazy part. They never filled this bitch. They don't give a fuck. They just don't give a shit. They're gonna leave this gap. I love it. They're gonna leave this gap. Wow. Full bearish control FOMC. No bounce at all. Into fucking close. Jay Powell, second to last FOMC. That was it. God damn. Oh my god, something going crazy now. Something just spiked for fucking 1 second. What the fuck was that? Something just spiked like $120 on something on my shit for 1 second. The fuck? Was that Nvidia? No. That's crazy. SOXL pushing lower into close, and my SOXL put just got crushed at 355. Dude, this shit is so weird. I'm getting dry mouth. That's all I gotta say about that. Woo! Get Phil! One more contract, $505, Phil, right now. One contract, $775, Phil, right now. Oh my god. 35% up on these motherfucking batches. Holy shit. Holy shit, I just had a fucking adrenaline pump. I just had a motherfucking adrenaline pump. Ah. My fucking throat is gone. My throat is gone. Oh my god. Bears are here on Nvidia. Market close. Holy fuck. That shit was so fast. It didn't even register on the options. I don't even think it gap filled. It did? Oh my god. It might have gap filled. Goodbye, everybody. Yo. Oh, fuck. I just printed it every fucking single day on the video. Oh, let's go see MU earnings. No way, it already came out. Stop with the bullshit right now. No way, it already came out. I was gonna say, this shit comes out at 4:05. What the fuck was that candle? That's so weird. I don't know why it's coming at 1. I think that should be coming at 4:05, not 4:01. I don't think earnings came out yet, folks. I don't think that's fucking real, to be honest. Yeah, look at that. That's not fucking real. 4:05 real fucking earnings comes out. This shit is not real. Oh god damn, this feels so good. I have 2K left, 2.4K left on Nvidia. This feels so good. Maybe today's the actual fucking day this shit really goes down today. This is weird. Man, I have a put on MU like way down here. Way down here. I hope it doesn't get fucking cooked. You know what's crazy? My MU put went up from 3:55 into 4 p.m. MU earnings announced quarterly earnings of 180 some bullshit. It just came out. Time is 4:04. Please, for God's sakes, go down. This shit is so fucking sick. I mean, this is what Nvidia did. I'm not gonna lie. When Nvidia earnings came out, the shit was fucking bullish until like 6:02, fucking 6:20 p.m. So I am not surprised. What surprises me on Nvidia is never gap filling. This shit never gap filled, and we might open down below the gap now on Nvidia. I hope MU fucking dumps right now, man. Let's see, fuck. I think earnings came out, the news already out. My fucking MU put is down 51.96%. Like, what the fuck? Lost $582 and the value is $540. Like, get the fuck out of here. They better fucking revive this bitch by Friday. I'm gonna be fucking pissed. They better revive this bitch. I'm gonna be fucking pissed. That's what I'm saying. Trade to Learn said, you're pissing me off. Like, me too. It's pissing me the fuck off. Like, this shit is not normal. This shit is out of human fucking bounds of fucking human reality. What we're seeing is like the South Sea China Company of our times. We're seeing the fucking Great Railroad motherfucking, you know, the 1908s of our times. This is some bullshit. I refuse to believe it. Like, I honestly, genuinely refuse to believe that fucking MU could go to fucking 500. I don't believe that we're here. Like, what the fuck are we talking about? 470, bro. No, they beat earnings. Good, now fucking go lower. Thank God. It's about time. Like, this shit is fucking stupid. If it doesn't go lower, this is stupid as fuck. Like, thank God it's going lower. It's about time. Like, this is not normal. This shit is irrational. Out of human comprehension. Right? Irrational. I don't know what the fuck is going on. I hope they open at 450 tomorrow. 444 tomorrow. But yeah, this shit is irrational at best. Fucking irrational at best. Let's let the MU fucking Bears have a good day tomorrow. Some bullshit. Like, this is too much. They lit the thing up crazy. I'm about to go watch a movie, dude. This has to be a good night. I'm about to go fucking sleep like a bunny after I go to work, folks. You know, I left so early on the video because they were scaring me the fuck out, but it's fine. I'm gonna print fucking crazy nice. Gifford said, Jeff, you got out of your Nvidia put. I got out about $3,000 worth, but I have still in about $2,600 worth. I have in $2,800 values worth. I have two 187.5 from March 25th. They're both $730 each at close. And March 27th, Nvidia 182.5 for $510. I should not have sold that one, but that thing kind of rocketed up like a motherfucking king of cod. Like, I didn't really know if I got a good entry or not, so I left. But the thing closed at 10% up. Not bad from where I entered. As long as Nvidia opens 178 tomorrow, I'll be happy. Like, I feel like wanting way lower than 178 right now from what it's been doing this week is so fucking greedy, so by some miracle market does some stupid shit and opens down way lower, that would be cool too, but I mean, at this point, I don't want to fucking even think about it. I just want to go to the movies. I don't want to feel FOMO. I want to go to the movies and I want to chill. I hope I get some of my money back on MU too and some bullshit. But for me to do that, they need to go down to like 430. If they go down to 430, then I get some of my money back. But my shit is quite out of the money. If they come down here, open at 436, I'll be good with my shit. Way out of the money. At least I get $600 back, $500 back, and right now I'm up higher than where I was on Monday. So I mean, if I get some money back on that, I'll be happy as shit too. And when Nvidia goes right, I'll be happy as shit too. It's just I would like for this shit to go way lower, but my shit is so far. My shit, I don't know what the fuck. I don't know why I did this. Like, I should have left my 427 at close too, but I literally had one and I never left, and that one it was actually a lot of money. So 1K is not little money. It's actually a lot of fucking money. And I think 50% it's so. Damn. Alright guys, I'm gonna head out. My stomach's hurting really bad, so I gotta go take a shower and all that. But look at where QQQ is, 594. They really went to 595 by close. Crazy work. And I really was saying 595, 597 if it breaches 597 today. Oh, wow, crazy work. 1, 2, 3, 4, 5 days. Trapping all bulls and bears technically the last 4 or 5 days, but yeah, this is actually a crazy move. Alright, have a good day everybody. I will catch you guys later. We will keep up to date with MU going into after hours in the WhatsApp group. Bye-bye. My stomach hurts so bad. Bye-bye. God damn. Wait, it's breaking every single low on SPY. This shit is bad. Oh my god. Look at this. This is real bad. Oh my fuck. How is it just going like this? We actually might open bearish tomorrow. That's crazy. Let's see QQQ. QQQ did not break the level. Okay, there's a gap here, 592. So hopefully it gap fills tomorrow or finds some stability or something. But yeah, SPY actually looking crazy today. What the fuck happened? Is IWM down bad or something? God damn. What happened on IWM? Oh my god. They closed that hella down into close. That is crazy. Okay guys, I gotta go. Have a good day. Bye bye. Shit is basically what Nvidia and Palantir fucking did into earnings call. And people are gonna be talking on the Actually, I'm gonna send the earnings call live stream on our WhatsApp group so you could see what people say on the live stream. Bye bye. Bye bye. Oh boy, Cora, thank you. Bye bye. For people that are here. I'm about to start celebrating, bro. Fuck. Today was another hard day. I thought I started listening to music or some shit in the shower. Fuck. Yeah. 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 Woo! Yeah! Life is good. Woo! Woo! Ah, fuck! I just stepped on a fucking goddamn cat. Oh. Woo! Woo! Great FOMC. Yes. 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 All right, guys, I got